La Bosch. Morning,
Le
everybody.
Bosch. What is good?
I was just telling Will that my lower back is sore. I just came from the gym. And, yeah.
Now you know how I feel. My back is always sore. You know, trying to carry the weight of this awesomeness, it's tough going.
Okay. Cry me a river. Why don't you?
No, have you noticed
Anyway,
anything different? Well, you wouldn't
do I
have. Oh
notice
no, I
anything
swear.
different about you?
No, not about me. About my setup. No,
Do I notice
I
anything
know you
different
wouldn't.
about the setup?
No, I don't think
Yeah,
you would have.
like how would I? I would see that your Instagram handle is there. You still have the Hong Kong pictures behind you. Still the same
Yeah,
colored wall.
yeah.
Um,
I've just noticed because like usually I'm here, so like I can. It looks like eye level. Now I'm down looking at you like this.
so you're
I've packed,
slanted.
I've packed 90%, and like I've had to lower my stool. Like, my chair is usually up here, but I'm now down here. So I've packed 90%, and like, you're gonna hear like tapping now because I packed away my keyboard. I'm gonna be like scrolling on my like mouse cursor on my laptop because I packed away my mouse. I have
Dude,
packed everything away.
don't you have like a laptop bag or something that you can put that stuff in, like quick access?
Yeah, I do, but I
So you're gonna
so I
inconvene yourself for 3 days before you fly.
yeah, because
Okay, fair.
I'm packing two outfits now to go. So I'm packing like a flight outfit, like an outfit that I'm flying in the airport with, just some joggers, a fibers t-shirt, and a hoodie. And then when I get to the UK, in fact, literally that one. So when I get to the UK, I'm going to be putting on my smart boots, a pair of jeans, a shirt, and an overcoat because obviously it's going to be a bit colder and I'm going straight out with my family. So I want something a bit smarter. So I've had to pack like my brand new Chelsea boots I've just bought. I've packed my boots into my bag as well as my entire outfit and an overcoat. So I'm like, I have no room for my computer and all. So I've had to put it all into my suitcase.
What the hell are Chelsea boots?
I'll show you, dude.
Okay. It's
I
slip-ons.
was, yeah, exactly.
Okay. I get it. Okay, cool. Will, your camera is a little janky today, so I
Is
don't
it?
know. Yeah, I don't know if it is, and your voice as well. So your voice is a little bit robotic. So
Oh, okay. Let me see if I can sort something there.
yeah. So while you sort that, I'm gonna say hello to everybody that's in chat. First in this morning, we've got Daily Facts. Good morning to you. We've got Mo Sheet BC. Hello everyone. Good morning to you. Scribbles. Good morning, Scribbles. How are you this morning? We've got Abradolf Linkler. Good morning to you, my friend. We've got Henry. Good evening, Henry, all the way from Australia.
Why have you put Henry with a British accent?
Because it's Henry. Henry is
Henry,
class.
Henry and Charles. Henry.
Henry, Charles, and class. We've
Yeah.
got Manny Balan. Good morning to you, Manny. Well, good afternoon to you, sir. Good morning to us. We've got Ty Keith. Good morning, guys. Good morning. Something just went into my eye as I was talking.
I thought you were about to say you put yourself in the eye with glasses on.
How the hell do I do that? Anyway.
It's just it's a you thing, mate.
It's a me thing. Morning, Johnny SX. We've got Kahoot X Live. Good morning to you as well. I see that you say you've lost $500 on a Fiverr's account. And then on your big one, I lost $200. Oh, dude, that sucks. Now I don't have enough money to buy an account. Sorry, man. That sucks. Here is a name that I am not even going to attempt to... I'm going to say this is Alexi. Yeah.
Yeah, bro. I'll be honest. Like,
I'm just gonna
there's
say Alexin or
I,
Alex.
I'm guessing that's like Ukrainian or Russian or something. Like there's some Eastern European languages. It's a bit like when you're reading the Asian languages that you just look at them like,
Huh?
huh?
Yeah. Sorry. I'm just gonna call you Alex or Alexon or Alexi. I'm just gonna call you
I
Alex.
think it's like Anek. I think it's like Anek maybe.
I don't know what that second letter is. I'm gonna assume it's an L. Good morning to you. We've got Ernst in. Good morning, guys. Good morning to you. Daily Facts, Yo-Yo, Kahoot, hi still. Will there be, Daily Facts asking, will there be a max trade a day in the upcoming contest? Are you referring to the Discord contests? I actually don't know. I think the
I don't know.
rules are in the Discord. Let me go and have a little gander from the community news side. So the contest, only one position can be open at any given time. Daily loss, there's none. Maximum loss is 5%. Leverage is 1 to 10. No EAs, no news trading. No, EAs are not allowed, but news trading is allowed. So one position at a time may be open. So your question being, is there a max trade a day in upcoming contests? It doesn't seem as though there's max amount that you're allowed to have in a day, so you can have as many in the day as you want, but only one trade is allowed to be active at any given time. So if you're already in a trade, you can't open up another trade. Henry saying Will's camera is fine, that it must be on my side.
Oh yeah, okay.
Thanks, Henry,
I mean,
for
I've
confirming.
tried. It was a little bit grainy, so I've tried to make it a little bit better now, and I've also tried to brighten my ring light. So I mean, let me know if that's any better.
So I think it's me then.
Okay,
Because
that's right.
for anybody who doesn't know, we have the streaming platform and we can actually see underneath what it looks like, and when we're looking at the screen itself, we can see how it goes out to the YouTube. But because Will is connected via his side and I'm connected via my side, there's sometimes like delays between ourselves, like latency from my side, latency from his side. Seeing the information here that doesn't necessarily present itself on the live stream. So Johnny Essex saying, my favorite boots, Will.
Oh
Maybe I
yes,
should go
nice.
get myself some Chelsea's as well.
Dude, do you know the reason I bought them was I wanted something smart but casual because look, I love dressing nice, and I think a massive part of having that respect for yourself is having a nice outfit to wear. And I love going out and looking smart. I go out and I wear a pair of trainers with a pair of smart trousers, or I wear a pair of trainers with a pair of jeans, and like yes, I look smart with it, or I look like fashionable, and I'm like, I don't feel smart, but I don't want to go out in a suit, so I want to upscale a pair of jeans. And whenever I put a pair of I grew up in school and we used to call them shit flickers. When I put a pair of like Oxfords on, when I put like a nice pair of smart suit shoes on, but with a pair of jeans, I look like an idiot. I look like I can't dress myself properly. I'm like, this just doesn't look nice. So I wanted that happy medium, which is like that in between looking smart in a suit and looking super casual in trainers and jeans, and putting a pair of Chelsea boots on, because my dad had a pair of like boots, but they weren't Chelsea boots. They were like desert boots. So I looked like a cowboy. And I'm like, right, well, this is just the complete wrong look I'm going for. I was like, I want smart cash. Dude, I put a pair of my friend's black Chelsea boots on with a pair of jeans. It changed everything. So I couldn't find a pair of Chelsea boots for under like 150, 200 quid. However, went to Hong Kong, went to this one leather shoe store, and dude, I swear to God, I bartered them down from 150 quid to like 90 quid. But then I did also buy a pair of also £100 loafers. So I got like a deal for two.
Dude, whenever you say loafers, the first thing that I think of is this white loose fitting shirt with a white chino and then the loafers.
Yeah.
It's like I don't know, it's like a Richard Branson like Virgin Active wear. That's
Yeah.
what I envision when I see
Dude,
that.
I packed them away now, which is I don't think I may have a picture of them somewhere. I don't think I do, but I packed them in my suitcase. Otherwise, I'd go get them. They are like they're handmade, leather, super soft loafers, and they are fantastic. But yeah, mate,
Dude,
I
I
love Chelsea.
I I like a good chino. I really do. I
Yeah,
really
100.
do like a
So
good
do
chino.
I.
Yeah, and jeans. I also love jeans. But I wear short pants as well. Like when it's summer here, if you're wearing long pants, you're an idiot.
Okay, so you say that. These are my equivalent of shorts. I don't know if you can see them. They're like
Your equivalent of shorts are just regular long pants.
no, they're linen trousers. They're linen.
Yes, but they're not shorts. You know?
No, they're not.
Yeah,
I'm
they're
not a
just
shorts person.
regular pants. They're just trousers. You know?
I don't have the legs or the personality for shorts.
And you have the skin complexion of that back wall of yours.
Yeah, nah, dude, this back wall is like me after a week in Greece. I have the skin complexion of an A4 piece of paper. Dude, like my
Right.
arms are actually quite tanned. My arms are quite brown. I look like a squishy. Like, have you seen those sweet squishies? They're like pink and white.
Maybe there might be a South African variant of it, but I don't
I think they're
know.
called squishy or squashies. Yeah, squashies. They're
I'm
like
not sure.
a marshmallowy, like two-tone sweet. Like you imagine having like a Coca-Cola flavor. Like one's brown and the other one's completely white. That's me in the summer. Like my arms go like really dark brown. They're not now.
Oh,
But
squashies. Yeah. Okay.
yeah, but my legs lily white because like my dad goes like Caribbean dark. Like my dad goes really dark.
That's because he
Where
wears short pants and goes outside
he
and
does,
keeps.
no, he does. He wears shorts even in the winter. He's an absolute hooligan. But yeah, so he goes really dark. So I think I've inherited that sort of ability to go dark, but only on my arms. The rest of my body, lily white, like lily white.
Literally, just start wearing some shorts, mate, and you'll be fine. Just start wearing some shorts. Go into the sun. It builds up. You know, you with your trucker arms. You don't want that. You want a little bit more. Anyway, so I see that there's a few people asking for the trivia today. We're not doing trivia today, guys. John Essex saying, I love a cappuccino. I'm more of a latte
Yeah.
guy.
Oh, I don't know. A good cappuccino here.
So
John, I
for
feel like me and
today,
you are going to go more.
yeah, dude, we definitely need to go get a cappuccino. Whenever we, link
Dude,
up.
100%. Yeah.
So for today, we're not doing a trivia. Yesterday was a test. You know, we were testing the trivia, whether or not you guys enjoyed it or whether or not we can do it again in future. So the idea now is that now we're going to start building a proper trivia day with prizes. So if you are in the top 3, you'll get prizes. We still need to determine what kind of prizes it's going to be. Is it going to be hub credits? Is it going to be accounts? We're still going to spitball all of that information, and I just need to go and talk to my manager, and then we can have that approved. So yesterday was a once for now, while we work on getting everything just more official. Let's put it like that. So there's actually some stakes on the table for it. So what I want to do now is I just kind of want to tell everybody what we have in store for today. So myself and Will, we are going to be with you guys for the rest of the hour until 9 a.m. GMT. And then after that, we will have LJ, Pedro, and Rich for 2 hours or so. So it's going to be from 9 a.m. until 11 a.m. GMT. You guys, if anybody has any questions for Rich specifically regarding the performance coach stuff or any of the psychological stuff that you're struggling with, do stick around for that, because we'll have Rich come in for that segment for about an hour. We do have some really cool ideas with Rich's section coming in the near future. We're just gathering all of the stuff that we need for it, so that's going to be a lot of fun. So you'll see Rich a lot more often in stream itself. Then after that, at 11 GMT, you'll have myself. Well, you'll have Will and Griff, and then myself in a little bit later when Griff is not there. And then at 12:30, you have Victor and Samir that's going to come in for the New York session. So yeah, there we go. That is today's agenda. Yes. CMH Sohel is asking, Richard, where are you from? Why are you wearing such hot clothes? Aren't you feeling hot? I'm in South Africa, and we are experiencing the beginning of a cold front right now. So the weather is starting to dip a little bit. Went to the gym this morning, and I just wanted to make sure that my muscles and everything stays warm. So I'm just wearing my Fibers hoodie. So...
Dude, you surprise me, you know, like, you know, when you build up, you get to know someone, you build up a bit of like a personality portfolio, should we call it?
Oh, okay. So you're literally sitting there and doing a psychological test on me. Okay. All right.
Well, not just now. Like I have been since I met you.
Okay, yeah. But like you've profiled me there. So okay. So what does my profile say?
Every now and then you say something, and I'm like, huh. Wouldn't have taken you for that sort of not like. You're a very knowledgeable guy. Like I admire some of the stuff that comes out of your mouth. Like some of the stuff that is in your brain is just your general knowledge. Let's call it.
What is it doing there?
Yeah, I'm like, fair. Like, because so I grew up in a house where my brother and my dad are frighteningly intelligent. Like, frighteningly intelligent. My dad especially. My brother not so much. He's lacking a couple of nuts and bolts up his. Certainly when it comes to his life experience and general knowledge. But like my dad is unbearably smart. And it makes me feel like an idiot, like a true idiot. But then I go into the normal everyday life and I'm like, turns out I'm actually, somewhat above average. And then I speak to you and like you'll say some random things which are so on point that I've only ever had these conversations with my dad before. And I'm like, wow, Rich, wow, I rate that. And then like you just said something now regarding your muscles and all. I thought it's only something I've heard my brother talk about because he's a qualified personal trainer. And I'm like, I would not have expected you to know that sort of thing. I'm like, every day you seem to baffle me with the complexity of your knowledge. It's unbelievable.
I am going to take that as a compliment.
No, it's a straight up compliment. I'm not saying I thought that you're stupid. I'm not saying that by any stretch of the imagination. What I mean is like, we're traders, out of the most of our knowledge goes into finance, trading, economics, and then personal, just life experience. Yours goes a lot further beyond that. You go into like a lot more depth into your knowledge. It's quite awesome to see.
I'm gonna say thank you, mate. That's kind of cool. I do consider myself a jack of all trades, but a master of none, kind of like thing. I think I do have a broad knowledge base, but it's like titbits. It's a little bit here, it's a little bit there, a little bit over there. I thought keeping your muscles warm, kind of like thing, was just a common knowledge thing.
Dude, I thought so too. Again, growing up in a household full of super intelligent people, and my brother also being a very passionate personal trainer, I thought that this was just common knowledge. I was like, yeah, you got to keep the muscles warm, keep the body warm. Don't let yourself get cold. Don't go stiff, etc. Because of the implication it does to your body as well. Especially with my partner being Asian, some of her Asian cultures and traditions and all come through to our relationship. So that's broadened my knowledge on that as well. So some things you take for granted and you think that it's just common knowledge, but it's not, because I speak to so many people. I'm like, right, you got to make sure that you keep him warm, stretch after, make sure that you're going to keep your body nice and warm, even though you're hot, even though you're like, oh my God, I'm sweating, I got to strip off naked under the air conditioning. Don't do that. You've got to keep your body supple, keep your muscles warm, even after exercise. And most people look at me like I'm an idiot for saying that, or like I'm a lunatic. It's like, well, you're trying to put me into some like overheated sweat state. And I'm like,
The sweat state.
no, genuinely. But the fact that you've just said that now is, I don't hear many people saying that unless they're, really, really serious about muscle growth, or, you hear a lot of bodybuilders talking about it. And that's why I said, you don't really hear someone unless they're really passionate about an industry or about something that they're aiming for. You don't really hear someone just generally talking about that. That's why I said most of our knowledge and most of what we talk about is finance, economics, fundamental, technical, news, political, and stuff like that. Usually, people have their areas of speciality.
And then you have us two nitwits with our general knowledge that
Just
sometimes is
general
not.
knowledge garbage.
Yeah. So yeah, thanks for that, mate. I appreciate that.
You're welcome.
I want to talk about gold quickly because we did see news. So China adds state gold reserves for 17 consecutive months. So when LJ comes in, he can go more in depth into the significance of what it means if a country is basically hoarding gold, buying up gold. So this was red folder news that came out like a few minutes ago. Like here it says 10:03 a.m. I'm not sure if that is exactly if it's GMT, but I assume it is because if you go back to the reaction that we had here, that is 10 o'clock basically. So from this point when we were talking about, everything is starting to move, this move that we have here, along with the follow-up stuff, is because of that. It's the gold is getting bought up, or at least added to the reserves for China. China is one of the bigger holders of gold. And I can tell you, if they are adding to their reserves, it means that the other big players are doing the exact same as well. So you're seeing everything. NASDAQ had a massive climb. All of the Euro USD also started picking up. Pound USD started picking up. UJ started pushing lower. So the idea is that this is a net negative for the dollar, pretty much. So if you go to the DXY, you'll see that the DXY has also started pushing a little bit lower. The buying up of gold is now seen more of a... oh, dude, I've literally just forgotten the word as I started saying that sentence.
Try the sentence again. Let me see if I can pick up the word.
It's risk management, basically. It's the dollar itself is more risky now. So we're looking at assets that can kind of like circumvent that risk. This is that where the shit's about to go down kind of like idea. Stuff has been going negative for a while now, but like the idea is that it's a risk on, risk off moment right now. Gold, I want to put my money into gold because that reserve that's there is probably going to there's going to be some impact from the dollar like very soon. So like I said, I think Henry is saying simple. China prepares itself for a wage war with Taiwan and filling up safeguards against sanctions. Yes, so that's kind of like what I was going to. It was for the idea of it's a safeguard. That was the word that I was looking for. So they're trying to safeguard themselves against crap going down very soon. So they know something's about to happen, whether they're going to be the propagators of it or whether they are going to be part and parcel of it. Something's happening in a different region and they're going to be impacted by it, but they know something's about to happen and they're making sure that they are safeguarded against it. There we go. That's the word I was looking for. Thanks, Henry. It was safeguard. Shane Joyce is saying China's largely buying up gold because they are looking to back the new BRICS currency with gold. I don't know how the BRICS currency thing is going to go. Can't be GMT. It's only 9:30 BST at the moment. Yeah, I'm not sure, Johnny SX. You're talking about can't be GMT. Remember, GMT is it doesn't change. GMT is GMT. So British Standard Time changed because of DST, which is Daylight Savings Time changes, but GMT just stays the same. Doesn't change.
Daylight savings, the worst idea to come. Well, I mean, when it came out during World War One, I suppose it was a good idea. But we're not in war anymore, so I
No.
mean, that was for the benefit of World War One. Now we're not in World War One, so therefore, can we change it back to just standard GMT? Do we have to have daylight savings? I mean,
Yeah,
having
dude,
said that,
I don't know.
having said that though, I do like the idea of like this, like having a longer day. So maybe can we like permanently stay at GMT plus one? Can we just accept now that the UK is going to be GMT plus one?
Yeah, just keep it there. Just
Yeah.
just keep it there.
Let's just
Um,
stay in summertime.
just stay there. So basically, what we're saying is I brought up the 200 EMA, the 100 EMA, and the 50 EMA on the. Let's go to gold. I'll show. That's where I want it to be. So basically, from yesterday being a public holiday and whatnot, we had this very slowed movements yesterday. Nothing crazy. Nothing like what we were seeing over here. But overall, very, very slowed movements. This was Thursday, by the way, because Friday was also a public holiday. So we've created this morning basically a small little upward trend, even though this top section here is not crazy like slanted upwards, like a strong slant. We have created this little bit of a channel as of right now. If I pull it back, you'll see that there's a fair few areas where it tried to touch, but it's not the it hasn't had the most tests, let's put it like that. But it is a slight upward trending channel at the moment. So basically what we've had this morning now is that news that came out after a little bit of a sideways section for the Tokyo session. Yesterday's lows has not been taken at all. And then there's the potential for yesterday's highs to be taken with the sweep now. And I think if we do break above higher, there is a potential that we can maybe potentially come up to this area over here, which is Thursday's, let's call it Thursday's highs here. Let's do it like that. So Thursday's highs at 4773 to 4800. If we carry on pushing higher, there's a potential that we can definitely come here. And it's only because of the fact that we are still trading above the 200 EMA on the hourly. We did wick down below, no follow through whatsoever to try and push it lower. News came out, generally positive for gold. People, want to buy up more gold. It's going into reserves. There's something that's going to happen very soon. The idea is to try and potentially push up gold's price right now. That's what I'm thinking. When LJ comes in, he can give us a really nice
more definitive answer on what that means.
Yeah, more definitive, like from the macro standpoint.
Yeah.
From a technical standpoint, we've been bullish overall for quite a while. We had this very, very strong bearish reaction. When was this? This was the 18th of March, all the way down to here, which was the 23rd. And then from there on, instead of having another follow through lower low, we started breaking these previous high points, trying to come lower again, struggling, and then we had this slow ascent. So right now, slow ascent, still slightly bullish on the hourly, even though we had this very big sell-off attempt, which made sense, but that sell-off attempt ended up in consolidation on the hourly. But it's like I said, it's like a slow ascent. We're not getting like equal highs and equal lows. We're getting slightly higher highs, slightly lower highs, slightly higher lows, slightly higher highs again. It's that little bit of a slow upward ascent. So we'll see what happens here. I want to see this area up here tested. So I want to see 4,800 to, let's say, 4,900. I want to see tested. Yeah, this whole section here, I would like to see tested.
Yeah, I rate that.
Yeah, that's what I would like to see. Gold start pushing up. I'm just going to remove that one.
Well, you've already got that push up. You've got the push up on everything. NAS, US 30, SP.
All of them.
Gold,
Everything's
Euro. Pound. The only thing that's not pushing up is the Dixie. The dollar's dropped
The dollar is dropping.
quite significantly as well.
Yeah.
But yeah.
Strong-ish attempt. I mean, on the Dixie as well, you had this. Spoke about that yesterday, myself and LJ, and yourself. You also here. With yesterday, we started making a new low early on. We just wicked a secondary low. Now today, we've actually made a lower high in relation to that previous double top. So to me, this is a good signifier of a potential continuation pushing lower. Areas to test, we do have a base area over here that's nice and low. We also have this area of consolidation that had a double reaction yesterday. So we can see whether or not we're going to continue trying pushing through this point. I mean, we do have the low of yesterday that is in play right now on the DXY. So I'm seeing a continuation of selling pressure on the dollar as of right now. Even if this is just an impulsive move, that impulsive move might still need a little bit of correction and then continuation. So impulsive move right now, potential attempt at a pullback, and then a continuation lower. What do you think, mate?
Yeah, if we can get that, I think that'd be really nice. But we'll have to see what goes on because we have got high impact news today, tomorrow, Thursday, and Friday, and we've got Trump basically this whole deadline. Will he? Won't he? Is it going to be peace? Is it going to be this? Is it going to be that? So
Yeah.
honestly, I'd love to agree with you and say, yeah, that looks awesome. That looks really nice, but I don't know anymore.
So for today, we don't really have scheduled high impact news. We do have medium impact, like core good deliverable goods on the US and the IVPMI for CAD. Tomorrow, we've
Yeah,
got the NZD official bank rate and the rate statement, but that should not impact the majority of the majors. It's only going to impact the NZD USD. And then we do have the FOMC meetings minutes late tomorrow on Wednesday, so late Wednesday. Thursday itself, core PCE and the final GDP quarter on quarter. And unemployment claims here is an orange folder.
Oh, that's what I'm a bit surprised about. I think it's
There's been
due
a
to
bit of
the
a
fact
change.
that yeah, I think it's due to the fact that everything going on at the moment,
Yeah.
no one really cares about unemployment claims.
Nobody cares about the unemployment rate. But like LJ was also saying, and when we were talking about this last week, the high impact news is not on anybody's radar at the moment. They're like, yeah, we know that it's going
Exactly,
to be
yeah.
impacted. Yes, we know, but like the big thing, the market mover at the moment
It's the
is
Trump
this.
thing.
Is the tangerine terrorists tweeting. So yeah.
Yeah,
Anyway,
exactly.
and then on Friday, we do have unemployment change and unemployment rate for the Canadian dollar, and then CPI core month on month and year on year for the US. So, in general, a quiet week news wise. Unless you take into consideration Trump tweeting from his bedroom how angry he is that the strait is not open yet. I'm going to bomb everybody. We'll see whether or not that is an actual taco trade.
Yeah, what's worrying me the most is the fact that I'm flying on Friday, and I'm like, oh, Trump, please just wait until next Friday. Like, let me get home to the UK first before you go deciding to throw missiles over Dubai.
Hold on a second. You've already booked your tickets, correct?
Yes, yeah.
Okay, what is? Do you have a layover or is it straight?
I'm going to Dubai first.
Oh, mate. Oh.
I know. I know. I was going to go straight, but for me, straight would cost me the same as a first class ticket a month ago. And the fact
dude,
that it's... I know. Yeah, I know. I know.
Yeah,
It was either Dubai or Qatar, and I was like, I'm not going to Qatar. Qatar's just been struck. I was like, I'm not going to Qatar.
dude, the UAE was struck like multiple times, like their airport as
Yeah,
well.
but Dubai, yeah, fair, but
Dude,
yeah,
take your
true.
plane, tell them you want to go and be like have your little detour to Egypt,
Rendezvous.
and then from Egypt go up. So
Yeah.
yeah,
Do you reckon I can commandeer the plane? Do you reckon I can go on and be like,
please don't do that. Don't do that. Don't do that at all. Like, I'm not even joking. Don't do that.
yeah, but in all fairness,
Dude, do you know what's the
it would be
fastest
positive
way if you're going to
terrorism.
get shot
Surely
down?
that
The fastest way for you to get shot down is you commandeering that plane.
it would be positive terrorism. Surely, like I'm commandeering the plane, or I'm taking over charge of this plane.
Don't do that. Don't
Fly
just don't.
straight to Gatwick.
Oh, no. Just no. Don't do that. Uh,
uh, by the way,
uh,
guys, before anyone considers that as I'm actually going to take over and terrorize this plane, no,
it
I'm
is.
joking. I
It
have
is a
no
joke.
intention. Yeah, just straight away on the phone to Hong
And if
Kong.
anybody is offended, please send a mail to will.d at the Fivers.
Will.d at the fivers / I do not care.co.uk.
.co.uk. Yeah. Louis is in as well. Good morning, Louis, mate. Where's
Good
my
morning.
sense of adventure? Right now, my sense of adventure is I'm going to the gym and back again. Enough adventure for me right now. Like there's enough adventure going on in the world, mate, for
Bro,
everybody
literally.
to
Dude,
share.
I just want to get home safe. Honestly, that's the only
Yeah.
thing I want. As long as I can get home safe, I don't want to go anywhere for a couple of weeks.
Dude, I was actually considering like coming and visiting either not while you were in Hong Kong, but like when you were back in Wales
Okay,
again.
right.
And
I'm gonna stop you there. You just disappeared.
did I?
Yeah, you. I think it just said your internet cut out, but you're back. You're back now, but I
I'm
don't
back
know what
now.
just happened. Yeah. So what were
Okay.
you saying? You were considering what?
I was considering coming to visit either you or LJ this year, and then all of the crap started happening, and I was like, you know what? I can wait.
They'll
I
be
can
fine.
I can wait a little while longer. I don't need to come and visit you guys at all. Um, um,
Yeah.
Daily Fact said that he's in DAX at the moment. I'm assuming it's a buy. Where did you buy from?
Yeah, I was gonna
Daily
say
Facts?
I'm assuming a buy on DAX surely.
Yeah, I'm just gonna assume because right now this
Mhm.
movement that we're having here that is looking like a bit of a kidney marked up looks good for a continuation to try and push higher. However, we do have just this little area over here where we've had multiple reactions on the DAX. So if this is the establishment, let's put it like there we go. If this was the establishment on Wednesday for this high, we've had a double touch, of which one of them resulted in an attempt to try and push lower. A miss. I mean, I can go and reform this so that it looks a little bit better. Actually, maybe if we did that, that will make a lot more sense. We've had another touch here, which resulted in a nice sell-off with a bit of a follow-up after a bit of a retracement over here. Yes, this is last week Thursday. Sorry, last week Thursday. We had this attempt to try and push up a flag pattern, and then at rollover this morning, we've wicked into that area, tried to push lower, did not even come to the low points of this flag bottom portion, and since then tried to push up. So new high, higher low, and then a push up on news. On news, important. But before the news, so if the news was here on this candle, we already attempted to try and push price up a little bit. So for me, DAX looks good for a continuation of buys if, and only if, it can push through this area, not only sweep the high, which it's already done, but sweep the high from Wednesday and attempt to pull back and then continue. That's the only reason I would continue on buying DAX right now, because it is at an area of interest and you want to see its reaction at the area of interest and then make a decision based on that reaction. As of right now, bit of a retracement. Well, not a super big retracement, but an attempt at a bit of a retracement. We'll see whether or not it's going to push a little bit lower again. Maybe look for an area to sweep some liquidity and then, or pick up more buys and then continue pushing up, or maybe try a second attempt on that. If you're in a swing of sorts, yeah, I would. It looks good enough for a swing on the 4-hourly. Granted, we can continue pushing through this area. What do you think, Will?
I was just looking. Let me get your screen up again. For a break above and a pullback continuation, is that what you're saying on the DAX?
On DAX, for a continuation pushing higher, we have this this top section here.
Yeah, I'd like to see a break and close above those highs, because it seems to be rejecting pretty hard at those highs. If we can get a break and close above, pull back. Thing is, though, I'd like to see a deeper pullback, maybe now. Like maybe a deeper pullback now. Yeah, exactly. Down to around there somewhere. Then a continuation and a break and close above those sort of equal highs.
It's rejecting at this point in time, but I mean, if you just take the fib and you take from the absolute bottom of the London session to the top of London session, you need for the golden zone, you kind of like need this area over here, which just wicks on this this area that I've just marked up now. So it looks good for a potential attempt to come back down and then pick up to try and push higher again. Could always just go a little bit and then try and push up. But this area where we are right now is a very high area of interest for me. We are rejecting.
Yeah. Yeah.
Shane is saying, Australia is a direct flight and further away from the war for you, Richard. That is true. That is true.
I tell you what, yeah, you go to Australia this year and then come see me next year.
Yeah, I'll go visit LJ first, and then everybody else, like Henry, maybe like Henry and you and Shane as well. Shane, you're in Australia, but where in Australia are you? I know that Henry is like around the corner from.
I was gonna say Henry's right next to LJ.
Yeah, I could have sworn Shane said that he's in Melbourne.
Okay,
not sure. Brisbane? Are you also in Brisbane? Okay, so the three of you are like neighbors, mate. Like so,
they're all actually in the same apartment building.
Yeah, that's why LJ's always got like apartment issues, is they're partying too hard.
Yeah, yeah.
Daily Fax is saying yes, long, but a bit bad. A bad fill, but 230. 230. Oh, you entered at around 230. So 230 is there-ish. I mean, if your stop losses were just below the swings of this morning, so somewhere around here, I mean, this, you would probably either the lows of London, and then that would be a 1 to 1.5, and a 1 to 1 would have been over there, which is pretty good, mate. Like, pretty good.
It's not always necessarily the fill. If you get in, you get in. You know, if you don't get in at the best fill, you don't get in the best fill. You know, if you manage to get in at a nice-ish zone, you're in. If it's going in your direction, that's fine. That's all that matters.
Yeah, I mean, if you got in there a little bit slipped, fair enough. I would be very interested to see where your stop loss is 109. Oh, okay, so a little bit So over there. All right, so you took this swing point over here, this as your low. I like that. I actually do like that. I just want to see on the 1 minute. Yeah, it looks good, mate. It really does look good. I mean, if you're on the 1 minute, but it's the same. It's the same theory. There we go. It's the same theory. If you have a swing point, so an attempt at a push lower, which is what this was over here. You fail to create a new low on the day, so you fail to create or even sweep the lows that was created previously. You got a volumetric push up. You had an attempt at a, breaking off this new trend that has been established, and then you have a confirmation of the continuation. I love this. This is pretty good. This is pretty good. Your take profit. I had to place the trades of the challenge and competition account separate. Yes, 1 minute chart entry. Dude, it looks good. I like this. I do.
It's actually quite a nice area as well.
Yeah.
Okay, I see what you mean. It could have been a better fill, but
I mean,
I still rate that. I still think that's a pretty good
trade.
entry. Yeah.
I mean, I like it. I do like it. You have
I
more
would-
confluences on the fact that the
Yeah.
50 EMA, your price is above it. You had this attempt at pushing price lower, a try and break up, a reattempt, and then a nice volumetric. This looks good. I like this. This is the kind of stuff that I look for when I'm entering on mine. No TP set. All right, cool.
Yeah, well, the thing is as well, no, you say no TP set, daily facts as well. Like, I've known the DAX to run, especially when I was trading with Richard Wells a couple of years ago. He used to tell me that the DAX, when it gets going and it builds that momentum, it's gone, it goes. That was a couple of years ago, mine. So look, price could have, like, the way that the DAX moves could have changed, but looking at the 4 hour now on your chart, Rich, it's got a huge amount to head up.
It's got a lot of space. I mean, if you just take the swing points
exactly, yeah,
that are available to you to try and come back to, and we're not even talking about the price action in between.
Yeah,
We're just looking at the swing points. There's a lot.
The best thing, in my opinion, the way I would trade this would be 0 TP and then just try and trail my stop at like significant swing lows.
Yeah. Everybody's
I
got
rate
their own way of approaching it, and I like your trade on the 1 minute. I do. However, I've been that kind of person that said if you're going to enter on the 1 minute but you hold your trades, like you look for TPs on the daily, that's kind of weird in my book. Like it's strange. I don't know what is your exact like rundown, how you work your way down to your entry point. But if you're going to do an entry on the 1 minute, to me that usually signifies the potential for more intraday or scalping rather than swing trading. So I don't know. It's just an opinion, dude. I'm not saying that is the way that it goes, but generally people looking for 1 minute entries are not holding their trade till next week. Generally.
Yeah, I see what you mean. I see that a lot with most people, but I do know a few people who do actually end up trading or down to the 1 minute time frame, even though they swing trade. So it's an interesting one.
Daily Fact says I work with a 9 EMA 15-minute close before or below for exit. All right, cool. So you're looking for so 1 minute, 15 minute. That's pretty good. Sahil is saying, I believe DAX will grab liquidity around 23,000 and then move up for breakout. So 23,000, if I just scroll down a little bit, is roughly around this area over here. So if we just look for something that makes sense in this area. So as of right now, you have what Will calls an imbalance. So this area over here is the imbalance. You had a singular reaction off of that zone, there's another reaction, and then you have this little bit of sideways action there. We can probably expand it ever so slightly just to encompass a little bit more. But in general, this is kind of like what you're looking for. So you want to see a dip into this area here before a continuation up higher. I mean, fair. Personally, not being a DAX trader myself, but I would look for this area rather. Because you've already had the showing that you are reacting off of this area. So maybe just dip into that area and then pick up, which it could be as close to 2300 as well. But that's me nitpicking. That's just me nitpicking. Right? So don't feel like I'm dissing what you're saying. I do agree there is a potential for a pullback, but that, like I said, that relies on how we're reacting in this area and if there's follow through.
Yeah, I mean, look, there's no right and wrong answer at the end of the day.
Yeah, that's true. Mark is saying, is this what they call a high volatility market, like the current market right now? Yes.
Hell yeah.
So volume and volatility kind of help each other. Volume is market participants. It's more trades, more market participation. Volatility refers to how volatile, how extended and descended, is descended a word? The market might be. So if you look at something like this movement that we have here, click again. If you look at this does not look very volatile. It's singular direction. It's moving at a leisurely pace. Each candle that's in this whole zone is roughly the same size. They're bar a few changes, whatnot, but in general, they kind of stay very similar. And then all of a sudden, you get like a move like that, and then you have a lot of wicks, and then a big move. That's volatile. It's not conforming to a typical upward channel. You get sudden spikes up, you get big pull downs lower, you get continuations pushing up again, big candles, small candles, big candles, small candles. That's volatility. That is the idea of prices moving suddenly in a direction, and it can change its direction at any point in time. That's volatility. Volume is just market participation. It's who is playing in that area. Victor goes for 1 minute swing trades. Yes, but that's because Victor is a god. That's why.
I was going to say, Victor's just different breed.
And yeah, and like I'm saying, it's not often. It's not often that people go for swing trades on the 1 minute. Victor being a very special person when it comes to trading. He does that.
Yeah.
Scott T1 is saying, are we still hours from Trump doing something that will shock the world as much as 9/11? US versus the world with ethics is ahead of us. I don't know if it's going to be a shocker. I think he's laid out what he wants to do quite plainly. The question is whether or not he's going to actually follow through with it. That's what I'm kind of like. That's what I'm berating at this point in time. Scribble saying past phase 1, but then tried to rush through phase 2. Took setups I wouldn't normally. Lesson learned. I like that. I like that, mate. Why did you want to rush through phase 2 though? I have an inkling as to why, but tell us why.
Yeah, I could come up with a few reasons.
Yeah, the taco trade.
I really hope so. I really, really hope so. Not just for a selfish reason, not for the reason of I want to get home. And if he does follow through with what he said he's going to do, I can't see myself flying at all this weekend. However, it's also the case that we can talk about this on stream over, technical analysis over the charts. But there's real lives at stake here. There's real people that are going to be affected by this, and what he's talking about and what he's doing and what the whole Iranian situation is. It's quite serious, and it's quite worrying. And what it could also do as a byproduct with the rest of the world could also be quite worrying. So I pray that he is. I pray that it is Taco Trump. I pray that we are. It's just going to be, my balls are bigger than your balls, but no one actually wants to whip them out. I hope it's that case, and we come to some form of understanding and reasoning behind it. That's my honest take. Oh, he's gone again. Is he going to come back? Oh, he's gone. He's not coming back. No, he's back.
No, I'm back.
Okay, he's back. It's all good.
Sorry, my you know what was the first sign? Was the whole chat. The whole chat went and then all the way down. I was like, okay, everything's refreshing. Let me just wait for. Is it going to refresh? And then it refreshed. I agree with you, mate. The thing is, I think Trump has been very, very straightforward, pretty much, for a lack of better word. He's been very straightforward. It's the fact that I don't want things to devolve to the point where we have another, let's call it World War II event. Because it's unnecessary. It's just so unnecessary. But I'm hoping, I'm like hopefully optimistic. Like I'm hoping that Trump doesn't go ahead and decides, listen, if me not making all of these threats are hitting where I want them to hit, I'm just going to go through with them. I think it's a dumb move. I just think it's dumb.
I completely agree, man. I think everyone can see how dumb of a move it is.
War is stupid. Just straight up. War is stupid. I just find it dumb. Just find it dumb. It is Taco Tuesday after all.
True.
I'm hopeful, mate. I'm hopeful.
It is stupid, but purely on a illogical point of view, I can see why they're doing it. On a because I try and put myself in a situation of understanding at all sides, and I think, look, going back to World War One, I can understand what happened on both sides. Going back to World War Two, I can understand what happened on both sides. It doesn't mean I agree with them, but I can understand through just having a passion for history and knowledge. I can understand why both parties did what both parties did. This time around, this situation with Trump, even with the Ukraine-Russia war, I can kind of understand why and what happened. Trump, I can understand what he's doing, but it's the worst logic of them all. It's just completely ridiculous, and in almost every way could have been avoided.
Yeah.
So
to me it's an ego thing. War to me is always an ego thing. It's like, oh, I don't like what you have to say, or I don't like what you do. I'm going to bully you, and then I'm going to get my friends to come in with me, and then we're going to bully you too. Now, obviously, that is a super oversimplified way of looking at it, but in general, it is war comes about from people not being able to see eye to eye, and it is also generally to do with one has a particular viewpoint of how things are supposed to be done and wants to force others to be in line with that. Obviously, there are outliers with certain wars where one war's outcome led to a second war, directly be impacted, like World War I into World War II and stuff like that. But I'm not a war historian person. I have read up about the wars and kind of like my understanding of that kind of like stuff. But to me, war, there's no winners in war. everybody's losing something, whether it is people, civilians, agricultural land, buildings, infrastructure, money, whatever. Everybody loses in some way, shape, or form. Anyway, Roychek, please don't spam. Just straight up, just don't spam.
Sell.
Scribbles saying him trying to force his way through phase 2. Honestly, I was thinking about the money I could earn and was feeling a bit impatient. But this contradicted the whole thing because without correct trading, it has just turned into gambling. You see, so this is the psychological side of it. You see the goalpost is right there. You see it, and you kind of lose sight of what it is that brought you to that distance away from the goalpost. Like, let's say it was a 1 kilometer run that you had to do, and you're 800 meters away. You forget all of the stuff that you had gotten, or that you had done, that gotten you to this 800 meter point, and then you see the goalpost and you want to start rushing it instead of kind of like kicking into second gear and just redoing what you did there, but just with a little bit more vigor. I know it's a very stupid analogy, but like, you get the idea. Don't ever lose sight of what it is that brought you to that point, and the goalpost can always be moved, because this goalpost that you're going for right now, that's only the second phase. Then you go into funded, and then you're going to have a new goalpost. So don't burn yourself out trying to reach a goalpost that's going to be moved again and again and again, and focus more on what got you to that point and what it is that you can do to make sure that you stay in this game long enough.
Yeah.
So psychologically, it's going to harm you a lot more if you do something that was outside of your practice, outside of your strategy, your whole plan, with the intention of rushing something. Because, the money. The money will come if you follow your plan. And only if you follow your plan.
Yeah, 100%, man. You just got to take your time with it. You know, take your time, and when it eventually plays out in your favor, like when you get what you're wanting to see, for example, when you get your A+ setup, whether it's a week or a month or 6 months down the road from getting your new account credentials, so be it, because you'll stay in the market longer than if you just, piddle it all away and gamble it.
Yeah. I think that's still why most people struggle with trading. It's not the fact that they don't have a strategy. Yes, it plays a role. Yes, it's the fact that we want to rush things. It's the fact that we think that this is a simple game. We don't want to put in the time and the effort that it's going to take for us to really learn everything. But the thing that trading teaches you is discipline. And you're not going to get anywhere with trading if you don't have discipline. And discipline comes in many different forms. In this case, it's whether or not you're disciplined following your strategy. It's whether or not you're disciplined doing your backtesting. It's whether or not you're disciplined doing your journaling. It's discipline. And yes, you're talking about impatience, but a disciplined mind is not impatient. A disciplined mind will look at what is going through and then realize I'm being impatient right now, or I'm being greedy. Those are all the aspects that really screw up your trading. That's the thing. I want discipline now. That impatience, a disciplined mind does not care about how long it takes. A disciplined mind is not about the end goal, it's about the journey. We've got a very lovely trader in the background who's now in the foreground. Hey, Pedro, what is up, mate?
Pedro.
Good morning. I was just enjoying listening to you guys.
Don't want to participate, just want to listen.
We just take over Pedro's session while he just sits and listens.
Yeah, I mean, why not?
Yeah. How are you guys doing? All good?
Yeah, good man, you?
Yeah, I'm good, man.
Awesome
I'm
stuff.
good. Yeah, I've been a little bit away. Full bank holidays in the UK, so I've just actually took Friday off yesterday as well. It was kind of more of a slow day, and coming back into the markets today. So we'll see. We'll see what will happen. If it's going to be a chaotic day or not.
Yeah.
What time is what time is the deadline for Trump? Is it? I think it's 8 p.m. Eastern time, or what
8,
time is?
8 p.m. Eastern Standard Time.
Yeah. Okay.
Yeah. We'll see. We'll see whether or not that is going to come to fruition. You know, Taco Tuesday and all.
Yeah. Look, quite lit. Yeah. Dude, oh man, I've never. Usually, I'm nervous for what Trump's going to say for the sake of trading, should we say, for the sake of the unpredictability. Now I'm nervous about what he's saying for the sake of his predictability. Now I'm like, I'm hoping that he's not going to do what he said he's going to do. And usually with Trump, when it comes prior to all this kicking off, like Trump would follow through with what he says he's going to do. Like Trump has always been one that, that's the one thing I think people loved about Trump, was the fact that if he said he was going to do it, he'll do it. And then he started not so much doing that. Now it's a case of, I think he's going to have to do it just for the sake of his own for his own reputation. And that's what's worrying me the most now. I think it's a case of, look, I'm not trading this week anyway. I've got too much stresses going on. I've packed all my kit. I'm just going to stream and chill with you guys. I'm not going to trade my live account. Like I said, I'm flying back to the UK, or hopefully flying back to the UK. High impact news, Trump, Iran, US war, all this, and I'm like, it's just not worth trading it. So I'm no longer interested in the trading side of Trump. I'm more interested in now the whole legitimate war side of Trump now. So it's interesting. It is interesting.
Yeah.
Yeah.
I would very much like for him to just chill out. Like, relax,
Yeah.
bro. Just relax. We get it. You're hurt. Your toys are out of the cot. We understand.
Yeah, literally,
now-
yeah.
Now is not the time to do a little bit of a tantrum, and we call it in Afrikaans a vloermuur. Vloer being floor and muur being punch. So you're literally like on your stomach on the floor, like hitting your hands on the floor, going. That is a vloermuur. So that is a baby having a tantrum. So
Yeah,
he must
exactly.
just relax. Go and pull on some vape, some giggle grass or something, and just relax a bit. Listen to some Bob Marley. Just do something like that right now. Just to
listen to some
relax
Bob
a bit.
Marley while having some giggle grass.
Yeah.
Anyway,
The
on
green
that
tea of
note,
knowledge.
guys, I'm gonna shoot off. I'll see you guys in about 2 hours' time. So thank you very much for joining. Make sure that you smash that like button. Make sure you subscribe to the channel. Make sure that you look after this fantastic gentleman Pedro below. So guys, thank you very much. Peace.
Cheers, Will.
Cheers, Will,
man. Paul Sinclair saying Trump has literally hasn't done anything he said he was going to do. I mean, say that to the tariffs, mate. Say that to the tariffs. He said he was going to introduce tariffs. He did it. Didn't do so legally. He still did it. So, yeah. Pedro, mate, I see your charts up. You're looking at the DXY. What are we seeing? What are we seeing?
Yeah, I was trying to basically since last week trying to understand if you are going to have a double top kind of situation on the dollar and potentially going to move to the downside again, or if by any chance these structures is still going to hold longs and try to break the highs and go above the $100 mark in here. So last week when I last looked at the charts, it was on Thursday. Yes, so price had created this move. I've been waiting for price to get a little bit closer to this circle that I have in here. We did manage to on Friday to go a little bit higher than this high in here, and maybe that was enough. Yep, maybe got really close to structure.
Close, though.
Yeah, maybe if you consider a little bit of this one in here, which is the one that broke that one, maybe there's already a touch in there. So basically what I'm looking in here is, I know that most people look at favorable gaps, and as soon as price maybe takes a high and into space, let's call this space, as soon as it takes maybe the liquidity from this structure, you guys is already trigger or signal to maybe start looking for shorts, depending maybe then on your Entry execution, for me personally, I do like to see actually price then going back and actually retesting the next structure, which is basically this one. And while price is just there in that space, vague, I'm kind of always a little bit second guessing if price who eventually wants to go touch actually the structure. And that's kind of my background is more into actually touch the level, not just touch space. So yes, price got really close there. But the ones that then I was looking for to trade, it was actually dollar CAD. Dollar CAD actually went into the level. This left shoulder, actually good reaction. Basically, what I draw here, it happened a little bit at this level. But again, I was not here Friday evening and even Monday. I was definitely not at the charts because of the bank holiday. I quickly switched off, and because I knew also there were many banks closed. In UK, in German, and so on. But apparently it worked. It reacted from the level. So I'll be just waiting to see if on dollar CAD there's going to be any kind of retracement, maybe back into something here to try to trade it. We did manage to take these lows. That's nice. So to see if there's a little bit of a follow through on these potential shorts on dollar CAD. Now I need to look into higher time frame just to realize that maybe there is more space for price eventually to go maybe get a little bit closer to this structure here. But where price is reacting is not bad. That was where I was looking for that initial reaction, I think last Tuesday, after price again for many days in a row was just bullish. So it's not bad because we are also retesting this previous level of structure. That's basically where price is. So there's maybe a chance that maybe price could try to go close to this level before maybe trying to go higher, or at least maybe try to retest this demand zone around here. So for example, now that we open a little bit of this space, I would like to see at least maybe price getting somehow close to this level, which means that there's maybe a short opportunity to trade. Again, I would like to see price going higher so I can get a better risk reward out of this situation. Maybe there's an opportunity to look for a trade, something like this. I don't know, at least 3-1 or something like that, or even depending if price goes a little bit higher. Also, maybe there's a chance in there. So at least with the chance, of course, price then could even follow through even more. But at least this target, I think it could be reasonable. So that's maybe make sure going to set up an alert on this one. Yep. The other one was our franc Swiss, which is also kind of a bit in the mix. Is this going to be kind of a double top situation, or price eventually is going to follow through? As you can see, price has been respecting this trend line as well. So, and you do have this structure now being created in here. So maybe somewhere around here, maybe price can still respect this level one more time and try to go a little bit higher. Now we are actually at an interesting level, getting close to this level of resistance with this fresh zone here as well. So I think there's maybe even a little bit more of a selling pressure on our franc Swiss, even if it goes a little bit above this top. So that I would like this one. So at this point, the scenarios I'm looking at are potentially for dollar shorts, but being aware that maybe the dollar eventually can go actually just break that 100 mark and continue to go higher. In this case, these dollar pairs will just fall and continue to go higher as well, which can also be possible. Okay, because this is actually kind of a nice reversal setup. Dollar franc Swiss has been quite bearish.
Yeah, for the longest time.
yeah. So if you just want actually to take this traction, go and try to go a little bit higher, so that could happen as well. So I'm open a little bit for both scenarios, but for now I'm more into a little bit more shorts. But I want to see price going a little bit higher on that one, and then it takes us, for example, into euro, dollars, and pounds, which has been also holding these lows since last week or 2 weeks ago. Euro actually again just stayed within the fair value gap, didn't really kind of came all the way back to test this next level, and now it's trying to go higher again. I think it still needs a proper break of a previous high, maybe just confirm a little bit that maybe euro wants to go a little bit higher again. This 1.14 has been the level that has been holding price for a while, as you know, as you can see in here. So maybe there's a chance that price can go higher, but also can eventually take the low. So again, a little bit indecision. It's all about that 100 mark as well on the dollar index in here. So until we get further news and further clarity on what's going on in the Middle East, maybe price can still just trading within this range, as we mentioned it last week. Pound, same thing. These walls are holding. Price is still around here, but still kind of missing a proper break to the upside. Does anyone wants to short this level? If you want, this basically starts to be kind of a squeeze triangle or something like that, or even kind of wedge, like where eventually price will need to explode one side or the other. But it's kind of getting squeezed at this point. And then our beloved dollar yen, which got again really close to this highest dollar yen. I'm going to be looking for shorts regardless. Just want really to see price manage to fake out this high. He didn't really manage to do that so far this morning. And again, this is basically the more of the zone that I'll be looking for a short. Maybe a quick squeeze above the 160s, and then maybe price could follow through. Last week, he did manage to come up with down, so that was one of the trades. Price come back into this level. We look at yen index. Yen index is back at these demand zones. I'm going to be curious to see actually how these yen index are going to react from here. If there's any chance of buying pressure, or eventually it's going to fall again. We have a strong level of support so far, so maybe it starts to become a bit tricky because all this can be liquidity as well. Price can actually just squeeze quite aggressively before maybe trying to go higher, but I'm still going to expect some kind of reaction within this demand zone, which actually managed to break this top in here. And price is starting to decelerate a little bit as well as it's approaching this level. But we have a trend line, so we can actually just follow to see how price eventually is going to react, and then maybe just wait for the break of the previous structure, and then we can try to trade this. If this happens, that's good for dollar yen to move down, and then eventually can be good also for the other yen pairs.
For the other yen pairs, yeah.
To go and especially euro yen, that's the one that I've been looking as well. I think this trade can be quite interesting if eventually plays out, which is basically price to finally take the liquidity from above this level can be maybe quite aggressive, and then eventually try to see if there's any kind of short opportunities. So that again would need the yen index to move to the upside, and in this particular case, you would need actually the euro to also maybe move a little bit lower, which if you do look at the euro index, so we had the correction from the bottom all the way there. And I'm curious to see how price may start reacting as we are getting closer to this structure around here. We already had a small reaction there, but at this point it's still bullish because we haven't really managed to break anything. Bullish, I mean, it's bearish, but it's in a bullish retracement. So I'm curious to see how price may react from here. So if this one actually by any chance holds and starts moving lower, that can help euro yen as well eventually to move lower. Or if this one starts holding and price starts to going a little bit higher, then maybe that's going to be the next level I'll be looking for the shorts. It's going to be somewhere from within this level, or then I'll prefer it a little bit higher. Now from here, at least maybe take this high altogether for any kind of big euro sells. And yeah, that's FX. That's FX for me at this point. What I'm going to be waiting for or looking at this point. I don't know, guys, if you have any questions, for sure. Richard, you may have any questions. And what is your take, by the way, on the dollar? What you're expecting on the dollar?
Dollar, I think, as of right now, is showing a little bit of weakness. You can see it on the DXY. Let me just bring my screen up. If you go over to the 4-hourly chart on the DXY, we did have this double top over here. After, let's say, these very nice highs here, so you can almost think as if this was a nice little sweep and then a very strong reaction. We did not break these lows down here at all with this movement. However, this double top did signify to me the potential of a continuation lower. The news that happened this morning was that the China is hoarding, putting more gold into their reserves, and they've been doing so for the last 17 months. So in this case, it does seem as though there is a propensity to try and push price a little bit lower on the dollar. So a little bit of dollar weakness. So everything that you've said, the same idea. I'm looking at, for argument's sake, Japanese yen. Okay, Japanese yen being a little bit different. We already had this 160 reaction over here, which tried to push price a little bit lower, which it did also not sweep these lows at all, but it got close. So it came into this little boxed area over here and then started to push up ever so slightly. But since then, we've kind of like been stuck here. Slight slight ascending channel, but nothing that is telling me right now that we are gonna run up like crazy. So dollar yen to me at the moment is kind of like in limbo. I'm waiting to see whether or not we could come back to try and test this area up over here at the 160 mark yet again. If not, then we need to start pushing lower and start breaking these most recent lows as of what, the 1st of April. So if we can come back down here and then try and push a little bit lower, maybe sweeping these lows, then I can potentially see us try and come back again and then start selling off. If not that, we need to come into this area over here, the 161s, 162s, and then from there on, start pushing lower. I think if we're going to reach this point over here, there's going to be intervention. It's just going to be like, you know what, we need to do something. Let's react now. And I think that is what this area up here is going to be for UJ. EU, GU, all of them as of right now, we had on GU, we had a double, triple bottom almost. Attempts to try and push price lower failed, but we do still have this descending channel. So I'm still a little bit bias bearish on GU, even though dollar weakness should signify bullish movement on GU. So I want to see whether or not we can break through this current channel that we have now, push above, maybe retest, and then try and pick up, start coming into these areas to see if there's any sort of reaction from these points. We also do have on GU this area up over here that had multiple reactions as well. And if you pull it through, you can see a little bit of reaction there. So I would love to see price come back to here on GU. So that would be, let's say 34,600. So 1.34600. That's what I would like to see on GU. But that's based on the fact that dollar bit of weakness as of right now. But I don't know if we're going to see this at all. Begs to be seen. So I'm just going to be patient with GU and EU as of right now. EU is the same idea. EU a little bit more bullish, I would say, because we've struggled to print lower lows as we have with GU. GU is actually, you know, if that low over there was swept over here and then we only started doing the double touches. Here we had the low, higher low, higher low, an equal low in relation to this one, and then again another higher low. So EU to me has a little bit more of a propensity to try and push higher than GU at the moment. GU little bit uncertain, but EU to me has a very clear, distinct area that needs to be broken, and clear higher highs and higher lows. Even though that was a equal low. So making clearly an attempt to try and push higher, and then just a stop section here that needs to be broken. So I have a distinct area that I want broken, and it's this area over here pretty much. So if we can just say this, something like that. That is more of what I actually I think it's this area here. So clear area that I need broken, which is 116.27 to 116.67. So I want to see these areas tested. So I want to see this tested, and then a reaction off of it, either push lower or break above and continue higher. Yeah, that's what I'm saying.
Yeah, I could see that that happening on the pound. I like also the level that you end up mentioning. If price actually starts going to the upside, I think there is a somehow possibility that price can go to that 134,600. I actually would like to then see price faking out those tops, like this structure here, maybe getting a bit more into this next one, which maybe was left behind. At least having some reaction from here, I think it would be interesting. So taking out the liquidity from above these levels in here. So that would be interesting. And yes, I think if you do manage to start breaking above this level, then you can go for it. And it looks like there's a little bit of buying pressure as well, because price is not really managing to go below this level. And usually you don't really see this type of behavior as a bearish continuation, but a bit more of a reversal of buyers actually jumping into the market. What you'll be looking at more as a reversal, it would be, I don't know, maybe something like this, and then price just sells off. So we'll see what will happen in here on the pound. You can maybe look a little bit, and I agree with you with the dollar yen as well. And if it goes a little bit higher, I think intervention can be possible. And if you start breaking below this level, I think this is kind of a second opportunity to try to maybe rejoin the move to downside with a bit more confirmation, because now price actually breaks proper structure, and I think there's then all this to be filled. So there's going to be plenty of opportunities on dollar yen when eventually price starts to move. However, likes to trade trend continuation setups. That's going to be maybe a bit more safer for those. For me, I like to trade a little bit more closer to the extreme. So I'll be trying to find the signs that there's opportunities to trade from here, even if it is with a few attempts, maybe some profits initially, until eventually leaving some position open for a longer trade. Yeah, we will see. Someone asked me where I'm from, so I had here the shiny yellow metal, that's gold. Where I'm from Portugal. I live in the UK, but I'm Portuguese. So nice to meet you, my friend. Then I like that Marcaria mentioned that I'm from the fibers. Yes, definitely.
I mean, if that wasn't obvious.
That was funny. How do you guys approach EU? You kind of mentioned it a little bit. I don't know in what time frame is he looking for, because I'll be looking at these potential levels of price, maybe finding a little bit of resistance. I think price can continue to go a little bit higher. Maybe can even go somewhere around here. Price already fake out yesterday's low, then kind of move to the upside. Yeah, I could see price going a little bit more to the upside, and then we'll see what kind of structure we're going to have. If by any chance price visit this level, maybe there's another long opportunity to try to rally price into that level. But again, this is more of literally smaller time frame structure ranges. I like more extremes. Right, this is a bit more in the middle, but if you actually zoom in, you can maybe try to find your extremes within this structure itself. So yeah, I'll be looking at between this level and this level. I think these two are the next key zones on the euro that you can maybe trade from. I'll be a little bit more cautious in terms of selling it. I'll be maybe a bit more confident in terms of buying it towards this direction. In terms of selling it in here, I'm not sure. But maybe as a target to here to there, maybe that could be reasonable.
I like that. I do.
Yeah. And just as a parenthesis, right? Because sometimes when you do have two ranges that maybe we can consider, let's pretend that you have a support resistance and a the resistance level, and price is somewhere around here, whatever it may be. You may think that let's have at resistance, let's buy at support. That would make sense, but maybe based on the overall circumstances, maybe correlation with other assets, and maybe the higher time frame perspective, maybe to actually be a good idea to try to buy from here, but not maybe to sell from here. Maybe just use this level target, but not as a selling structure to sell from. So you need to kind of adjust a little bit sometimes into the levels that you're looking for. It's not just because we have two levels that you have to trade from them, or that they are kind of high probability levels to trade from. As a target, yeah, I think that's at least something to consider. Is there any question?
Just this.
Okay.
Yeah, just this, and then a certain Ronaldo. Sweet. Richard, can you look at the 1 hour gold trend line breakout for an upside to 4,800? I can definitely have that one. Richard Benny McCarthy, it's my broer, waar is die KFC? The shiny yellow metal, mate. If you're from South Africa, that's pretty good, mate. Or if you just used I don't know, Google Translate, that's pretty good as well.
Either way, it's good.
Gold, yes. So I'll bring mine up and then we'll just have a little gander at that. On the hourly, this is the hourly chart at the moment. This is that short little upward channel that I've marked. It's basically just a continuation of this there we go. It's just a continuation of this move effectively. However, we did have a strong reaction on Thursday last week when we didn't quite reach this area that I wanted. This was just a previous, on the hourly you can see a little bit of sideways action and then a sell-off that then eventually led to a even bigger sell-off. So to me, this area was a nice area to have a reaction off of, and we just missed it. So we just wicked it. So for me, first and foremost, if we continue with this exact same channel, which this is just a little bit of a deeper pullback, then a continuation, we do have this area over here that is of interest right now. So the bottom portion of the channel and then currently this upper area of resistance. So if we do break through, potentially, and it not be a sweep, so we don't get this reaction. So I'm talking about a break and continuation like this. So follow through. Bullish candle, bullish candle, bullish candle. Or a bullish candle, bearish candle, bullish candle continuation over here. So I want to see a breakthrough, a potential retest. It doesn't have to touch this zone, and then an attempt to try and push up to get to this. This is my first area of interest. It's my first port of call if we do break this area. If we do not break this area at all, and price rejects as it's rejecting right now and continues to reject lower, obviously this channel is then the next port of call to see whether or not the channel itself gets respected. It can wick through the channel and still be considered respecting it because you have the lows of Tokyo that still holds water, and then from there on you can potentially try and push up again. However, gold to me is right now a little too flat for me to tell you with certainty that we're definitely going to break up above higher. I would love to see it break up higher. Potentially come and test this 4,800 area, or maybe even higher, 4,900 would be great as well. But it's a waiting game for me as of right now. If we do break lower, let's say we do break this channel and we start pushing lower, we do not respect this zone that we have here. We do have a lot of area over here that we can potentially go and pick up some liquidity to maybe try and push up higher. But as it stands right now, I'm a little bit more bullish, even though right now we have this kind of ascending flag with a flat top that needs to be broken through. That's what I'm seeing on gold as of right now. So we'll see. We'll see whether or not today's Trump tweets can force a movement. I mean, if you go down to the 5-minute, it still looks very flat. There's no clear direction. So I'm going to treat it as such. No clear direction, and I would like for the direction to be initiated and then continued off. That's what I'm saying.
Yeah. Again, last week we kind of talked about that in terms of until there's this uncertainty, I think it should be wise for us not to expect much momentum into the moves. More of a ranging market, like exactly it's happening right now. So even when some people actually mention, is it good to pay attention a little bit to the fundamentals or to the geopolitical situation, or just focus on technicals? Yes, you can focus on your technicals, but if you actually are aware of where we are in the world and what's going on, you should be then expecting, at least managing your expectations on what kind of moves you should be looking at. For example, if you're actually looking for big targets constantly, maybe this couple of weeks that just passed by, maybe you didn't really manage to get your full take profits, or maybe you had a lot of break-even trades because price was just not creating the momentum, or it was having false breakouts and then coming back into the range, and more or less exactly the same. So today, kind of, we are in D-Day, right? We are in this situation where finally we may see some whatever advance in the situation in the Middle East, either good or bad. But maybe the market have been waiting for this. That's mostly what you're talking about in here, is actually what to expect from the market.
Yeah.
So maybe you're going to see some resolution. As you can see, like if you look at gold, if you look at the chart in here, like there has been a few weeks where we actually moved a lot, or a few days where we moved a lot, and now we are stuck. Okay.
Yeah.
So even if you're about to look at the average range of this move of the past few days, maybe with this drop, completely different. So there you go. We are stuck in here. Personally, this was those two were the two levels I've been looking for. I've been a bit more into this 4,800, just close to this support resistance, basically where the top reacted from, and then it was this demand zone in here. Price hold the respect at that level, and it hold this level as well. So again, it's a little bit similar to what you mentioned, at least on this time frame. Let's see which direction price will break first. Then, of course, you can separate this also with this level. So you have now another half in here. There you go. Price actually can just take this liquidity and then does this. This could be a move, okay? Instead of just having the follow through straight away, price maybe could just take liquidity above these tops, maybe come back into this demand zone and then continue. Or now price actually is already dropping into this demand zone. If you are bullish, this could be maybe a trade again. This is more mid-range. I don't really trade these levels, but those are two scenarios that could happen. But at this point, you are anticipating that price can break these levels because price hasn't broken these levels yet. And so we are kind of guessing or hoping for price to do so. Because if you are actually just following what price is doing, price is now respecting this level of resistance. So you kind of needed to at least maybe to wait for some kind of break in there to look for it. But you do have this demand zone. So maybe even in the war time frame, 5 minutes time frame, maybe there's a trade just from here to here. And you can be happy not trading this range. It depends on what type of time frame you're looking for, what kind of ranges you're looking for, how wide usually your stop losses are, and what type of risk reward also you are aiming and looking for around this level. Because gold more or less is the same. Actually, while we were talking, I actually brought the block in here just to see where was the most liquidity within these levels, and I even used all the way this top to the bottom where we are, or just this top in here. And you can see that mostly it's around these levels, like 5,100 to 5,200. And I think that eventually can be a reality if you actually start breaking above. Okay, if you start taking this top, I don't think we think there's much more in here. Now we are looking for 5,000. As a normal stick, as a kind of a next level. However, if you do start managing to break below this level by any chance, I think, especially with this kind of demand zone here, this zone kind of this structure, I think you can have a continuation a little bit more to the downside, maybe closer to this level in here, maybe 4,300 and something. Because I see this level, maybe in here there's something, but aside from that, there's a lot of compression, which means that as price was moving up, it was already correcting the demand zones and the buy orders, which means that then price can just not easily, but follow through and maybe go back to this, close to this low, or even then take this low and then maybe below this low you can try to go higher again. So yeah, I'll be aware of here. I'll be expecting prices to follow through a little bit. Again, price can retrace before go, and then fill this level. Yeah, that's more or less what I'm looking.
Yes, so kind of similar.
Yeah, it is indeed kind of similar. Yeah, do you want to address this this comment in here from?
Yeah, I mean, like, how do we address this? Like,
No, I would say, yeah. What
what's
I would
the
say
question?
yeah, I think he made a comment even before that. Well, guys, is that normal that a lot of people on web bring the comment? Is witnessing that you are not legit anymore, right? That's not true. Okay, it's true that we may had in this last month we had that situation with the server. Okay, on a Monday or Sunday, and it took a lot of time and manpower to fix every single of those accounts individually. Okay, because it was a manual process. So big applause for our agents and the people that actually works on the support team to be able to do so. So that required a little bit of a patience, and then it's true that maybe there was a little bit of a delay in terms of the payouts, but that actually has been also addressed. And I think the information I have is that we have been actually improving our payout systems or process to try to accelerate that situation. For example, last week I think like 2 days in a row we paid maybe 1.5 million and another almost $1 million to thousands of traders that are waiting for the payouts. This happens. Like this is a business. It's not kind of everything is not going to just run smoothly. Things happen. We are humans. This is a company made by humans, and the reputation is that we are 10 years into the industry and you're not going anywhere. And we are actually expanding like the futures program, which was a new edition, with new programs that we are also implementing even into the CFDs prop firm side. So, but everything there is a small issues every single time that you're trying to do something new as well, unfortunately. But that's the reality of new programs, right? There is a version 1, version 2, version 3, until eventually everything runs smoothly. So if you are in doubt of buying a program with us, don't be afraid. You can buy it. Our reputation talks also for itself. We've won many awards from Platform Match and many others. So believe us, we are humans. Richard is a human being. I'm a human being as well. We are not here to.
I'm AI, mate. I am AI.
And you have a great support team. Okay, you can join us also on Discord. Actually, this month is fully dedicated for our community on Discord. So I would actually recommend you every single one of you to join us. There's I think rewards or prizes every day or every week at least. There's a competition running. I think now it kind of you're not allowed to register anymore, but many people registered.
There's weekly competitions. So once this one is reached its culmination,
competition. Yeah,
the next one that's happened. Yeah.
Yeah, but the specific one for the Discord is a full month. Okay, it's going to be until the end of April. We're going to have a new king of the community of trader into our Discord community, which is great, and many prizes every week, even for the Portuguese community, for the Indian community, and you are expanding also Japanese and so on. So we're going even locally. Okay, that's what we want to do. We are really focused on the community side of to support our traders basically. So
yeah.
Don't be afraid. Don't be afraid, okay? And always have a second, like, anytime you hear someone saying something, also try to understand also the perspective or kind of where they come from, because maybe sometimes they are also not telling the full story. Like we had a few issues as well, people complaining, even for the Portuguese community or kind of on our pages. We know the behind the scenes. We know exactly what happened. But people that maybe comment something and not sharing everything. And we are not sharing our side because it's not even respectful. And neither we talk with that person or we talk with them personally, DM, and then they decide to do whatever they want to do. And that's what it is. But we have rules, of course. There are rules into this industry, but we look at each case individually as well. We actually try to understand exactly what's going on and the reasons why something is actually a complete break of rule or not.
Yeah. So, I see my has said something. I think it's in Portuguese.
Yeah. I don't know if you translated this or if actually Portuguese. Yeah, it's your decision, my friend. Yeah, it's okay. If you don't feel fully trustworthy that you can trade with us, it's your choice. There are options, and good luck. And glad that you are here, actually, in the live stream and watching this. It's great.
Yeah. I mean, every company in the world has ups and downs. Every company. So if a trader or if somebody is unwilling to continue with us because they feel like we are on a downswing, I cannot force you at all. And all I can say is that I think the Fivers has really stood the test of time. Like 10 years in the industry, and we're still growing. We're still becoming larger and larger. And the thing is, I know this, myself and Pedro and everybody knows the CEO on a personal level. So we know what it is that the Fivers is trying to instill into the world of the prop sphere. So into prop trading. So we know the intentions. But like I said, I can't force you. So if you don't want to, I'm not going to tell you you have to. That's the nice thing. You have choice. You're the master of your own decisions. But the question that you asked to me, just it's a loaded question, because you're like, is it normal? The question is it normal that a lot of people on the internet are saying that the Fivers is no longer legit? If I say yes, I'm saying yes, it's normal. If I say no, I'm saying no, it's not normal. So
just rephrase the question or answer your own way. Just use, in this particular case, Richard, just use the cards and kind of just answer what you want. Forget about the question, just answer what you want.
Yeah. So what I do know is that the Fivers is trying their utmost in the background. And I don't know if you've noticed, but there is like geopolitical unrest going on right now in the world, and areas that had servers, like, do you blame Amazon for the fact that the Fiverr stuff was down? No, you don't. You just come to the Fivers and you shit on the Fiverr, saying the Fivers is crap. But it's this escalation that has caused certain stuff to go down. So if you look at it at a case-by-case basis, you realize that you're putting your anger towards something that had no control over the situation whatsoever. And anyway, yeah, I'm done with that.
Yeah, it's true. All right. Nasdaq, do you want to look at US indices? What is your take? What can you do in regards to Nasdaq and the S&P?
We'll bring up the Nasdaq. So on the hourly chart, if we just look at where we are right now, we've come into this cluster of consolidation, which is where we're kind of currently stuck as well. And then we had this attempt, let's rather say, at a breakout of a channel. So if I use this tool, you can see it a little bit more clearly. So a little bit of a channel, so let me just do that. So we had an attempt at a breakout this morning, which was also just kind of a little bit of sideways action. Not a very strong channel, in my opinion, as of right now. But anyway, so we tried to break out a little bit and consolidate it ever so slightly. Maybe you can't see it that well, so I'll just zoom in a little bit. And then we had the news, which kind of pushed it up ever so slightly. So I'm kind of on the fence at the moment with the Nasdaq. The last few days that we've had, if I just remove this, the last few days that we've had looked good in the sense that we had this area over here that had a reaction, and when we came back to it, we kind of just consolidated close to it. And since then, it has not quite picked a side as yet. However, I do like the fact that we had this nice deep, nice deep push lower, which then completely reversed when we reached all the way down here to 22, almost 22,800 or so. And since then, when we had another opportunity to try and push lower, we did not actually break and make deeper lows. And since then, we've made equal highs, slightly higher lows, slightly higher highs, slightly higher lows. So to me at the moment right now, Nasdaq is kind of stuck in a bit of an area. We have this slight bottom channel and then a bit of a curve on the top. So to me, there is a potential for Nasdaq to want to try and sell off. However, because of where we are right now, yesterday's highs, if I just do this, yesterday's highs is probably going to be tested, but yesterday's lows, we're quite far away from it. And then when we had an opportunity to try and push down towards yesterday's lows, we literally just swept the New York sessions lows. So there is a potential for us to try and push up higher. sweep the highs, and then we'll see from there. There is still quite a bit of price action above that we can come and test. I do like the area where we are right now for a test, but I want to see how it tests in this area. So for me right now, NASDAQ, in an area of interest, I want to see the reaction. If it's bullish, it will break through. It'll continue pushing higher. If you look at the EMAs, if I put up the 100 and the 200, we've had crosses of the 200 and the 50 crossing the 200 and then the 100 crossing that as well. You'll see that generally NASDAQ does kind of like running around and respecting the EMAs quite a bit, like not when it's consolidating, but when it's ranging. So when it starts ranging, it does respect it nicely. But when it's consolidating, it's like any other pair, it just kind of like hops on it. But just based on that, we're starting to see a little bit more upward push. So I'm looking at NASDAQ a little bit more of a bullish sentiment, but I need the highs to be taken and not reacted off bearishly. I need it to carry on pushing bullishly. And then I think we can potentially come up to 24,400, 24,450, and then from there on continue trying to push higher. Maybe take these highs at 24,550. So there's a high point there that we can potentially come and test. So that's what I'm looking for. I'm looking a little bit more bearishly, a little bit more bullishly on NASDAQ, and I want to see yesterday's highs broken. Oh, that's the wrong one that I removed now. I want to see yesterday's highs broken, and then continue from there. That's where I am right now.
Yeah, it's a tricky one. Basically, the question to be: are the bottoms in place? Like, are the lows are going to be the bottom, and price will try to regain new all-time highs, even if it takes, I don't know, weeks or months, or it's going to be a new low being created, and eventually price going to drop even further down. I think that's that would be the question. Of course, again, the situation in the middle is going to be definitely a problem. The longer we stay in this situation, I think eventually we're going to have new lows. But looking at the technicals, where am I again? I'm here.
Where am I? You're at work, mate. You're at work.
Looking at the technicals. Now, I'm not the biggest fan yet of the lows that were created in the sense of where are they reacting on the left side. I wouldn't mind to see maybe price going a little bit deeper. I can just bring the Fibonacci just to see how far away we came. Okay, kind of not even the 32, 38. But maybe I would like to see this S&P getting a little bit closer. Now looking at the moving average as well. So this is 200 moving average on the daily time frame. So we're about to get to that zone again. So that's going to be an interesting zone to see if price actually is going to hold it down or is going to try to push a little bit higher. Now what we had on the way down was a lot of compression. Price was literally battling it. Even though we were making new lows, price was managing to retrace and push down again. So there was still buyers, a lot of buyers, even though price
deep retracements.
Yeah, it's really deep retracements. So is this going to be another deep retracement, or is going to be finally a completely turnaround? Now this level was good where price reacted. So price created this structure, price broke, and then kind of they left this one behind. Maybe on the lower time frame, that's why I had it marked in there. Yeah, on the lower time frame, you can see it. Somewhere around here. On the higher time frame, we previously did this. Maybe if you go even lower, no, there was definitely not a very gap in between these two zones. Okay, that's where price went through. There's maybe in the future something in here to look for, which is really this one. Maybe in the future this level can be interesting again. Maybe just taking this low, and the reaction from here can be a potential long opportunity. Looking for shorts, personally, I'll be waiting a little bit higher, but we do have that moving average somewhere around here on the daily time frame, which can be a zone where price could find new selling pressure. It's just a decision. in the sense that the same way that we're moving down and there were buyers, as we're moving up, is there still going to be sellers fighting and holding any kind of level around here to try to push price to the downside? Because what did we have? We had a great number of NFP. Like so, last Friday, even the unemployment rate went down. I think to 4.3%. The NFP number was twice better than expected, and which means that at least in that sense, there is no concerns, at least for now. That pushed straight away the possibility of an interest rate cut for the Fed, basically all the way until the end of the year or even just next year. Because if the labor market is doing okay, literally the main risk is inflation, which is going to have this week the report, and we are expecting already maybe 1% uptick on the CPI. And that's just the beginning, because I don't think that's going to be still reflected everything that's going on in this data. So, what kind of real dynamic are we going to have or not in here? Are we going to have a new sequence? The second point is that we are going to start this month. We're going to start having the earnings season again in the US. So that's going to be interesting to see exactly how even the companies, and mostly even towards the future, are they kind of these big sales or the sales of the most important companies in the world are actually looking at this uncertainty, and how are they positioning themselves? Because that's going to be an interesting one, and not just even in terms of AIs and tech, but everything. Actually, even consumers it's going to be interesting. Not consumers, supermarkets and stuff like that. That's going to be interesting as well. It's going to be an interesting month. It's going to be an interesting month.
I think it's going to be an interesting month, especially considering all of the extra stuff that has been added onto the table. Let's put it like that. Not just on a macro level and fundamental level, but like on a geopolitical level. We live in interesting times at the moment.
Yes, we do. So yeah, personally, I cannot really call already this is the bottom on the indices. I would like to see them going a little bit lower before I even say that, or at least to create a more specific double bottom to say that. This was my ideal scenario on the Nasdaq, which never played out. Prices stayed around this level, which was again in alignment with this left shoulder, so that was not bad. But at least I was looking for price to get the touching here. I think we were on the live stream together on this side. Maybe
we were.
Yeah. We'll see.
Yeah, as of right now, a little bit of sideways, a little bit of indecision. I can see Nasdaq come off more. I can see it. It's all going to depend on that orange guy.
Yeah.
And his tweets today. I think that's why I said, like, most of the pairs, even though we had reactions this morning from news, I would expect us to see whether or not we can have a bit of a retracement, then a continuation, or a retracement and a complete reversal from this morning's news. Because none of the pairs, like EU swept yesterday's highs, rejected. GU, same thing. Yesterday's highs plus a little bit more started rejecting as well. Don't know if this is actually a reversal or if it's just going to be a retracement. We'll give it some time and see. All right. In the background, we do have the one and the only Sir Richard Wells. Mate, are you ready to pop up? Or are you still figuring out some stuff? There we go.
Yeah, perfect.
Hey,
we can hear you.
How we doing?
Hear you just okay.
How are you, mate?
Yeah, I'm good, thanks. I'm good. A little bit
good.
of trading this morning, and now. Oh, hang on 1 second. We good?
Yeah, no, we're good, mate. We're good.
Okay.
There's a slight delay on EV Muck's side, so if you are a bit delayed, we're all a little bit delayed. Just we'll try and not talk over each other.
And then when we add on top of that brain lag delay as well, we're into a whole new category, right?
Today is effectively Monday, even though yesterday was Monday. Today is a new Monday because it was a long weekend. So everybody's brains are like,
I can relate to that.
Yeah, I got to admit, coming into today, I felt like, today's a Monday. And then I was statistically basing today on being a Monday from a performance point of view, because sort of different days perform differently when it comes to data sets. So I looked at today and I was like, I need to approach it this way. And then actually realized, well, although it's a Tuesday, is it technically a Monday? Because a lot of traders might have not traded yesterday and then they come in with the same attitude. And yeah, I was like, no, you're going to trade your plan, keep it simple and rules based. But how about you guys? How are you finding these markets overall? So we've just finished up quarter one. We've now come out of March. Did you find March was a typically decent performing month, or did we find that March was a bit of a challenge?
March was a good month for me, personally. So my March trading was very good. I ended up just over 5% up on the majority of my accounts. So good month overall.
Yeah, I felt March okay as well. Nothing. Again, I haven't been traded that much this year, but in March I did manage to find a few good opportunities. I trade mostly reversals, and there was some reversals that I managed to identify and to trade from. Some others I missed for whatever reason. I didn't manage the execution, but for me it was good. And now I'm basically waiting for the next round of potential reversals. So I'm waiting for the price to get some clarity and evolve a little bit. But overall, it was okay. But I'm looking for more intense trading now into this second quarter of the year. The first quarter of the year, it was actually taking a little bit too slow from my side. Working in a few things, and now preparing to be fully focused again on this second quarter of the year.
Nice. Yeah, you guys are the first two traders that I've spoken to that have actually said March was quite forgiving. A lot of traders that I've been speaking to have said they got really roughed up in the markets in March, and actually through quarter one as well. So it's interesting to hear that you guys are like, yeah, kind of used March as my foundation. Now I'm ready to springboard forward for these next kind of levels and next rounds of trades. And it's cool. It's cool to see. It reminds me that the market it just moves for everyone in totally different ways, and we've got so many different options to get involved with it, and what might not work in March for one person is going to work for someone else. I think I finished March round about, I think it was it 3R down? So it's not terrible. I mean, it's well within my range, but I'm looking forward to getting well above 3R in profit through April. But to do that, you just got to trade the edge and follow the plan. But I'm curious. So you come into the new year with all these intentions, all these expectations, all these New Year's resolutions, right? I don't mean to stereotype. I just know this is something that traders typically do. They think, right, Rodney, it's a new year. What could go wrong? We're going to size up. We're going to get funded. We're going to get these massive payouts. I'm just curious. Do you guys have a yearly review or an annual or like a monthly kind of review? It could even be quarterly, where you have a chance to reflect on your performance and say, should I carry on exactly as I am? We're not talking about solely strategy. We're talking about the level of allocation. We're talking about whether you take on more prop firm accounts, or you're talking about whether or not you're increasing your size. Like, how do you talk me through that process? How do you scale, or how do you review whether or not you're blindly doing tasks that aren't getting you closer to your goals, or whether you're actually moving closer to your goals, and then you can see it through a review process?
You want to start, Pedro?
Yeah, I do look at monthly. I'm not. So I was a bit more disciplined, I have to admit. So I was doing weekly, monthly, quarterly, and then yearly. And I was asking different questions on each time frame that I was doing my reviews. So for example, weekly, it was more focused on reviewing my trades of the week and kind of a little bit just performance. Monthly, it will be a bit more in terms of actually not so much trades of the week or the trades itself, but actually looking at the mistakes I was I was making a little bit more of the data, and then quarterly it will be a bit more of strategy wise. If there's anything that maybe a pair, a specific asset that maybe is not working or didn't work properly this quarter, or even actually looking at my own habits. Is there anything that I need to change in terms of maybe sleeping time or what time I make waking up, or I'm falling off on some kind of discipline outside of my trading that I need to pay attention to. If there's anything that I want to change, yearly is just then the complete overall review and trying to set up some goals for the year after. And for example, this year, one of the main changes that I wanted to make, and I'm still kind of adapting a little bit into that, was actually to try to reduce my number of trades, to be a bit way more specific in key levels that I wanted to trade. So I would reduce my level of kind of setups that I was looking for, just literally focus on A plus and try to then go a little bit bigger on those setups, and try to really capitalize on them. So that was a little bit of my resolution that I wanted to implement this year, because I wanted to reduce a little bit more of my time in front of the monitor. Again, with even with the Portuguese community project growing and everything, and some other things that I wanted to do, I still have the bad habit of just sometimes just staring at the charts, just scrolling, kind of the same way that people just scrolls on their social media, and getting addicted to that. The charts for me could do exactly the same. I could just look at every single pair that I have here, change time frames, but not really do any real work. And just all of a sudden, 1 hour or 2 hours could pass by. And I wanted to try to remove as much as possible that bad habit. And to save some time for me. That's why actually I started to move a little bit more further away. I actually start working a bit more on my laptop, because usually on my laptop I don't have access to all these empty files around me and the trading views, and I can just focus a bit more on work. So kind of either go to the sofa or go somewhere else outside of my desk. So I actually kind of do some work. I do put my alerts. If my alerts pop up, then I'm aware of them. And I'm still adapting to that. Okay, I still have days where I can still kind of just literally get lost. Instead of doing the work that I should be doing, I'm just staring at charts and kind of just, again, changing time frames, drawing a few lines here and there, and just seeing time pass. And I like that. So that was one of the things. Another situation as well is, I think for the first time since I started trading, I actually got a little bit more, I kind of got a little bit of a new addiction that is not trading, which is paddle. For the first time ever, I kind of found a hobby that actually is taking me a little bit of time, and I actually love it. And that actually is removing a little bit my normal attention that I usually have for trading, because trading has been always my obsession since, 15 years since I started. But paddle actually has been a great challenge. I'm loving it. And so even, for example, in my mornings, I'm actually maybe spending 7 a.m. in the morning, I'm actually going to play paddle instead of just normal coming here for the London Open. And that's my choice. That's kind of something that I decided to do, and I'm having fun with that. So yeah, I'm adapting a little bit to this new routine. If you want to know my Q1, there's been a little bit of adjustment. Also managing other people into the Portuguese community, growing the team, the projects that you are doing, and trying to now focus into the second quarter of the year. My goal is definitely to regain again focus in trading, and have a little bit more of a balance, because I kind of neglected a little bit my trading during this first quarter. I still managed to find some good trades, but I did miss quite a lot opportunities, just whatever reason it is. Either I was not at PC, or I didn't do the analysis or the pre-work that I should have done. So I'm trying to go back into this balance routine again into trading. That has been my first quarter, and what I'm expecting to change into quarter two, second quarter of the year.
You know, the interesting thing with that is many traders are trying to get into trading full time. I want to have my whole day to just stare at the charts and just make money, because surely more trades equals more money. And from what we see is typically the more a trader trades, the less consistency, the less objective they're going to become, the higher their cortisol levels. They're just getting to a point where each decision becomes worse than the last, and then they get a result they don't want. I can see that we got some movements in the charts at the moment, so it could be something that's unexpected, and then all of a sudden a trader's now in a camp of, I need to get back to where I previously was. So it actually becomes less about being objective, and it's super interesting that you've gone through this cycle of like, you know what, I created a big window where I could be all the way at the charts, but now I actually want to create this balance and these other things that I get away from the chart, and I have a smaller window where I'm more intentional and I only take sort of more of the premium setups. Now, 15 years of trading experience, and it's interesting that your more recent final state is actually, you know what, balance is a bit more important than just having a whole day at a chart. I've gone through a similar experience myself as well, where I had a 2-year period where my intraday trading just had to be put on pause. I was so busy in the day-to-day life. But during that time, I was able to be more objective in the charts. I was able to trade my plan with more clarity. And the hardest thing I found was if a trade set up and it was a winner, I would, if I couldn't see the trade because I was in a meeting or I was doing a live stream. So typically in a live stream, I'm going to shut all my terminals. But if I saw the trade in hindsight and said, that was my plan, and I wasn't there to take it, that was what I found I was getting unlucky with. It seemed that all the best trades were setting up when I had these hard fixed appointments and sessions. And then it got to a point where it's like, you can only get unlucky for so long. And then eventually it averaged out. But I felt a lot of pressure of like, these things that I do, they're now in the way. But I had to remind myself then, Rich, they're not in the way. They're a part of being balanced as a trader. If I was to stare at the charts 10 to 12 hours a day, I probably wouldn't be profitable. That boredom, and this is my trigger, my boredom would just get higher and get higher, and that little voice inside my head would go, just place a little order, just make $10, just get involved and just take something. The market's moving. Why not just place a 0.01? And the 0.01 is like it's like an infection, a bad infection in a trading account. It grows. Next thing you know, you're averaging into a loss, trying to save a position, trying to get back to break even. And all these habits they're on the back of just having too much time at the charts. And so although I've been trading 8 years, and I say I've been trading full time for 8 years, I've deliberately made it my business to not be at the charts 100% of the working day. For the same reason as yourself, it's more isn't always better. And having a balance and coming to the market fresh and saying, hey, you know, my cortisol levels are low. I'm objective. I've just read my trading plan. I'm coming in fresh. I know what I'm looking for. It's much easier to take a loss and then go, okay, that's me done. And Richard Butler, I know you have best of 3. And it almost builds in that level of accountability of, you know what, I'm going to take a few losses or a couple of losses, and if that's my 2 trades, not only am I out of sync with how price is moving, but it safeguards me mentally from chasing and trying to make back the money. So many accounts we see with traders are trading, and it's trading like 0.5 lots, 0.5 lots, stop loss, and then it'll be like 6 lots, and it's like blown account. What are you doing? And you can almost see mentally the trader is like, okay, that's a loss. Okay, I'm going to get it back. That's another loss. Okay, I can't accept this about myself. It makes me feel, less of value. And there's kind of layers to it. And I love discovering kind of like how we feel about ourselves and how we think the market can get us back to like equilibrium or reconcile an event. And if we can look at losses as this isn't a bad event, this is just part of the business, part of the trading plan. It's a good loss. If we can frame that in a positive light, we are way less likely to overreact and become emotional thereafter. And that's typically the behavior pattern. When people say it's hard to be a trader, they're whether they realize it, a lot of them are indicating it's hard to be objective after you're emotionally pressed. And so if we can create rules, if we can create feedback loops, Pedro was talking about doing a weekly review, a monthly review, a quarterly review. These are the moments where we pull down the sails, we put the anchor down, and we say, right, let me just look at what I've done for the last week. Let me just look at how objective I've been in the last week. Not just have I made money, but how well have I followed my plan? How well did I implement my milestones, my growth milestones? And then we can use this information to better plot the course that we take moving forward. This is why weekly reviews is a part of the structure that we built into the course. And we taught traders how to quantify trades being good trades versus bad trades. And a bad trade, for those traders who don't know, a bad trade is where you didn't follow your plan and you made money or you lost money. So you can still make money and still have a bad trade. But a good trade is where you say, hey, I've got a plan. I'm going to follow it with consistent risk management. I'm going to get in when I should, and I'm going to get out based on my stop or my TP or management rule where I should as well. And this is what we find if traders don't make that connection with following their edge, they're typically going to be looking at information that is worthless. A P&L is going to move up and down as a byproduct of the market moving, but is it moving in a way that you can repeat? This is the most important thing as a trader, is to create a feedback loop and a set of information that tells them what I'm doing is actually helping me and working. And I'd always encourage traders to get to a point where you start tracking your behavior. You can min-max it and go down the rabbit hole of what time did I get up? How many hours sleep did I have? What did I eat today? Did I go out and get some sunshine? And I think for me personally, I just want to know, can I be objective in the next single trade? When we start thinking like, Richard, if I was to say, hey, dude, this whole year, you got to trade your plan. And for every trade that you don't follow your plan, you're a disgusting trader. It puts an immense amount of pressure on a trader. But if you said, hey, Richard, just for this next trade, I just want you to follow your plan just once. Can you do that? All of a sudden, it's like, well, of course I can. And then we complete that cycle. Okay, cool. For the next trade, can you just follow your plan? And we do this again and again and again, and we chunk that big task down into a small task. If not, we run the risk of burnout. And I've probably thought about quitting trading 3-4 times in the 8 years that I've been a trader. And it's always because it's just felt this overwhelming task of, well, I need to be funded now. I need to be on 2 million of allocation now. I should be getting 30 grand payouts now. And because I couldn't go from step 1 to step 10, I would get super frustrated. And then I would try and shortcut step 1 to step 10, and then I'd end up further back than before I'd even started. And since I started creating feedback loops and consistent routines and a plan, I found that want to quit trading only ever came if I was unable to follow what I considered to be best practices. Before that, I was just wildly drifting with the tide. I was going back a bit, forward a bit, back a bit, forward a bit, but there was no true intention, which is I think super important for a trader, is to map out, look, this is where I am, and it would be okay for someone to say, okay, this is the reality of your situation. Most traders are not as far forward as they realize. And it's a good day when you actually get a very realistic overview of where you sit as a trader. Hey, I have this massive problem with overtrading. Okay, maybe you're not as profitable as you thought. Let's start working on that overtrading. Once we can see the issues, we can then start working on them and resolving them. But to do that, we've got to swallow a lot of the ego. We've got to get rid of the pride. I mean, these things, typically, Richard, if I was to come in here and say, actually, you're not a profitable trader, a lot of the time, traders are going to get triggered by that because it contradicts the view they hold about themselves. And it's about recognizing, well, what is the data telling me about myself as a trader? And if you create a feedback loop where you can see that you're only following your plan 4 times out of 10, then that's the evidence. That's the information we need to be able to say, look, the way I feel is less relevant to what my information about me says. And if we can create that information, it gives us one of the truest views of our circumstance as a trader, as our views as a trader. But that's super boring relative to waking up in a day and going, right, I'm going to get 400K's worth of funding and I'm going to trade 2% risk, and this time next year I should be getting 30 grand payouts. I mean, that's all brain stimulation for the sake of thinking what trading could provide. But the reality is, what is trading actually doing for you? And is there anything you can do to increase your chance of becoming massively profitable? And it doesn't go from being unprofitable typically to massively profitable. It goes from being unprofitable to slightly less profitable to break even to then making a little bit more than you lose. And that state of making a little bit more than you lose, that's the final state of a trader. The only difference is that trader might have 7.5 million of trading capital, and when they make a bit more than they lose, it could be hundreds of thousands. So if you could already be in this state on a 5k account, just making $5 here, $10 there, just making a little bit more than you lose. Like, you could already be in that state. The problem is, we go on social media and there's not too many content creators showing, hey, I had a good month this month. I made 2.5% or 3%, and the gain was $130. Like, not many people want to see that or want to feel that or want to experience that. They want to be up there with the tens of thousands of dollars of traders, and that comes later. And many times I see, and I've experienced this myself, is we focus on trying to get to that now. Well, that's what a profitable trader should look like. No, I'm sorry to burst the bubble. That's not what a profitable trader should look like. That might be the byproduct of a profitable trader after several years of developing and growing their craft. But it's not, from unprofitable to profitable. Typically, for a normal trader, doesn't look like that overnight. So if we can normalize that and create a feedback loop that gives us the right insights, we're in a stronger position, because we can actually pivot when we see something not working, rather than take a few losses and think, I've got to adjust my system and my strategy. And I appreciate it might be a little bit boring and harder to digest that. And it might be a bit triggering if you're in the audience and thinking, you know what, that's not me, that's just everyone else. But actually, that applies to every single trader who's trying to develop their craft and gain feedback around what's working and what's not. And if we're not logging anything, and if we're still acting in random ways because we're reactive to the emotions, then a weekly review becomes pointless. Because, like, oh, cool, this week I made 1%. What'd you do? Well, I took a loss and then I got massively emotional. I went full margin on gold and I got lucky. Like, good luck building a career out of that. Like, and 8 years in, I can see how damaging that is, because one week at work, the next week, it blows the account. And then if you're in a stage where you take wins and you feel great, and you take losses and you feel terrible, you're typically putting your sense of self-worth in the market rather than just trading your plan. And trading can be incredibly simple if we don't humanize it. The thing is, we always humanize it, because that's what we take from the past, isn't it? But what about yourself, Richard, when it comes to creating those feedback loops? Is this something that you've always done as a trader from like day one? I've got to be able to measure it to improve it. Or is it something that you incrementally started to increase or produce as you traded over time?
I think in terms of where my life has like drifted, some things have caused rapid changes where others have been like more of a consistent, slow change over time. With regards to trading specifically, my approach has always been the logical side, the numbers, the expectancy, just kind of looking at it as a math equation and then seeing if I can come up with the right answer for that math equation. And the problem is, you don't always come up with the right answer, because on paper, the mathematics is very simple, but then when you start adding that additional, like you go from simple 1 plus 2 to 1x plus 2, like to the power of 6, that kind of like stuff, like the math becomes way more complicated when you start adding not just numerals, but like actually letters into it. And in this case, letters being the emotional side, the psychological side of trading. And when you realize, or when you look at that, you kind of like realize that you're so far from what you expected, or at least you had this idea of where you could be or where you should be based on the numbers, based on the mathematical, the logical thinking. And then you add the emotional thinking and you realize, I'm so far away from that. So my case being that I used to almost always try and find a process or a method that can assist by completely removing the emotional side and just focusing on the numbers itself, on the probabilities and stuff like that. The problem with that for me was that I'm inherently somebody that is risk averse. So I'm always trying to find the best way to do it. And then I'm not risk averse when it comes to my emotions. So with my emotions, it's just like, don't worry, I'm not going to, I'm not going to be controlled by this. I'll put it in a box and I'll deal with it later. And then I deal with it later. And that deal with it later is you get angry because you just took a stop loss, or you're annoyed because the market's not giving you what you expected to have. So there's this duality, there's this juxtaposition. This is what I want, and this is, all of the stuff that I'm going to be doing. And then you start doing them, and then there's just this other side that just creeps up. It's like, let me just take off this chunk over here, and then, I'm going to screw with you a little bit later. So process-wise, I've always tried to just look at it from a mathematical standpoint and tried to believe the math. That was the thing. And then with the best of three, thing that I had to introduce for myself was because I could not find a emotional balance for overtrading. I could find a mathematical balance for it, but not a emotional one. So that's why I introduced best of three. A emotional issue managed by a mathematical equation, or an emotional issue that is being not maintained. I'm not maintaining it. I'm not maintaining my emotions. I'm trying to circumvent the emotion, not deal with it, but putting a stopper in place that says, follow this, and this is the numbers. So follow the numbers. I don't know if that is answering the question, but that's kind of like how I've gone about things. It was never quite emotional maturity in trading, but understanding that I have an emotional block within trading, but I am going to math my way through it. And like even now, like what Pedro was talking about earlier about wanting to limit screen time, I've kind of been forced into limited screen time, particularly for my trading. So the focal point that I've had was my trading and exactly what it is that I was looking for. So if I come to the charts, it was only ever with the intention of looking for my trade. Now, being on the live stream and stuff like that, I'm no longer looking at my trade. I'm now looking at everybody else's trade, including my own. So my attention has been very divided by that. And then on top of that, it's also the fact that there's a lot of background work, managing the stream and stuff like that. So I've kind of been forced to just deal with it, like adapt. All right. And I'm not complaining about it at all. That's not the point that I'm trying to make. It's just like, I'm not complaining about it. It's just like the adaptation was not because I wanted to adapt, but I needed to adapt. And I feel like it's been a net positive for my trading because I'm not overthinking my trading. I'm spending time looking at my trade and looking where my entries are going to be based on my strategy. And then I see it and I'm like, well, I'm either going to take it now or I'm not going to have an opportunity to take it in the next 2 hours, that kind of like thing. I can't just sit here I have got other stuff to do. So I'm kind of forcing myself to just follow the plan. Just go with it. Just take the trade. And I think that's why last month was such a good month for me, because the trades that I took was just like, well, you either take it now or you're not going to have an opportunity to take it tomorrow because tomorrow you have a meeting or tomorrow you need to work on this thing. So inadvertently, the management of my trading and the emotional side has been kind of like pushed out of the way, where it's just like, I'm too busy to have an emotional response to this right now. Like, I can't deal with this right now. I've got this work. I still would love to trade. There's my trade. I'm going to take it. Screw it. There we go. That's kind of like the processes. It's a little chaotic and it's a little crazy. And it's a little bit further away from my, let's call it meticulous, mathematical, expectancy-based. Everything is still there, but I'm not focused on it anymore. It's just, you don't have time, dude. You just take the trade. It's there, it's in place, take it, and then go and do something else. Or you're so busy that you don't have an opportunity to even look at your trade. So it's just, it's just like that level. I don't know, that was all over the place, but I hope that answered your question.
I want to dial into one thing. It definitely did. But to clarify, when you introduce this rule, the best of three. So for those that don't know, Richard will take 3 trades a day. If he gets 2 losses, he will stop. If he gets 2 wins, he'll stop. If he gets 1 win, 1 loss, he will take only 1 more trade, and that's the best of 3. Hopefully I've got that right. When you introduced this rule, did it make your trading easier?
Execution wise, yes. Emotionally, not quite. I introduced it with the intention of managing overtrading, or managing FOMO. Let's put it like that. I would still get FOMO. I would still want to enter, but I would stop myself. I would still experience FOMO. I would still feel the emotion and the feeling. So in terms of that side, it did nothing. It didn't alleviate the feeling of wanting to participate. It just put a stopper into actually participating. Because I would have a sticker, a little post-it. I think I've removed it now. But I used to have a little post-it note that says best of 3 only. Best of 3 only. And then if I took 2 trades very quickly after each other, one of them maybe not according to my strategy, I'll look at the post-it note and I'll be like, I'm only allowed 1 more trade. Am I going to have that trade be a FOMO trade, or am I going to actually look for a proper trade to enter? And then I would wait for a proper one, and then I'd still get a loss or a win, and it didn't really matter. So I kind of like forced myself to do that. But in terms of feeling the emotion, it's still there. It's like I still get FOMO. I look at a move, I'm like, I should be entering right now. And it's just like, no, you don't need to. So logical brain is kind of overwhelming the emotional side at the moment. But yeah, so in that case, it did something, but not what I expected it to do.
Because what you put in place was a physical pause, not a mental. It wasn't a mental solution. It was just something that says you have to stop. And there was still fuel in the tank to want to keep going. But you're like, well, no, this is our stop sign. We have to stop here. That ties into what Matthew's saying. I see that in the comments we've got Matthew says, my entry and setup are right most of the time, but my entry is early and I'm stopped out before going in my analyzed direction. How do I handle that? So that would be a similar kind of thing. Thinking about, I've got this bias or I've got this trade idea, but I keep getting stopped out. And so if you got stopped out and then the trade ran in your favor, that would be the same kind of emotional pressure that Richard was feeling. It's like, well, look, I want to keep trading. I can see reasons to keep trading. I can see these setups. So I'm going to challenge this directly, Matthew. You may not like my approach with it, but I'm going to be the contrarian and give you an opposite idea here. So you start out by saying my entry and setup are right most of the time. If they were right most of the time, we wouldn't have this conversation. We wouldn't be talking about what comes next. The thing that they're getting stopped out is that your entry and your setup are not right. They're getting stopped out. So let's start with that. If they were right, you would be going to take profit. So if you're right on your bias and your direction, that's one component. But the way you're framing that trade is not getting you into the move by timing it correctly. So the way that we handle it is we identify what's the real issue here. You might be incredibly good at your bias, and you might be right 8 times out of 10. Now, this is where if we were in a one-on-one coaching session, I would say, right, can you statistically prove to me on a spreadsheet that you are right 8 times out of 10 on your bias? And at what point are you wrong about your bias? So we would want to build evidence to support that you are right about your bias. Not it feels like I'm right and I'm just getting stopped out, because feelings aren't always fact. So we would create information. And I would say for this month, that would be the task. It would be, okay, we're going to create 2 columns in your spreadsheet. Number 1 is going to be bias. And we're going to prove, are you right? Are you wrong? And we're going to start building a sample of maybe 20. And then we're going to challenge that information and see if you are right about your bias 8 times out of 10 or 16 times out of 20, then it's just a case of framing it in a way that gets you in with maybe a wider stop loss, or maybe having 2 or 3 goes at the same trade if you do keep getting wicked out within a zone or within an area that your bias is wrong. So typically for traders, I would encourage you, have a line in the sand where your bias is wrong and see how many times the market will move to what would have been your take profit relative to that line in the sand. So you've got to create a hard mechanical rule to it to know at what point is your bias wrong. And if it's just this vague idea of I think the market goes up, but if it drops 300 points before going up, then at some point your bias would have to be wrong because you weren't able to frame that trade with a stop on the swing low. So it's about separating the two. Is your bias correct and you're just framing it wrong? And if that's the case, that's super easy. You would just go for a slightly wider stop loss with a swing trade approach. Or if you're constantly getting stopped out and your bias actually isn't correct, then you've got enough information to say that maybe you need to pivot with the way that you're interacting with the market. So Matthew, I would be building evidence, ones and zeros in a spreadsheet, or ones and minus ones, to prove that you are able to be correct about your bias. Because sometimes it can feel like Richard said earlier, it can feel like you're in a certain stage, but then the information shows you actually the evidence is slightly different. An example of this could be if I backtest a system and I go through a whole month of data, I get this feeling, that was a rubbish month. And then I look at the stats and go, wow, that made 7R. I didn't think it made 7R, but the data doesn't lie. So it's about quantifying your problem and saying, how can I build evidence that I cannot ignore, that I'm correct about my bias, and then adjusting your entry criteria as a model. So let's say, for an example, you trade London Open. 8:30 UK, you get in for a long. You get wicked out, your bias was long, you get another long setup. You get wicked out of that. Your bias is still long because it hasn't hit that line in the sand. Then you go in a third time and that's the winning trade. Now, if you're trading tight stops and trying to catch the move, this is one of the issues with trading. We can be right about the market going up or down. Like, that's relatively easier, but trying to time that move in the market and catch the move exactly as it happens, that's the thing that can get traders caught in a never-ending loop of, well, I'm right, but I'm not getting paid. And I'm incredibly good at being right, but I'm not incredibly good at getting paid. And they're a very different skill set. So it's about trying to quantify, I have an intraday framework and I take the trades because of this reason. What does my data say? So Matthew, I'd be, if you're in the Fivers Discord, and you're available on Thursday or Friday at 3:45 UK time, feel free to jump in. And if you've got some more insights and more information around this, we can dive into what does your data say. And if you haven't got to that stage where you've built information and data around it, then what we can do is we can run through some processes and some simple spreadsheets that we can knock up together and get you to a state where you can start recording information that will give you the insights you need to be able to work out whether what you've said is completely correct. So that I'm not saying that what you're saying is right or wrong. I'm just saying we would look at data on a spreadsheet and it would completely confirm that actually your pain point is exactly where you said it is, or it might be that it's somewhere else completely. Prime example could be traders are right about their trades. They move their stops to break even after 1-to-1 or 1-to-2, market comes back, tags them out, and then moves in their direction. And they might be like feeling like, I'm right about my analysis, but I don't get paid. And it's understanding that the action you take is not aligned with the movement within the market. And the data will never lie about that. So if you can record like a 20 trade sample size, you can get some insights from it, and then we can build on that. And that comes back to full circle what we were saying earlier. If a trader is inconsistent in their ability to execute on their plan, then their equity curve, their P&L doesn't show us anything that we can consistently build on. So before profitability comes consistency. And a great way of tracking consistency is in a spreadsheet by recording your trade, your entry time, your trade direction, your stop loss size, so you can find that trade again. If your terminal ever disappeared, you need your own personal database, and then you record, did I take the trade according to my plan? Did it go 1-to-1, 1-to-2? If you're a Fivers trader, you can check out the performance coaching course that we released 2 weeks ago. And inside your hub, you go to Academy and you go to performance coaching, and you've got a 3-module course. In module 3, you will see how to deal with losses, how to deal with drawdowns. You will see how to record and track data, and you will see how to carry out review processes as well. So that's got a lot of the information that you'll that will help with that kind of question. And it's good to challenge this and not just say this is the problem I've got, because the information that you gain will tell you, and the data that you've got will tell you 100% this is where your pain point is, and then what we can do is build a workload around how to increase that and review that. But typically, if you're right about the direction, then having a wider stop and going for a lower risk to reward is a higher chance of increasing your win rate and getting paid on it. This is why I trade negative risk to reward, and I trade at low TP targets most of the time. I like a nice high win rate. It's easy to turn up and be objective the next day when you've got a 75% win rate. If you're trying to catch the move now with a 10-point stop and a 1 to 10 risk reward and you've got a 15 to 20% win rate, you're going to get smacked about in the market way more often. And then that's the pain point of a trader, is to be objective after you've just taken 3 losses in a row, 5 losses in a row, 10 losses in a row. We all have a pain point where we have to say, okay, that's enough, I have to stop. And for a trader trading higher risk to reward, that pain point has to be much bigger. So for myself, let's say I have a 75% win rate. My pain point could be 15R. It could be literally a losing streak of 15 trades. At that point, statistically, something has drifted within my edge and I need to go investigate it. If Pedro traded with, say, a 30% win rate, his losing streaks are going to be much, much more severe statistically as a normal average, which means his pain point may not have to be 15R, it may have to be 25 or 30. Now, at this point, Pedro's got to walk that journey of that drawdown for much, much longer than, say, a trader with a 70% win rate. Now, it doesn't mean to say that the trader with a 70% win rate is better. It just means that the trader with a 70% win rate is going for lower TP targets. So say I hit TP, I might make 1R. If Pedro was trading higher risk to reward with a 30% win rate, he might hit 5R. And so his drawdowns and his journey is going to feel very, very different. Yet we could be trading the same asset. So Matthew, if you're in a state where you're right about your bias, but you're getting stopped out, it tells me that maybe the way you're trying to frame your bias, that might be a byproduct of trying to catch the move right now, trying to catch the trade that never goes into drawdown, that's massive risk to reward. So I would consider re-looking at the entire framework and say, what's more important, entry criteria or bias? Because if you're right about the bias, then the entry matters less because your stop loss would be wider. And this is something that if we understand as traders that you can't have high win rate and high risk to reward. You can't have them both. And typically a trader has to pick one. And it's saying, okay, well, you know what? I like being the trader that hits 1 to 35 and then showing it on Instagram. You're probably not going to see the 30 losing trades that I took because most of the time it's easier to show the successes. So for me, I'm not that kind of trader. I don't want to lose that often. So I would rather have a higher win rate and I would rather get paid less when I'm right, but I'm right a little bit more often. And all I've got to do is knock out 5R a month. If I can knock out 5R a month, which is 0.5% risk, which is 2.5% return, I'm on target for a 30% year. A 30% year puts me up there into the category of exactly where I need to be. And so I asked myself, okay, if that's all I need to do is trade at 0.5% risk and make 5R a month, be right 5 times more than I'm wrong at 1-to-1 risk reward. All of a sudden, this journey of a trader becomes massively easier. And I'm like, okay, 2.5% a month? That sounds awful. Okay, well, what if you were funded with 2 million? Does 2.5% sound awful now? And it comes back to what we were saying about earlier, is if you do 2.5% return on a 5K account, you might already be where you need to be. It's just financially it needs time to catch up and it needs to scale consistently and slowly and properly as well. But that's what I recognize as a trader. I wasn't looking for a lumpy ride. I just wanted to get from point A to point B as reliable as possible. And I wasn't able to do that if I had a higher risk to reward TP target and I constantly kept getting wicked out. So I get in, I get out, I take a good loss or I take a good win. And I'm just trying to be right 5 more times than I'm wrong at 1-to-1 risk reward. And maybe it's worth re-looking at your entry criteria and aligning that with your bias. There's nothing wrong with having wider stops. You pay less commission, the slippage affects you less. If you're going to pay swaps, you'll pay less on your swaps as well. And you go in with a 3 pip stop loss and you get slipped 1.5 pips on that. You've just taken on a 50% additional loss on your stop as well. So it's about trying to, what might work in back testing may not work on a functional level when it comes to forward testing. So definitely got to be looking at, like, is there edge in this that I can actually execute? Example, buy stops, sell stops. If you're trying to put a sell stop below price and you want to get filled, you have a look at the price you want to get filled relative to the price you will get filled. That now increases your risk in the trade because you don't get filled at the price you want. So there's certain entry models that can actually favour when it comes to execution, and others they slightly adjust. Loads of variables to it, but it's just a couple of things to consider. I don't know if you guys have got any thoughts on it when it comes to sort of higher TP targets. And Pedro, I have no insights as to your risk to reward or your win rate or anything, and I'm sorry I used you as an example
It's
within
good.
that. So disclaimer.
It was a bit of a contrast, which was good. It's not exactly 30%, but I do look for a little bit higher risk reward. This 2, 3, 4 to 1, it depends. I usually bet a little bit of a percentage for a runner, again, because I'm such a contrarian trader and I look more for tops and bottoms, that it wouldn't make sense to me then to just remove all my profit straight away when I'm trying to be patient as much as possible to catch a top or a bottom. But in regards to his question, which is something that, again, many feel in terms of, yes, I'm correct on my bias, but then my execution is wrong. I like what you mentioned, and I love the way you always mentioned the part of quantifying and to actually trying to bring something substantial and not just emotional or theory, because we are selective when you are trying to remember some stuff, especially trades. We always remember the good ones or the ones that we missed a lot. For a lot, or just got stopped out by people and then price reversed. We always remember those ones, but we don't remember the majority of them. So we start creating the wrong bias if you don't quantify and if you don't have numbers to look at them. But to visualize as well, what I have seen many times as well with traders is sometimes traders, they get trapped or they get lost into too much into the lower time frame. Okay, so even when they said that they have the bias correct, maybe they are still looking at maybe 1 hour time frame or even 15 minutes time frame to just try to trade the 5 minutes or even 1 minute time frame. They don't really have a bigger idea of the higher time frame perspective, maybe even 4 hours or daily. So what they think that is maybe the correct direction or correct bias into the lower time frame just to take the trade, it may not even be the proper bias overall. Let's just say it, I like that. But if he actually feels that he actually has a correct bias, that's a good thing. Okay, that's actually something great that you can also, or can you work, develop and work on, and go into the next stage, because I think it's going to be quite difficult in the long term to be constantly wrong in your bias and be correct in your trades. Okay, I think first you are actually going to be correct in your bias, and then you're going to find a sweet spot where you're going to actually be able to kind of find an edge in your execution based on your bias, and not the other way around. So if at least the first part is correct based on what you say, which you can do the exercise that Richard just mentioned to quantify it and actually have, and for the month of April, you have 23 days to actually work on it. Then it's about the entry, and the entry, there can be many triggers, can be many small situations, and you need to study your trades. Basically, you need to really study not just the moment of execution, but study the overall move in general of the trade, and especially since you are getting stopped out and price then goes in your favor, study exactly that part. Okay, that's actually something that the market is telling you. So take advantage of it. If you're actually getting constantly stopped out by a little bit and then price goes in your direction, just do that. Like literally study. Maybe it's a bit of FOMO. Maybe you're not being patient. Maybe you are not waiting for price to kind of create this liquidity and then to get into the trade. Maybe you are seeing that price is just ranging like this and you want to get in just because you start having FOMO, or you see price breaking a low and you think that this is the moment for you to get into the trade. But then price still does this, and then it goes, and you get in here, you get stopped out in there, and then price does this move. Like, try to recognize as much as possible the pattern that price does when you are getting stopped out. That's a great thing. That's why trading is so fascinating, is because actually most of the questions that we have, the market itself is going to kind of give us the answer. We just need to be curious enough to look at them and to try to dissect what the market is doing, especially in terms of patterns. The price tends to move quite similarly. Maybe there's like 3, 4, 5 different patterns and not many more than that if you actually pay attention to them. So yeah, that's basically something that you can start working on, which is great. So actually be happy that that the market can give you the answers that you are looking for, and then follow the examples that Rich mentioned. Quantify, piece of paper, just write down your numbers, and what Richard mentioned is really important in terms of because sometimes when you are mentioning for people to quantify stuff, sometimes you don't really know how to do it. Right? For example, Richard before you mentioned the feedback loop. Like, how can you actually create a system that actually gives feedback loop instead of just being theoretical? Like, how can we actually create a journal where you can add those? And you said something very nice, which is sometimes just as binary as possible: a 0 or a 1. 0, it didn't happen. 1, it happened. And you can track, like after 30 days, you can see exactly how many times in regards to your bias, how many times actually you were correct in your bias, or how many times you were incorrect in your bias. And now you have something quantifiable that you can actually look at, and now you have your answer in that aspect. So yeah, that would be really of my answer. Sometimes try to get a little bit more zoomed out to actually create the proper bias. Study what happened on your stop losses. What does price do specifically? Be curious. Maybe sometimes it's not just what sits in front of you, but actually maybe what price did before. That actually can also be the reason why price. For example, what I want to say is maybe sometimes it's not actually what's going on in here, but maybe it's because price already where the low is coming from. Okay, it's basically this low. If this low is already reacting from a good level in this on the left side and it didn't break anything, maybe the probability is that maybe this level is not going to be a good level for short. Maybe price actually wants to just continue to go higher. So if you are just zoomed in here and trying to find an opportunity within this level, maybe the answer is not the pattern itself that you see here on the 5 minutes time frame or 1 minute time frame, but that's actually where this low is coming from. That can be the answer. That's what I mean. Like, be curious. Okay, don't just look too much into what you see on 1 minute or what's going on right now in the moment or what happened in the last 15 minutes. Have a little bit more of a bigger perspective of what actually price is doing in the bigger picture. And you are going to start realizing that it's going to help you a lot in seeing some stuff. That would be my answer.
Pedro, you said 2 things there. You said, be curious. I love that. And you said a pattern. Just, there might be 4 or 5 patterns. We held a poll in one of our coaching workshops not so long ago. Mm-hmm. And we asked traders, do you believe it is possible to be long-term profitable without a bias? So effectively, what you're doing is you're just trading a pattern in the market, but you have no bias. And you say, every time this pattern turns up, I'm just going to trade. And the information we got back was that 60% of those traders said it is not possible to be profitable without a bias. So when you said be curious, it challenges this idea that 60% of traders said, I can't be profitable without a bias. Now, I have a personal opinion on it, and I definitely don't want to shape anyone's belief when it comes around it. But if I wasn't curious, I wouldn't know for a fact, based on massive data sets and systems, whether or not that has been true in my case. So do I use a bias? No. Do I need a bias? I personally do not need a bias. I trade a simple pattern that is logic and based on kind of like run on liquidity, stuff like that. And I just trade this pattern wherever it sets up, and it makes a bit more than it loses. Now, could I make that pattern more profitable with a bias? Now, that's I believe, the real question. So for me, I didn't need a bias. But, okay, I've already given away the thing I said I wouldn't give away, which is my bias. But I found that I didn't need a bias to be profitable. I was able to just trade simple patterns. And that was great because it removed one of these kind of things that traders would say, you've got to have a bias. Well, what is a bias? How do you form a bias? How do you frame a bias? So now I got to remove all of that from my trading and just focus on, I'm a pattern trader. And it was liberating to be such a simple way of trading. And if I could align the pattern with a bias, would it make it more profitable? personally, I wasn't able to find a way to do that without running for bigger TP targets. But then it conflicted, the exact thing that Richard was saying earlier. I had a technical way I wanted to get in the trade, but mentally I wasn't good at going for 3R, 4R, 5R and seeing the market pull back after just 2R in profit. So I had a huge problem with being wrong. I had a huge problem with being right, but not getting paid. So one of my biggest triggers was seeing a trade that went over 1-to-1. I was technically correct, but the market said, we're not going to follow through to pay you. And I was like, well, bias or no bias, I'm going to be a pattern trader with low TP targets because it's way less triggering for myself. It was just something that we did as an exercise in the coaching workshops. And it was just curious that 60% of traders have this, you must have a bias to make money in the market.
That's kind of crazy.
That's a wonderful question. I have to say though, I would go for the bias one, in the sense that I can recognize the pattern, but actually at this point of my trading career, and because of the style of trading, and it is really specific for my style of trading, because I literally look for tops and bottoms, and I use a lot of correlation. I use a little bit of what's going on in terms of macro, in terms of maybe geopolitical and stuff like that. I need, for example, if I'm about to say that my strongest trades is when I actually have a strong bias towards specific move. And of course, I do then look for my pattern to trade it. I look for my confirmations. I look for something that I want to trade from. It might still end up being maybe everything was a pattern initially, and then maybe that was a pattern itself. Maybe I could almost systemize it just to make it as a pattern. But I do need my my bias allocated to it as well, where I feel that's a bit of my edge, not just the pattern itself, but actually find the pattern in the right moment, allocated with many things in the mix to find out, or to work out. This is a bit, for example, last week, like my bias was literally to look for dollar bearishness. The reason for that, before I even get to my pattern of trading, again, maybe specific level on dollar index, then dollar CAD running up for 5 days or 6 days in a row, dollar front Swiss doing exactly the same thing, dollar yen also being in a really specific moment. So I start combining many different aspects in terms of the dollar pairs to actually then, and where they actually, how those specific pairs were approaching in a specific level also, maybe of structure that I usually look for. And that actually then ended up creating my initial bias to look for a short or shorts on the dollar pairs last week, which actually ended up reacting from there. I didn't really manage to take the trades because then my pattern specific for the execution didn't play out. Maybe now the double top may create it, but that was a little bit of my situation. Just a little bit different. Maybe if it was more of a lower time frame, small risk word. Yes, I think the pattern itself, and maybe if Vitor was here, that he trades also maybe similar patterns that I do in terms of Quasimodo. I think Vitor also to be more into the pattern behavior in terms of just trade whatever it happens in charts and that's it. I do create a little bit of that filter with the bias, or I bring more things into consideration. But I'm so specific on the type of trades that I'm looking for. And I'm super patient at this point. I'm super patient. I'm not exactly.
I mean, you've got paddle, so
yeah. No, I'm super patient in terms of what I'm looking for. I can't sit on my hands for even a week. Maybe you have someone on the behind the scenes now that's going to join us in a bit. That is also
way more
for opening. For opening just
way more patient.
A couple of trades every now and then. But that's a great conversation, to be honest. Do we need bias? Like, and then where is the edge coming from? And then maybe you can even go into AIs in the future. Like if we don't really have that bias in terms of the traders, and if everything is just a pattern, is AI going to be able to replace these patterns and just to remove any alpha out of that situation? And where are going to be the opportunities in the future into AI? It's going to be more time frames, going to be more value-based opportunities. where are we going headed to? But that's a conversation for another day.
I mean, you
Guys,
can add the same. You can add the same thing by asking, "What if I add my discretion? Where does
exactly.
discretion fall in
Yeah,
terms of bias? Where does
by
discretion
bias
fall
I mean
in?
discretion. I think I was like, maybe that would be a better word for all this. To be more
Yeah,
discretion.
because I wanted to say, like, this bias is a very interesting thing, because if you go and look at the definition, I'll bring the definition up.
Yeah.
It is. It depends on if you're going to use it as a verb, as a noun. But if it's a noun, it's the inclination. Well, let's look at the statistic side of it. It's a systematic distortion of a statistical result due to a factor not allowed for in its derivation. So that means that it is in the absence of information that you did not have at hand when you made this inclination. I want EU to go up. My bias is bullish. But the bias itself means that there is a lack of certain information that is yet to be proven.
But isn't that the market though? How can we even get our information?
That's exactly the point.
Isn't that what we try to close the gap within?
Exactly.
What we know
So if you're saying you're trading with a bias, you're just trading with your own inclinations. You assume that price will go up based on, and you can put in all of the factors that you want to put into that analysis, and you can say, okay, based on all of this, this is what should be happening. So it's a statistical analysis that you're doing based on propagation of movement. I've seen certain movements previously. I assume based on that movement, this is going to happen. Technically, we're all trading with biases. Technically. If you look at it like that, it's in the absence of certain information, and it's based on your own inclination, based on stuff that you have put into place as quantifiers. This is where this trade is going to go. It's going to go bullishly. So technically, we're all trading with a bias, except Griff. Griff doesn't trade.
This says a bias about the trade.
Yeah, I think if you don't trade with a bias, you're gambling. It's as simple as that.
You see, Rich, you're trading, you're gambling, mate. You're gambling.
Will, how very dare you, mate. Okay, well,
Sorry, Rich.
I'm going to leave you on this.
Have I just completely dropped you in it there?
How dare you?
So I'm gonna leave you there with this just before I shoot off. So we were talking about biases. Do you need a bias in the market to be profitable? We held a poll in one of the coaching workshops, and 60% of traders said that they believe you need a bias to be long-term profitable. I went ahead and leaked that actually I don't have a bias when I trade, but the caveat, as Pedro pointed out, is I trade at smaller risk to reward. So if the market is generally moving up and I'm trying to short it, I might get a small enough reaction to hit a small TP target before the market then continues in its direction. So there is, well, I'm sure you guys will find the right answer and battle it out amongst yourself. I'm going to have to fly off. Pedro, Richard, it's been a pleasure. Griff, Will, good luck with these guys, and I'll catch you soon.
Guys, as well.
Nice catching you.
See you later.
Cheers, Rich.
Have a good one, guys.
Thanks, Pedro.
Cheers, Pedro. Have a good one as well, mate. So you guys can catch Rich and Pedro again on Thursday. So for everybody that is interested to follow them, you'll see them again on Thursday. William and Griff, what is up, my friends?
Hello there.
Sounds like you're having some confusing conversations. I would have thought
it's
everyone
spiraled.
needs a bias. Crazy.
Well, once again, it's what is your definition of a bias? And
Yeah.
I think for everybody, it's the idea of directional movement. I expect a certain move in a certain direction, and that's technically a bias. So yes, I think even though Rich believes that he trades without a bias, I think he still enters trades with a certain expectancy of directional movement, which is, in my opinion, what a bias is.
Yeah, because like my interpretation is if you're making the decision of whether to take a buy or a sell, then that's a bias because you're choosing to go long or to go short. So you can't do that unless you have a bias. But yeah, it depends on your definition, like you say.
Yeah, I mean, it's an inclination. It's an inclination to one of the two directions, kind of like thing. I'm inclined to take a buy because of whatever factors you've put into place to say, because of these reasons, I'm more inclined to go bullish. So
Yeah,
that's the bias.
I guess I think maybe it's like, because I don't have a bias in the sense like I prefer to go longs over shorts. Like
Yeah.
longs and shorts both are, I treat them both equally depending on the price action, you know. So I guess I don't have a bias in that sense. Maybe that's what Richard means. But I don't have a bias in
Yeah.
I do have a bias in the sense of I am deciding to go long based on the prior
Yeah.
information, like you
I
mentioned.
prefer sells over buys always, regardless of price action. That's a bias.
Exactly. Yeah. Don't have one of those biases.
No.
Because it's funny, some people see longs more easily than shorts and vice versa. So like a good shortcut on TradingView is Alt and I, and then you can just flip the charts. So sometimes when I'm trying to make a decision, I'll flip the charts back and forth to
And
see if
you
I
see
like the look
sells
of it
instead of
as a
buys.
short.
I'm buying NASDAQ.
Because sometimes it looks good one way but looks bad the other. Like I'd be talking to one of my friends about a trade and he's like, you know, I don't really like it. I don't think this fits my plan. And then I just hit Alt and I and I flip the charts and he's like, oh, I like it now. I kind of like the trade now. And it's the same trade. You just flip the charts. So it's a good little
Yeah,
hack.
I rate that. Yeah, fair. Yeah, that's really interesting.
Yeah.
Yeah, I think that in that case, that line of bias is definitely not trading related. I would say it's more of it's the expectancy that price should go up. Going up is better. Price coming down is bad. And then it's just like for stock trading, maybe yes, but not for CFDs and stuff. Stock trading, if prices go down, you don't want that, especially when you've already bought. But I kind of get that idea. It's like, yeah.
It makes a lot more sense with like stocks and indices because there are people that will only buy stocks and they'll never short anything unless they're closing their position, you know what I mean? But for Forex, I feel like, there's no real, I'm not only buying everything like you do in stocks where you're just building a portfolio, accumulating stocks like Apple or Microsoft. Like in Forex, it's mostly just going sideways, so we don't really have any directional bias on the long term, I guess. We're happy taking buys, we're happy taking shorts, kind of thing.
Yeah,
I think we need two different words because we're referring to bias in a couple different ways, aren't we? It gets complicated, and that's why I said this is confusing when I joined.
Yeah, that's why I was like inclination. I like the idea of inclination. You're inclined to go in a specific direction because of certain factors that you've taken into account and that have added to this inclination. Whereas bias, I like what you said first about bias. Is like it's more like this. If you're an indices trader, I think you will have more buys during bull runs and vice versa. So maybe you create a bias in that sense. It's the sense that you're only looking for buys because you view the market in a specific way that, stocks should only go up, so I should only be buying stocks. And because stocks are going up, indices do the same, and Forex does the same, and so on and so forth. So I like that. That is a bias. It's like I'm inclined to do this thing because that's how I view the market versus the inclination to choose a direction based on certain factors that you have predetermined. Let's put it like that.
We'll have to lock in that definition for when we refer to this in the future.
Yeah. We've coined it now, guys. Are you trading with or without inclinations? Or are you trading with or without biases?
Yeah, confusing. Because there's like Michael Berry, and there's other like kind of skepticists which only do shorts and just try to time like market crashes. You know what I mean? They're not necessarily accumulating a stock portfolio like in the traditional sense. They're more like, I think the market is going to crash. They're looking for things going wrong, and that they have a bias, or I'm mixing them up, a bias to go short. But in Forex, you don't really have a bias, I feel.
Yeah. But
I feel like we've come to the same conclusion.
Yeah.
I was gonna say I give my 2 cents on it, but it's pretty much gonna be the exact same as you guys. Like
Yeah.
I rate the. I don't trade with a bias. I'm a bit like Rich. I don't trade with a bias, but I agree with Richard's definition of a bias. Like a bias is trading with an idea on what's going to happen without a definitive answer. So therefore, if you don't trade without a bias, if you don't trade with a bias, you're technically gambling because you need to have some inclination, like you said, on what could potentially happen, and hopefully you're stacking probabilities in your favor. So therefore, you've got an expected outcome. You've got a wanted outcome. So therefore, yes, of course, everyone trades with a bias, but a generic bias. I fully agree with Rich Wells. You don't need to trade with a generic trading bias.
Yeah.
Medina is saying, my bias is based on market trend, and then Aprudov Linkler, being the troll that he is like, on what time frame?
When I first read that, I read it as WTF.
Oh yeah, fair.
On
yeah,
what
fair.
the F? I mean, technically. We were also talking about, I can't remember who it was. I dipped out for a little while, just go and make myself a cup of coffee.
This is a beautiful diagram that you've made.
Yeah, I actually wanted to explain it.
That looks sick. How long did that take you?
Looks like you've made loads of scalings. This is whenever you take multiple trades and they're all overlapping and you get that kind of gradient. I'm getting a bit of dopamine just looking at all these overlapped risk reward tools.
So it was this comment from Matthew, and Rich and Pedro had already went into depth about talking about this, and he said my entries and setups are right most of the time, but my entry is early and I get stop out before going in my analyzed direction. How do I handle that? And something that I did was this that I'm showing here now. This is the change that I've made with my trading to kind of help with that feeling. So I too used to struggle with the idea of having a singular entry with a singular TP, and then if it didn't hit it, it would go to stop loss, and if it hit it, it hit whatever. My expectancy was almost always either met or exceeded or just slightly undercooked. So there's always a room for deviation from expectancy. And the idea was generally I would have a 1 to 2. So if my entry point was there, I would have a 1 to 2, and whatever happens, happens. If it goes up and it hits stop loss, so what? That's one of those things. The question was, would you then re-enter? If your stop loss was hit, let's say you got in early. Let's say instead of, if my entry said I needed to put a sell here, that was technically too early. So my stop loss was somewhere over there and price went up, just wicks me out, and then eventually starts showing me the pattern that I want or wanted to enter on over here, but now I'm seeing it over here. The idea was then, would you re-enter? And that was kind of like where this stemmed from. The idea of either having multiple entries at a specific area and taking TPs as they go, because sometimes you're going to be in a little bit early, and some of them will go to TP1 as an example before eventually just rocking up and sweeping your stop loss. Or what's going to happen is you're going to learn to be patient. So if you're going to learn to be patient, then you may as well just do this as well, but just add a better slot. So you wait for more confirmation, that kind of thing. And then on top of that, it was the problem of I don't let my trades run. I have a expected stop loss and take profit point that I believe would be hit more often than not. And then the same thing maybe with Pedro. He didn't leave a lot of his trades to go to full fruition. Rich, the same thing as well. This was to try and alleviate that. Take some profit points, and then if I eventually hit TP2, I move my stop loss to break even. And then I just see whether or not TP3 and maybe even TP4 would get hit. And then in that case, I would get better movements. But the same problem persists even though I changed this style to if I get in early, I'm going to get knocked out. You should be willing, if your strategy and all of your confluences align, to re-enter should price come back to your level where you originally wanted to be in on. But then you can't be scared to say, okay, I'm going to enter here for a sell, and then the moment it reaches down here, I'm going to close it. Because, my previous plan was to hold it down to here, but because I've already had a loss, sweeping, I want to make sure that, I lock up profits again, so I'm back to where I was at the beginning of the day. You can't play scared then if your first trade was too early and then you get to stop loss. I just wanted to add that with this trading style that I have here was to kind of like alleviate a small portion of that problem. Because the small problem that I'm talking about is you re-enter, but then you close it early because you want to make sure that you go back to net zero. Because now you're afraid. You've already had a loss for the day. So to me, I added multiple TP points, and then if a certain TP point is hit, I just bring my stop loss down to break even, and then I just let it run. Some of them is going to go to TP4, some of them is going to go to TP3. I mean, if it goes to TP4, all of the positions close, but if it gets to TP3, there's a chance that it'll just come back and take stop loss. So that was just the added thing onto what they were talking about. Small little adjustments that you can make that indirectly assist with a singular issue that you have. Like that.
Yeah. There's a lot of different ways of approaching like re-entry. I think like generally I like to avoid re-entering personally, unless you get another valid pattern like you mentioned. Then I'm happy to do it.
That's the only time I'm happy to do it.
Yeah, and I think the only time you wouldn't want to enter again is if you have some rule where you won't take more than one loss a day or something.
Yeah.
But like in backtesting, you're probably going to be setting your risk reward tool on every valid entry that forms. So unless it's in your plan, it would just be emotion stopping you from re-entering the next entry. I know a lot of people who would they take a loss and then another trade would form a few hours later, and because they just taken a loss, they have a negative inclination and they decide not to enter it, and that one ends up going on to be a winner. And then, when they're reviewing their trades on the weekend, they're like, there was no reason for me not to take that second entry.
Exactly.
I was just feeling emotional and I didn't want to put myself in pain again.
Especially if it's not, like you said, especially if it's not in your plan.
Pain avoidance.
Yeah, if it's in your plan, then, that's fine.
Yeah, if it's in your plan and you've still avoided it, then you can start asking questions and start, trying to refine it. But if it's not in your plan, pain avoidance, in my honest opinion, is actually a good thing. It's kind of the whole point. Your plan is almost like a key to bypass pain avoidance.
Mm-hmm.
But I don't know. It's a tricky one because, when you're newer in your journey, pain avoidance is going to be there no matter what, even when it comes to your plan. And obviously that's where a whole different situation comes with backtesting, foretesting, confidence data gathering, etc. However, when it comes to actually looking at a trade and re-entering, I used to love scale-ins. Like, they used to be, even if I'd hit TP, I'd hit like a full TP, it'd come back to a beautiful pullback, and I'd scale in again. I'd be like, yeah, let's keep this party going. And then, I passed my first account doing that. It was absolutely wicked. It was an absolute stonker. But then I started realizing, I was like, okay, what's going on here? Because I started actually hitting stop loss on these scale-ins, and I ended up scaling in a couple of times because I thought I got the correct entry. My computer's about to die. I thought I got the correct entry, and I was like, right, okay, something's happening here where I'm getting my scaling criteria. However, there we go. However, for some reason, I'm just not getting in to TP. I'm not getting in the nice profits that I was getting when I was just allowing my one TP. And I started asking myself why. And I started realizing that I've not actually got a plan built around scaling. I was just scaling in to a position because it was the exact same strategy as my previous, but my previous had already hit TP. So therefore, why am I scaling in? Is it because of a pattern? Is it because there was a simple break, pullback, continuation ideology? When in real terms, the target that I wanted to hit had already been hit. So scalings during the trade were okay still. But I started realizing that when it comes to scalings, I'd overcompensated that bypass button. And instead of bypassing the pain avoidance, I was actually numb to the point where I was just jumping into fire. I was like, oh, yay, I'm invincible. It was almost like that overcompensation of that bypass. So I think you've got to acknowledge and sort of like find a happy medium.
Yeah.
Yeah, agreed.
I like your system, Richard.
The interesting thing here is I think I had 8 or 9 different, let's call it risk parameters per profit point. So let's call it 100%. You have 100% and how you can split it up, which would be the best in terms of its expectancy, the highest expectancy number based on a singular backtest of 6 months where I have backtested every single profit point. So the profit point never changed. So it was always a 1-to-1 for TP1, for TP2 is 1-to-2, for TP3 is 1-to-3, and a TP4 is a 1-to-4. That stayed the same. Exact entries, the only thing that I changed was what percentage of risk am I taking off of the table at each profit point. So it changed. It was a 40-30-20-10, then it was a 10-20-30-40, then it was a 40-20-30-10, that kind of like thing. So I was playing around with each profit point in terms of expectancy and profitability over the long run for those specific areas. And in that way, I had the exact same results for each profit point in terms of win and loss ratio. But my expectancy changed because the amount that I'm taking off at TP1 was different than TP4. And I eventually came to the point of saying, you know what, this is too complicated. Yes, there is a more profitable way of doing this. However, in the long run, it's becoming confusing because there were segments where the one was doing really well and the other one was not doing so well. And then it changed again. So there were months where let's say the 1 month where I had 40-30-10-20 was doing really well. And then for 3 months, that one was doing horribly again. But if you put everything together, it made sense. It was still quite profitable in terms of the expectancy. I just decided, screw it. I'm just going to stick to 1/4% removal at each profit point. And then I'll see with that. It wasn't the most profitable in terms of its expectancy. Its return on R per 100 trades was amazing based on the information that I had for that 6 months backtest. So I was just happy to do that. It simplifies it a little bit. There was some variance where it was like 3.2% return if all 4 TPs were hit. But if it lost, it was still 1%. So you would always lose 1%, but then if it reached TP1, how much would it lose if it hit TP1 and then went to stop loss, that kind of like stuff. That's why I put here, a full loss is 1%. So imagine it just goes straight to stop loss. It's 1%. It's always going to be 1%. Because I don't risk more than that across the four entries. Where if it goes to TP1, 1/4% of the risk is removed. You're getting 1/4% in profit, and then you're left with 2 more entries worth of 1/4%, which is, it then balances out to 0.5%. So TP1 hit, you have 0.5% of risk left on the table. Because the TP1 that you hit makes up for TP2 stop loss, and then TP3 and TP4 stop loss is still on the table, technically, if you look at it like that. So it balances out. I see Griff is doing the math in his head.
With TP1 being hit, so one trade is closing at
Yes.
0.25% profit.
Yes.
If then the other three trades go and hit stop loss, that would be
It's
negative
net loss of
0.75. I see. Okay, I got it.
Yeah, it's a net loss of 0.5% because TP2's stop loss is effectively covered by TP1's profit.
Got it. Yeah, I was thinking. It took me a second to realize that these are not like partial TPs. These are individual, each of the one trades TPs. So that one trade has a 0.25% TP, a second trade has a 0.5% TP.
Yeah.
How do you enter all these? Like, do you just do it really quickly on your phone?
No, I do it like this. So with the position sizer, you can have multiple take profit points. So if I just drag this down here, wait, let me make it longs. It shows it to you. So each trade is a multiple of the stop loss. So if the stop loss is, for argument's sake, 4,000 points on NASDAQ, which is $40, then it would be TP1 would be $40 or 4,000 points, then 8,000 points, then 12,000 points, then 16,000 points. And they were each, if I go to the trading tab, 25% of the total entry. I literally click trade once, and then
That's
it
great.
enters 4 trades.
That's very convenient that it's got all of the different targets lined up on the right there, so you can visualize it.
Yeah. Yeah. And the thing is, I can literally go say, this needs to be, before I do that, so this is currently at 0.5% risk. I'm not trading 1% at the moment, but you can kind of get the same idea. I'm going to go to 1% just to make it easy. So 1% would be $52. I'm going to round it down to $50 because this was a 5K account. So at TP1, it's about $13, then $26, then $34, then $51 for a total, if I go to the risk side, for a total of, on the right-hand side, 2.5 X my initial risk. So 2.5R. Now, if I go and I change this to 40, because this is a total of 100, 40, and I go to 30, and then 20, and then 10, that's 100. If I go back here, you'll see it goes down to 2X. Even though I'm taking more profit in the beginning and in the second portions, my runners are not as large. If I swap this around, 10, 20, 30, and then 40, it goes up to 3 times my actual risk. So the risk to reward ratio is a lot better. However, the expectancy at the end of the day does not really change all that much, because you still have only a portion of the trades that actually goes to 4R in this case, to TP4. So the ones that do run, they run great, but the times when I have TP1 loss, it's a larger loss. TP2 break even is a different story, but like you get the idea. It's like whenever I had straight losses, it's always going to be the 1%. But if it goes TP1, the ones that I'm locking up and then going back, it becomes a larger loss overall. So I might have a much deeper trend and then eventually like a spike of it hitting like TP4 and then deep trend and then spike, that kind of like thing, if that makes sense to you. So for me, at the end of the day, just having everything on a quarter just makes the most sense in terms of psychology. I'm looking at the trade, it's going into profit, it hits TP1, it goes back to stop loss. I'm like, it's okay, I've only lost 0.5%. Or in this case, if I was at 0.5% risk, I'm only losing 0.25% risk. So to me, it's just like, okay, that makes sense. Psychologically, I feel like it is more manageable for me when I do it like this. And those ones that eventually do go and hit TP4, I mean, that's a 2.5% trade off of a 1% risk. And I'm not changing anything. I'm not taking different entries. I'm just allowing some of them to run a little bit, but I'm still taking profits off of the table so that I'm at ease. Let's put it like that. Leaving something. I mean, once it goes to break even, who cares then? Like there's no way that this trade can lose. bar, like sudden news, and then it's just, I don't know, it just flies up and then
slip to the high heavens.
slips into the high heavens. But then at that point, I've already locked up 0.75% in profit. So, yeah, just this method to me just makes a lot of sense. And this position sizer, once again, it's a free to use platform. You can go and download it, and you can even have your break even if it hits like a certain stop. Like if I put there break even is 6K, then whenever my trade goes in and it reaches a certain point, it's going to, if it hits 6K, it's going to go to break even automatically. So I can literally just have that, for argument's sake, at 8,000. So if TP2 gets hit, it'll move it to break even for me automatically.
How come 8,000? That's the equity that needs to be reached.
Points.
I got it.
So
okay.
This is the in points.
But
this is on your NAS
This
strategy.
is always
as well,
changing, isn't it?
Yeah, but I mean, like if I have that,
Or just for the entry. Okay. Yeah.
just for the entry, that kind of like thing.
Cool.
Yeah.
Thanks for explaining.
It's very simple. It's a very, I don't know. It's like almost automated to the point where I just need to take the entry, and then after that I'm done. I don't need to manage anything else. I can just.
That's great. We were speaking last week about closing trades early and just automating the management as much as possible. So yeah, you can just enter and turn it off.
Yeah. I just make sure that my entry is good, and then I ensure that all of my take profits did indeed line up where they're supposed to. As simple as that. And then once that's done, I make sure that each profit point and stop loss is actually where I want it to be. Because obviously you can't always exactly get in at the right time. There's a little bit of slippage, there's a bit of spread, that kind of like stuff. So you're not always going to have these exact points. It might be a little bit lower or whatever. So I just make sure that everything is still as my expectancy. If I still want a 4,000 points or $40 stop loss, I will then just go and drag it. Even though I entered with 1% risk, but my stop loss was 4,800 points, I'll go and drag it to 4,000. And then I'll put TP1, TP2, 3, and 4 to 4, 8, 12, and 16, and then I leave it at that. And then I enter the 8,000, and then I leave it. And then I can walk away.
I like it.
Yeah, that's
Shane saying, I can't get the position sizes to work on my machine. I can't locate the file path they mentioned on the website. Okay, so there's a few people that have mentioned this. So you don't follow the path on the website. You just need to click here.
we need like a Richard Butler PDL, you know?
You click File, and then you say Open Data Folder. So Control-Shift-D. If you do that, it'll open up the data folder, and then you just follow the rest of the steps.
Yeah.
It's as simple as that. And then once you have that, you should be able to just drag it. So if I say here, there's the position sizer, I literally just drag and drop. And then I obviously have settings that I've saved up to make it visually more appealing to me. Like I've changed the long and the short color. I've made it the dark color as well. On the trading, the trade tab button is white, so it stands out a little bit. These colors of the stop loss and take profit things, I mean, I've changed that here a little bit. There's a lot of information here, but you don't have to be too worried by all of that. So I've just changed it up to the way that I like it. But yeah, in terms of where you can download it, you can get it from Forex. Yeah, you can get it from earnforex.com. Remy, if you don't mind just posting, I think we still do have the link for everybody to... You can go and download it. It's free to use. It works on MT5 and MT4. Simple, straightforward.
Yes, indeed. Like I was saying, it's pretty sick that it's that customizable as well. Like, not many things that you get completely free are that customizable. So it's pretty cool. You can literally download it free, set it all up, run it, customize it, make it aesthetically pleasing to work along with what you see in the markets. Rich, like yourself, you said that you've changed absolutely everything to make it work a little bit better for your eye. That's sick. It's super, super cool.
There we go. Thanks, Remy. So you can go and get it there at earnforex.com, MetaTrader Expert Advisors, Position Sizer. You can get it there. And then just download it, extract it, place it into your EA folder, and then there you go. But I would also caution, make sure that you understand everything. So read through all of the information that's on the website. Don't just go and input and say, well, because Rich said so, I'm going to do it now. Just go and read up about it first, and then figure out whether or not it's something that you could use.
If you do get any
for
issues,
trading.
make sure that you go over to rich.b at just
Don't do
returning that favor, my friend.
Don't do that. And you
Just
can
returning
have
that
pending orders, limit orders, market execution. You can literally change all of that stuff. You can have a monetary risk, so you can say I only want to risk $100 per trade, regardless of what the risk percentage is, or you can go risk percentage, or you can just go straight up lot size if you want to. But for me, it's nice because you don't have to think about the lot size anymore. I know how to calculate it, but I don't have to. I just have the position sizer just do it on my behalf, and I make sure that it's always 1% or 0.5%, depending on market. Like today, I know yesterday was a public holiday, and today the Tangerine tweet terrorist is going to send out some information, and I might be on the wrong side of it. I'm just going down to 0.5%. So yeah, I hope this makes sense. Go and try it. You can even use this with best of 3.
Have you been doing it for a while now, or just this past week?
I started doing this in March. Yeah,
That's great.
and
That's great.
and
I was
March.
gonna say, I remember you saying to me it was relatively new.
Yeah, so I would say I started backtesting this in the beginning of March, and obviously backtesting takes some time. And then I started working, while I was doing the backtesting, I started working on the different percentages taken off at TP1, 2, 3, and 4 until I found one that looked good. So I was left with 2 specific ones that were close, 2.5 to a 2.2%, and the expectancy was a 0.93 and a 0.89, which is great. So that were the 2 that I had left. Completed the back testing, and I thought, okay, let's have a look. And I started implementing it about midway through March, which is also where the majority of my winning trades came from. And that's how I ended up being 5% up for March. So haven't been doing a lot of trading in April so far, mainly because of holidays and the amount of setups that have not realized. Like now, the setup did not realize for me. I could have been in on this one. I didn't give me my entry criteria whatsoever. That's why I marked it up after the fact. So it could have been a good one, but it missed one entry point or one confluence.
I wanted to ask, changing the topic, unfortunately. You know,
I'll just go ahead and delete this.
It's so beautiful. Maybe take a screenshot first.
It's good. Yeah, I was gonna say maybe screenshot it and then post it on like the Fivers chat and be like, "Look, guys,
I'm a god trader."
I would make a great tweet, actually, like a Twitter thread. That would make a good Twitter thread.
That would actually, yeah, that would.
Griff,
Spark
you have a
debate.
YouTube channel. Why don't you steal this?
Yeah, I definitely could.
Look, guys, this is what brought me to a anyway.
Yeah, I wanted to ask, with the Pro
Quit
Growth
your job in
Challenge.
30 days.
Yeah. With the Pro Growth Challenge, I'm writing a video, and I just wanted to double check what the differences are. So there's the daily loss and the daily pause. There's the cheapest
Yes.
fee and
Yes.
the minimum profitable trading days. Those are the three things I can see on the website. Is there...
Yes.
I remember last week we spoke about the scaling was slightly different.
Yes.
Please,
So
could you explain
scaling,
how that's different, and also like if there are any other differences?
in simple layman terms, it follows the high stakes scaling plan. So instead of doubling the same way as the hyper growth would, this one follows, if you started with the 5K, it would go to 7.5, then 10, and so on and so forth. So it follows the high stakes.
Got it.
And then the other difference is, unlike the high stakes, you are allowed to trade news with the pro growth one. You can trade news with the hyper growth as well. So it differentiates between those two as well.
Okay, so hypergrowth and pro growth, you can trade news.
Red folder news. Yeah.
Got it. Okay.
Yeah. That is the main difference. It's got this. Everything else I think is pretty much the same, except the stuff that we've mentioned. I think
So
everything
daily
else
loss versus daily pause. It's got a smaller fee. They've introduced 3 minimum profitable trading days, and the scaling, it follows the high stake format rather than doubling every scale up like the hyper growth, which makes sense. Hyper growth. And then different from, worth mentioning, different from the high stakes is that you can trade news. So the one step is you can trade news. Cool.
So you can think of it like a hyper stakes account that is a one phase pass with news trading allowed.
So it's like high stakes,
and then
one phase with news trading. Yeah, cool.
With slightly less drawdown available to you.
Got it.
And without the daily pause. So yeah.
Maybe not that similar.
Crypto Knight saying, I avoid news trading, but lately that seems near impossible. Actually, it's still very possible. So when we're talking about news trading, we're talking about this news folders on Forex Factory. If you, for argument's sake, get a red news event like this 2 red folder events that we had earlier today on Financial Juice, these don't count as red folder news trading. So these, how could you have known? Nobody knew. So it's the scheduled ones. It's whatever is scheduled, that's red folder news. So, but I get what you're saying. Like there's so much like unexpected news popping up that it's just like, where do I go? You know,
that's literally what took me out my last trade as well. You know, I was in that EU short from last week, and it just took me out. And I was like, why? We haven't got any high impact news for the rest of the day or for a couple of hours. Like, what's going on? It was literally just sudden. What do you call it? The orange Twitter terrorist.
Yeah, orange, the tangerine.
I stand corrected. The tangerine Twitter terrorist. You just sometimes you can't avoid it.
Yeah, I meant a lot. In that case, those can't be avoided, mate. Like those, you just have to take on the chin. That's why I'm saying, when this crap is happening, reduce your risk.
100%.
Just go ahead and reduce your risk. Like, still follow your plan, but just at lower risk. It's going to
help you survive this.
I mean, the times that you're going to hit profit, you're going to be like, it could have been larger. But the times that tangerine terrorist is going to cause you to go to stop loss, it's going to be a sweeter stop loss. You're not going to feel like, I lost half of my account. No, you'll lose a little bit less. You have to adapt, and I think that's the important thing. Yeah, you have to adapt to the market, and in this case, unfortunately, Trump is part of the market. His tweets make it move, so you have to adapt to that as well. If you're going to go full send every single time with every one of your trades, and Trump comes ahead and, ruins that, you're going to feel like crap. And you're going to be like, I should have. You're going to blame Trump, obviously. That's a natural reaction. However, take control of your trading as much as you can. Whatever decisions you make, take ownership of it. And this is what I'm doing. If I know that there's a potential today that Trump is going to send out a tweet, I just reduce my risk, knowing that I'm at least preemptively positioned should his tweet come out, that I'm protected. That's pretty much what I'm trying to like allude to.
Yeah, 100%. It gets to the point where you will have to question like whether you're actually just not trading for like months on end. So, it will get to the stage where you're like, in all fairness, I actually need to trade this at some point, like that. But if there's no high value setups, like A plus setups, maybe it's actually worth like putting that like strategy into a filing cabinet and then restarting with a complete new strategy that works alongside the complete obnoxious volatility of Trump.
Yeah.
So
Exactly what I'm
that's
doing.
yeah, exactly. So that's the best thing you can do. Like at the moment, for me, I'm still finding setups once a week, maybe. This week I'm not trading at all. I've given my reasons for it. I'm flying back to the UK. All this yada yada yada. News, Trump, flights, packing, apartments, etc. So I'm not trading at all this week. I'll just analyze. However, last week I didn't see anything. I saw one opportunity on EU. Week before, I think I may have had two opportunities. So there are opportunities still presenting itself for me, but I'm significantly lower in my risk. The minute I see an opportunity that maybe, for example, that this war is over completely, which will be a very good day socially and fundamentally, and as traders economically as well. So when that day happens, and hopefully I get out a little bit of depth on my drawdown, I'll be full risking again. I'll be back to full risk. But for now, it's survival mode.
Yeah, it's adapting to the market and realizing that this is not prime Will Davies's trading conditions, and it would be silly to try and force it to be. So I love the fact that you're making adjustments, and I think everybody should do that. You should make adjustments. I'm not saying make adjustments every single time you're looking at the market, just kind of like in the sense that adjust when you realize that the market has changed to the point where your strategy is at risk of being unprofitable. And you will notice that very quickly, like for argument's sake, Daniel is saying he's getting battered at the moment in the markets. Sorry, I didn't mean to accidentally hide it. If you think of it like this, you do backtesting and you realize that there's a sequence of trades that you lose. Let's say it's 6 trades. It's the maximum sequence of trades that you lose in a row. Doesn't mean that you're never going to not lose more than 6. You can lose more than that. But like on average, you shouldn't be losing more than 6 according to your strategy. If you start losing 6, 7, 8, 9, 10, at what point are you going to turn around and say, maybe I should make an adjustment?
Yeah, fair. How many accounts do you have to blow? Like, because I see so many people will full risk, and this is actually quite common. I didn't realize how common this was until recently. Some people will literally full risk 1%, 2%, whatever their full risk. Let's call it 1%. They'll full risk and then they'll blow an account. It's just how it goes. It's how it goes. Buys another account, full risk, blows an account, full risk, blows an account, and they just keep like farming these accounts but negatively. And I'm like, well, dude, how many accounts do you have to blow and how many trades do you have to lose per account blowing before you start realizing that, hang on a minute, perhaps I need to either step back, or perhaps I need to move over to a demo, or perhaps I need to actually look at this and think, at bare minimum, let me reduce my risk just a little bit to see if I can survive this a little longer. Otherwise, you're just going to be chucking good money after bad.
Yeah, I mean, you have a total disregard for not only the account that you're trading, but also for your own practices. Yeah. You have a total disregard for, for money, which some people say is a good thing when it comes to gambling, but not when you're doing something where you want to kind of like have a career.
I was going to say, the keyword career.
We can't all be Griff. We can't all be making 80% $1 million accounts. Dude, I'm just joking. Like I'm just yanking your chain, mate.
Yeah, we can't all be making like 80 grand in 1 week and then never trade for the rest of the year,
I'd rather not be doing that as well, to be honest.
How stressful is that? Knowing that
you must be so stressed earning all your money and going on holiday for the rest of the year. I would hate that so much.
No, I meant like on a trade to trade basis where you're
Yeah,
like,
it's-
okay, I've just lost 1%, I've lost another 1%, I've lost 10%, and then this next trade is just like, oh, it's sitting at 40% in profit. I would be like, it's going to turn around. I'm going to take profit now. You know,
Yeah.
that's what I mean.
It's why I got a job, because I was like, I can't depend on this.
Yeah,
I don't know when I'm gonna get paid next. It might be.
I'm a
it might be
full-time
next year.
trader occasionally.
Yeah.
Yeah, do you know what the best thing is? I love this about Griff. It's like, I earn a full-time trader's income. What? So are you a full-time trader? Nope. What
What is a full-time
what does that
trader's
mean?
income?
It's like, yeah, like you said, you just don't know when that's gonna happen. Like, Griff, you could earn like double what me and Rich earn put together. But if you're not going to earn that until the last week of December, how are you going to survive like January to like end of, or January to halfway through?
I might
December,
get so stressed
Like, how are you?
that
Yeah.
I just missed the trade that would have made me all the money in the first place. So yeah, it's worth having another
Exactly.
source of income to alleviate that stress, because then I can trade really effectively and get those rare, massive winning trades. But yeah, I do not want to be trading like that. It's funny. I think I mentioned a bunch of times working on all of these different trading strategies. There's one that I worked on. I really loved it. I was trading like V's basically. So when price started
V-shaped recoveries.
retracing, when there was a sharp shift in momentum in the opposite direction, I'd just take a buy. And it looked great. The P&L was all good. And then I got to the end, and it's like another really low win rate strategy with high risk reward. And I'm like, damn it, that's the opposite of what I'm trying to create. And
I'm trying the
tried playing
opposite.
around.
Ugh.
Yeah, I tried
Imagine-
to change it so it's 2R and 3R, and then it just doesn't work nearly as well anymore. I was like,
Yeah.
like the best thing is high risk reward with this strategy, but I don't want to do that anymore. But yeah, I got another one, which is the mean reversion. And this is actually a strategy that my friend started working on. He was like, hey, you should join me. We can, finish it twice as fast. And that's all right.
That's why he wanted you to join him, isn't it?
Yeah. But that has a 60% win rate in backtesting. So hopefully like a 50% win rate live with some mistakes, and that's like 2 or 3 hours per trade. So I want to...
Oh, that's very profitable.
Yeah, it's great.
Yeah,
But
that's
I don't like it, but it works so well.
You know what?
I've got to develop that. That's what I'm going to be trying to trade live.
I kind of rate that the most. So, I used to love a strategy, and I used to love trading because it was exciting. But it wasn't my most profitable strategy, and it didn't work for that long. However, my strategy now, it's okay. I could take it or leave it. I don't really care for it. It's all right. It's a strategy. I've lost all emotion to it, but it's a very profitable strategy. And I started thinking to myself, like, you know what? If it earns me money, I really don't care. I don't care what it does as long as it earns me money. I don't need to like it. But speaking like listening to this conversation now and speaking about these things, I remember when I was in school, we used to have a saying called "posh people problems." And these were problems that your average Joe wouldn't have. They're privileged problems.
We call them first world problems, mate.
Yeah, exactly. Yeah, exactly. First world problems, sort of thing. And I just can't help but think, we're here complaining about being profitable, wishing that it was a different type of profitability. When most people are out there just being like, I would give anything to be profitable. And it just goes to show the grass is never greener. Like, you're always trying to refine and be better and earn more, or earn as much, but in a different way, or a better way, or a more freer way. So for those people out there that are like, once I become profitable, that's my life sorted. Dream on. once you become profitable, you'll try and find a better way to be profitable. So
Yeah, it's
Never
always a
ends.
battle to stay profitable as well. It's not
yeah,
just like I've
yeah,
achieved profitability, I can now sit on my hands, mate. No, that's when a new level of work pitches up.
yeah, literally that. It's funny to listen to, man. It's funny to think about.
Yeah, because this strategy, it's like, I guess I think the reason I don't enjoy it is just because I feel inexperienced in it. I think the strategy I've
Okay.
traded so long, I'm super knowledgeable about it, and I feel really comfortable trading it, even though the performance hasn't been great this past year. And so having to trade another strategy, I think it's just discomfort being a newbie again, because I guess like you said, it's better to trade a strategy you don't enjoy that's profitable than one you do enjoy that isn't. So yeah, I'm in that kind of
Mm.
position. Interesting.
And
It's
I
it's
rate
weird
that,
to me,
man.
mate.
Yeah, it's almost like that. Yeah, like you said, it's almost like feeling like you're a beginner again. It's an uncomfortable position to feel. It's an uncomfortable position to be in when you're starting something complete from scratch. When you're starting something from going from I know everything. I know everything I need to know about my strategy that works for me now. To your strategy still works. It's still a good strategy, and you still know everything you need to know about that strategy now. But it's almost like you feel like you're changing it for no reason, even though there is a good reason that you're changing it for. It's almost what's the word? It's it's not Stockholm syndrome. What's the word I'm looking for here?
It's most certainly not Stockholm syndrome, mate.
Yeah, well,
Most certainly.
there's no, I know. There's a saying for. I'm hoping that I can throw just like these sorts of words out and it'll ping my memory in.
Yeah,
I
all
can't
I'm
think.
thinking of now is Stockholm syndrome. Who's my
Okay.
captor?
Yeah, okay, fair. Yeah, fair.
Who's my
Yeah,
captor at this moment? Who
yeah,
can I
yeah.
imprint upon?
Yeah.
Uh,
I
you're gonna go?
I've got to go now, boys, unfortunately.
Did you enjoy your lunch?
Yeah, I'll be eating lunch at the computer now.
Well, you're already there. You just need. What is lunch today, by the way?
What do you mean?
What is lunch?
Oh,
What are you having for lunch?
bacon and egg bap, I think. So
Ooh,
it's a good one.
nice.
One of my
Nice.
faves. Yeah, I'm looking forward to it.
Awesome.
Imposter syndrome?
Oh yeah, I think that's what you mean. That's what you're
Yeah,
thinking.
Am I
yeah.
thinking of imposter syndrome?
I think
That's
you
what I
are.
mean.
That
If I can
sounds
just
familiar.
throw a bunch of syndromes out there,
Dude, I'm going to
maybe.
gaslight you and say you're
Not
not
too many
thinking of
syndromes.
imposter syndrome.
Yeah, I think imposter syndrome is what you
Thank
were
you.
thinking of.
You were thinking about gaslighting yourself, mate. Anyway, Griff, thanks
Griff, can
again
you
for
say in
joining.
rich goes? Can like
Thanks for
Enjoy,
having me,
Griff.
boys. I'm looking
no,
forward to speaking
Griff,
to you both
pleasure as
again.
usual, brother. Have a great one, man.
Yeah,
Bye.
maybe we should join you on your YouTube channel one day. I know will.
Yeah, that would be fun.
Yeah,
I should
that'd
do
be
a live
sick.
stream.
Dude, that'd be
See ya.
sick.
Cheers, Griff. All
We can
right,
all have
Usels.
Stockholm syndrome together.
Yeah, we can all have Griff syndrome. Mate, do you mind taking over for a little bit? I need to take a quick little break. Go to the little boy's room.
Do I mind? Yeah, actually, I do. I'm joking. Yeah, go for it.
Thanks, mate. I'll be back in 5 minutes. I'll be back in
Yeah,
5 minutes.
yeah,
So.
yeah, sweet. No worries. What is good, people? How you doing? Yeah. So, guys, I've been a bit flat in the market today, and I mean not even flat as in neutral. I mean flat as in I just don't feel great about not trading. So, we were chatting about that, and I feel like it's really relevant. We all feel like this sometimes, but to me, I don't really often feel this way because in my live trade, like in my personal trading, I trade once a week, once every other week, and I don't trade that often. I'm very patient. Whereas on live stream, when I'm trading my 100k live account that I trade with, usually I'm trading every single day. And I can find a setup every single day. And recently I've been struggling to find a setup because I still want to take high value setups because, I passed phase 1, I passed phase 2, and I'm currently trading a live phase 100k account. And it's got me to the point where I'm like, I still want to trade a high value, high probability A+ setup. But even when I'm streaming at the moment, I'm struggling to find one, and it's getting to the point where I'm like, I want to see something, but I'm not seeing anything. So I wanted to be selling euro and pound. So we had Asia highs around here somewhere. In fact, so Asia highs. Let me just get rid of this. I think Asia highs were around here. Dum, dum, dum. In fact, let me just get my... So I use Lux Algo. So let me just get my Lux Algo up. Bosh, le bosh. Guys, I do apologize if you can hear me clicking the cursor. Like I said, I've packed away my streaming setup. Everything now is what is going on my overhead luggage. So I've not got a keyboard or a mouse. So, as you guys know, I like to see some form of sweep in sessions. And, we had London highs here as well, which we swept. And, okay, so we had this sweep. We didn't have the break and close below. But what we did have... Oh, this is going to be hard to try and draw with now. So we had this consolidation after sweeping the... Don't even know what that is. The kidney bean. The Tokyo high. And then we got this massive push up here. And I thought, okay, that's, it's something. We came up. And then we swept the previous London. So yesterday's Monday London high. So I thought, okay, cool. Obviously we've swept New York as well, but I don't really care about New York because I don't get the opportunity to trade it. But next week I will. I am buzzing, guys. From next week onwards, I will be back and able to trade New York session, and I'm so excited about it. I get my standard trading hours back, so I'm very excited for that. Anyway, so digression over. So we did sweep the London highs from yesterday, and we also got the sweep of the previous session. Oh, I forgot that I've got that up. There we go. So we also swept from the Tokyo. Consolidated a little bit. I wanted to see a break and close below this zone. Now, there was going to be two areas for me that made me think, right, okay, so we've got a consolidation, and two areas could have validated this on the consolidation. We could have had the consolidation break and close below, which I thought we got here, but then ended up getting here. So if I just go with consolidation break, there we go. So let's just draw across. That candle close / open was the break and close below this consolidation zone for me, validating a potential shift in structure. Now, we also had this area here. Let me just go and try and delete some stuff. There we go. So we actually had this nice little area here, which told me that we could potentially come here and move up. Now, the reason for that was the reason I didn't like this slowdown in momentum. But then we got this area here. We got this nice little area where we broke and closed under the very low wick, the very wick low of this little area that I've marked out, this sort of pullback order block, should we call it? Or base. I'm pretty sure this was a base for Rich. So I thought, you know what, that's pretty cool. I quite like this. What's going to happen next? And then we got this massive move down with a wick that tapped into this area, which in fairness, I would have actually liked to be TPing at. So of course, we've got the Asia low down here. Honestly, I would have liked to have, I would have liked to have seen something along the lines of this. So it kind of frustrated me that we missed it. But I didn't know if we were going to get it. Something along the lines of this. So we got this massive wick down, and it kind of just invalidated it, So this area here, I would love to have seen price come down to here pull back, and then continuation. That would have been really nice, in my opinion. However, we just didn't quite get nice price action. We kind of just got that price fumble, should we call it? We just sort of fumbled price. We came down, slowed down at this area, sort of hinted at the idea that we could move back up. And then we wicked down, pulled back, wicked it, didn't break and close below, eventually broke and closed below. Then we wicked down again, missed the TP, so we didn't quite tap into this area here, which we could have continued up from. Missed it completely, consolidated and starting to move up from, and now we're just wicking up, wicking down. How can we trade this price action? So for me, there's just been no nice trade, no valid trade, no trade that I could have thought to myself, you know what, bosh, this is it. If I wanted to have that B set up, that break, my gold break and close below the, or break and close of the consolidation setup, I could have gone for a bang on 1-to-1R with the break and close with the open of the new candle after this consolidation. That would have been really nice. We would have come down. We wouldn't have hit a 2R. We would have been stopped out at break even, or we would have had that break even bounce. But what would I have done? Especially that we came down all the way, pretty much hit the TP, but not quite, and then wicked it, and then came down, consolidated, moved up, and had that break even bounce. For me, price is what it, yeah, it's just, I don't know what to say about it. It's invalid, it's ugly, it's slow, it's fumbled. It's complete fumbled price. Same goes with GU. GU looked quite nice, if I'm being honest. GU actually looked nice for sells here. There we go. So we got this consolidation after coming up above Tokyo highs. We broke and closed below the consolidation, but we didn't get the pullback up into this zone. And then, bosh, price just moved up into the, that bullish move. Although, we were channeling to the upside. So it would have kind of been a B setup because we're counter trend trading. But then we consolidated a little bit, broke and closed below, and just continued. Only here did we start consolidating. So GU for me was a big no-go. Wasn't even remotely interested in trading GU today. EU would have been the only opportunity, but like I said, price just fumbled.
Yeah, and then the Tangerine person also went ahead and tweeted just now, about a minute or so ago, saying
Makes
whole
sense
civilization...
Yeah,
whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. Which is kind of funny coming from him. He doesn't want it to happen. However, he has the reins to make it not happen or make it happen. I mean, where's the...
Well, man, it's...
I don't want it to happen, but it's probably going to happen.
I'm going to see if I can find that tweet on my phone now.
Yeah, you can literally just go to...
Is it Trump's official page?
Yeah. Yeah, it's Trump Truth's channel. Trump Social.
Trump. Donald J. Trump.
The real Donald Trump. Yeah.
Just looting it.
Yeah, a whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. However, now that we have complete and total regime change, where different, smarter and less radicalized minds prevail, maybe something revolutionary, wonderful can happen. Who knows? We will find out tonight. One of the most important moments in the long and complex history of the world. 47 years of extortion, corruption, and death will finally end. God bless the great people of Iran. You know what's really funny?
I mean,
I'm bring this up. I'm just gonna bring this up. Look how many retruths it's had. The number of the beast. Anyway. Only 2,000 people like this?
Did you think there'd be more?
Anyway.
Dude, wow.
Yeah.
Wow.
Yeah, real
who?
ECC, mate. What times are we living in? Who would have thunk? You know? We'd have everything. You know?
You know what, as well? It's... You gotta... That's a big statement. That's a big thing to say. You don't just... Don't casually say something like that.
Dude, what are you thinking? Like, just saying that. Like, you start off at... Like, who are you trying to fear-monger into doing... Like, orange times we are living in. Yeah, very much. We're all living in Trump's world. We're just part of the Trump simulation. What? Dude, I don't even know where to go from this. Like, it's like saying...
I was literally about to say...
It's like saying, I don't want to cook an egg today, but I probably will. You know, I don't want these eggs to die. You know, a whole tray of eggs is going to die tonight. I don't want that to happen. But it probably will. Like, it's like saying, like, I'm going to make myself breakfast for dinner. It's the same thing. It's like, I can literally choose not to make breakfast for dinner. I can literally choose not to.
I know.
It's in my grasp. Here it is. I can do it. And then you turn around and say that.
Just what's worrying is that he's saying this clearly to try and scaremonger a deal. But clearly, you know, he's obviously trying to scaremonger some form of deal in.
Yeah.
However, what if there's not a deal? The man's got to follow through.
Yeah, or he's going to be seen as the world's greatest chicken.
Yeah. And I mean...
And do you honestly think that... well, I don't know. Like, who would know? Who knows how the mind of a child works? Well, no, I think that's being rude to children. Who knows how the mind of a deranged orange person works?
Yeah. There's psychiatrists out there having having a field day, getting their doctorate over this, I swear. Yeah, so.
Abradolf Linkler, if you see a bright flash outside, sell. Mate, like, we live in interesting times. Dude, that's all I can say. It's just interesting times.
Yeah, I mean, fact. Yeah, true that, man. True that.
I mean, you're getting first-hand experience of market craziness ever since Trump entered the conversation. It happened with the tariffs tweets. You had to adjust. It's like really changed my viewpoint on trading in the last 4 or 5 years. Has been molded in a completely different direction in the last year to year and a half. It's crazy. Like, what I thought was trading, so far from what it actually is. So far. Thank you, Trump. I can say that. Thank you to Trump for that. You know, you've changed my viewpoint.
Silver linings, guys, I suppose. Silver linings.
Yeah, it's this. It's like saying, I gotta do this. Might not happen, but probably will. It's just like, but you're the one in charge. You're the one that can. You're the master of this decision.
Yeah.
I don't know. It might be a bittersweet moment when this will ultimately be over in the future. We traders will miss the Trump's tweets era. I mean, we'll look back at it with reckless abandon and be like, I hated the fact that I liked the fact that he was tweeting, and then there will be some that say, I love the fact that I hated the fact that he was tweeting. It's gonna be all over the place.
Yeah, I don't know if we will miss the whole Trump situation, but we'll certainly look back at it with some form of story. We'll certainly look back.
government
Do you
shutdown.
remember the days?
Government shutdown. Everybody was like,
Mhm.
"Oh, I hate this price action." Okay, cool. Let's have the tariffs tweets. Oh, I hate this price action. Okay, fair enough. Let's have another government shutdown. Government shutdown. Oh, I hate this price action. Okay, let's have war. Oh, I hate this price action. Just admit you hate price action, mate. Like, you just hate it.
Just say you hate trading.
Say you hate trading. No, but
I'll say it.
to be fair, this is like boots to the ground running, learning about trading. Like, if you can get through this
Yeah.
tumultuous period in trading, and come out on the other side, you would probably be a better trader for it, because it's just a net negative experience, but you learn from net negative experiences. Yeah. Yep. Our everyday lives have been at the mercy of an unpredictable, crazy orange old dude playing chess with financial markets using geopolitical gameplays as fuel. Exactly. Do you have control over it? Nope. Do you have to like it? Also nope. You don't have to like it. Can you do something about it? Nope. We can't do anything about it, unfortunately. That's out of our hands. What do you have control over? When you choose to take a trade, what risk you plan to put onto that trade. And that's the only stuff that you have control over with regards to trading /Trump is that. And we have to live with that, because that's the only thing that we have control over with trading right now, in any way. So I would just say, yeah.
Do you reckon he has to see a psychiatrist just to make sure his mind's sharp? Do you reckon like he has to have daily visits with a psychiatrist just to make sure that
this is the same person that you said, or this is the same person you're talking about that sent out a tweet or spoke about candidly his IQ score when it in actual fact ended up being a dementia.
That's kind of why I've asked it, because if you remember, like, he kind of went in on Biden, basically saying that he was a dinosaur, he was a fossil, and he doesn't know what he's talking about and where he is. And then like you have him bragging about his IQ score, and then you have him saying deranged things like this, and then I think to myself, like, he'll be a case study in like university psychology classes one day.
Dude, Nikola Tesla was viewed as a crazy person when he was talking about all his electrical theories.
Yeah, facts.
Now,
Yeah.
I'm not comparing Trump to Nikola Tesla. I'm just saying.
I mean, I'm waiting
there's
for
a very
I'm waiting
fine
for the
line.
big revolution. Yeah.
Yeah. There's a very fine line between crazy genius and crazy psychopath.
Yeah, crazy
just like-
genius and crazy like padded bedroom crazy, you know?
Straight jacket, hopping around against walls, don't harm yourself, kind of 24-hour surveillance, just that level of stuff. Yeah, I was about to say his psychiatrist is probably seeing another psychiatrist for himself. Yeah. Paulo Santos is saying, rumor news are meant for manipulating markets. Good time for market makers. Yeah, probably. Where's LJ today? LJ had a personal matter to attend to, so he requested some time off. He's good. You'll see him all tomorrow, or you all will see him tomorrow. But for now, LJ is just taking some personal time. So you guys will see him tomorrow. We also have Victor and Samir that will be here this afternoon in the next 10 minutes or so. So, yeah. That's why you got to see my ugly mug for as long as you have. Just standing in for LJ.
Nice.
Orange Head is the best example of a narcissist. Yeah, just don't tell him that. He won't believe you he's a narcissist.
No, really? I don't know. If you tell him in a certain manner, he might.
I think he lives in a nihilistic world. Like, his viewpoint of everything is he's a nihilist,
Yeah. Whatever world he lives in, it ain't the same as the one we live in.
We're all living in the Trump Tower. That's the universe we're currently living in. It's the Trump Tower, and you're all fired.
Yeah. Yeah. This goes to show, it backs my point up with how can you trade these markets sustainably, predictively, and consistently. Because I just finished making a short reel on this actually for the guys at the Fivers. So you'll see this on Instagram like in the next couple of days or week maybe. You can't predict this. You can't consistently trade this, and you can't sustainably trade this. The best thing you can do is lower risk, stay out when you know he's awake, and maybe move to a country that isn't in blast radius of the US or Iran.
Dude, just excuse me for a second.
Yeah, sweet. Yeah, no worries. Yeah, so that's in my opinion the best thing you can do to just look after yourself in the market. Like look at this price action. I struggled to describe this price action a mere 20 minutes ago, or 10 minutes ago maybe. Even now I'm still struggling to describe this price action. I wicked up, wicked down, complete indecisiveness, bullish, wicked up, closed. If anyone out here is trading candlestick patterns and like the actual patterns of the candlesticks, you've got to be probably one of the most unprofitable traders out there right now, because these candlesticks are not patterned at all.
Sorry, mate. I had to go and save a gecko from my cat.
Fair. Tropical problems, huh?
Yeah, I just look over there and I see my cat is like attacking a gecko, and it's not a very big one. It's about this size, but like its tail is just already like flopping all over. It's already like lost its tail. So it's just like, oh, save it quickly.
Yeah, fair. Poor gecko.
Yeah. We do have a lot of lizards and geckos here, like many.
Oh, really? Yeah, fair. Do you know what? Yeah. I've not seen any in Hong Kong. I thought Asia would have more. No, that's a lie. I saw one lizard. I've seen one lizard in Hong Kong. I thought I'd see more.
I almost said something there. I almost said something there. Glad I caught myself. Yeah, caught myself there saying something.
Well, now I'm curious. I'll go on DM. At least PM me this. At least private message me.
I'm gonna private message it to you.
You're gonna have to. Yeah. Yeah, but yeah, I thought I'd see more. I thought I'd see more lizards out here, because like every time I go somewhere tropical, every time I go somewhere sort of humid or hot, it's filled with lizards. I've seen monkeys, I've seen wild boars, but not once have I seen a lizard. Yeah.
Anyway, markets are.
That's probably why. Yeah.
Yeah.
Oh, that's maybe giggle. Anyway, I think they eat them all.
Yeah.
So,
I'm not racist.
Any more trading opportunities, Rich?
No. To be dead honest with you, if I just bring up my chart, I was having a look at gold. This is what we marked up earlier.
Seen real GCP saying markets are having a stop loss party. Yeah. Sounds about right. Sounds about right.
I think it was something more like that. Anyway, this is what we had marked up. We had an ascending channel as well as a little bit of a upper flatness to it. So with this stuff that that we were seeing now recently, it was on gold was the idea that we want to see some sort of reaction on either one of these 2 points. So we either wanted to have a reaction here to try and push price lower, or we wanted to see a reaction down here to try and push price up. So you had two trading, let's say you had 4 trading opportunities basically. So 2 on either side. So you either had the break, retest, continuation, or you had the touch and start pushing lower, or you had the break, retest, continuation, or you had the touch and try and push up higher. So that's effectively what you had. Now, the first one and this bottom one just, it never played out. We never got the break, we never got the retest. What we did have was just the ranging aspect of it. If you go down to the 15-minute, you'll see it nicely. Slowed down, reacted. There was a potential entry point here for my strategy specifically on this bearish candle over here. So for those of you who know how I trade or how I look at trading, not that I'm trading gold at the moment, but you get the idea. It's a reaction off of an established area. In this case, this is what I deem an established area. Establishment, reaction, reaction, trying to push lower. So this is an established area. Okay. Reaction off of an established area. In this case, we had slowdown. So you can see multiple wicks above, not quite the same volumetric movement as you had with these candles over here. And then an attempt to try and push lower on this bearish candle here. Then what you have following that is an attempt to try and push price higher, and then a failure. And then what I would have wanted to is be in on that candle, preferably have my stop loss either a static stop loss or just above the last swing point, and then look for either a 1-to-1 or a 1-to-2, that kind of like thing. That's generally how I would have traded if I was trading gold. And the same idea persists for the opposite side now. So you had the reaction all the way down here on this channel. You had the push up, a reattempt to try and push price down, and then another bullish candle. So in theory, I would have wanted to be in over here with a stop loss down there looking for a 1-to-2. Now, unfortunately, in this case, it's midpoint. It's like smack bang in the middle. It's very close to where the sell opportunity was. But in this case, I would not be able to get a 1-to-2. I'd only get a 1-to-1.5. So on gold, this would have been a potential buy point for me, but I don't trade gold anymore. So don't take my word as gospel. But this was kind of like the idea. What I would have loved to have seen was actually a break lower, retest and continuation, and then I get in on the continuation. Or a break above a retest and continuation, and then I get in on the continuation. That's what I would have wanted to see. But we just didn't get any of that. So in this case, gold to me is not tradable at the moment. It's smack bang in the middle of this range. I mean, if I take the bottom to the top, where the text is, that is the midpoint, and we're pretty much at it. So this whole range that was created with the London session, I can't trade it. It's untradeable for me at the moment. Or I can literally just take the movement of the day so far, and then this stipple line is the midpoint of this channel, and this is where we're sitting. It can just as easily start pushing lower now, or it can just as easily start pushing up now. So to me, when we were talking, myself and Pedro earlier, we were talking about gold being very much in that midpoint, waiting for a breakout and a reaction to push higher. I mean, I can see us coming down here again. We can try and push up from there, because that is the channel. That is effectively what the channel has been doing on gold. From Thursday last week. Obviously, this is, along with yesterday, it's the first open market. All of the banks and whatnot are participating. Didn't have the market participation from the banks yesterday. So this is the first full trading day, let's put it like that, where all of the markets are completely open. And even with a full trading day, we are kind of just wicking these little areas and just struggling. We had the breakthrough, but no follow through. So it's just difficult. It's really difficult to kind of pick a side and say this is where I want it to go.
Yeah.
So
Exactly.
Caveat, according to my trading strategy, according to how
I was literally about to touch on that as well, because we've got, Usman saying, well, random chances can have 50-50 win rate, so how can candlestick patterns have less win rate than random chances? Well, I'm not talking about random chances, I'm talking about probability stacking. I don't talk about random chances when trading, because that's just complete gambling. I talk about probability stacking, and if you've got a strategy that relies on candlestick patterns as a probability stack or as a confluence, then you're relying on something with a complete unpredictability. That's all that I was referencing. But again, candlestick patterns can mean a whole lot of different things to different people. In my opinion, candlestick patterns aren't valid or relevant right now because there's so much volatility in the market that sort of can be sprung like that truth be told, the candlesticks aren't respecting what necessarily true price may mean. It's potentially reacting to what's going on fundamentally, globally, geopolitically, and stuff like that. So that was my reference to candlestick patterns. Again, it depends on what time frame, depends on how you trade them, depends on a lot of variables. But then we've got comments like Carl saying, I've banked 52k from gold in the last 2 weeks. Everything is tradable. Big well done to you, my friend.
Yeah, no, agreed.
100%.
I agree with that statement 100%.
Yeah, and that is what we're talking about. That's what we're discussing, is the fact that everything, of course, is tradable 110%. Baron Trump made God knows how many millions in the market after the whole insider trade and manipulation of the markets, etc., etc. We didn't make money on that, but he did, because he's got a strategy that coincides with what's happened. So therefore, if you...
Yeah, what a way to say that. He has a strategy. His strategy is Daddy is going to tell me what he's going to tweet tomorrow at 12 o'clock, and I'm going to position myself based on that.
Exactly. That's still hey, you went and discussed what a bias was. That is still a strategy.
Yeah, I mean, fair.
Yeah. No, 100%. Everything is tradable, of course. For as long as you can open a buy or a sell position, it's tradable. And if you can make sense of it, then feel free to trade it according to your plan. And if you can make a 52k return in the past 2 weeks, big congratulations to you, my friend. What would worry me, according to the idea that you can make such a vast amount of money, again, depending on your account size, depending on what that R ratio is. So,
many variables.
I don't want to say I don't believe you, but the fact that you can make that sort of money on an account in the past 2 weeks during this sort of volatility, you would have to have potentially either a massive capital, or you'd have to have a massive risk on mindset. And then even if you were a good enough trader to do that, you'd be talking to us in R value, not in dollar gain. So I'm not saying I don't believe you, but there's validity issues with it. So yeah, 100%. There's definitely chances that you can make that sort of return and that sort of gain. What would worry me about someone who can make such large gains in these sorts of super unpredictable, volatile markets is what happens when the markets become a little bit more predictable, a little bit more consistent, and all this, gamblers heaven sort of dies down and becomes a little bit more predictable. That's what I would worry a bit more for those sorts of people.
I just wanted to also just come back to this one that Usman said. Will random chances can be 50% win rate? Can be. Or can have 50% win rate. Yeah. So how much candlestick patterns can have less than win rate than random chances? Random chance, when you're talking about chance, you're talking about what?
Unpredictability,
probabilities.
Yeah.
Probabilities. And probabilities are dependent on what? outcomes. Okay? A coin flip can be 50-50 because you have two outcomes. Okay? So it depends on the amount of outcomes that is available to you for that probability. So a candle has what? It can close bullish, it can close bearish, or it can close
Indecisive.
indecisive. That's three potential ways that a candle can close. Meaning you have three outcomes, which is not 50%. So if you have even distribution across all three of these probabilities, then you come down to 33%, continuous for each one of them in terms of probability. But that doesn't mean that it's always going to be a 50-50 when it comes to chance. Chance is dependent on the amount of outcomes related to the subject. If you look at roulette, also a game of chance, depending on if it's a single zero, double zero, triple zero, you can have 37 numbers to 39 numbers. And each one of them has its own probability, the same probability of getting hit, but it's not 50-50. So you have to always consider the amount of outcomes when looking at probability of chance, and it's dependent on which field you're looking at. So trading, unfortunately, is not a 50-50. Candlesticks is also not 50-50 because there's more than one outcome.
Exactly.
More than 2 outcomes, sorry. Hello, Victor.
Yo, Victor. Carl's saying 30% of my account. Carl, all I'm saying, man, is if you want to be taken a little bit more seriously amongst a little bit more serious traders, then talk percentage in our gains. It's when people talk dollar gains and dollar values, it either seems influencery, it seems scammy, it seems fake. I'm not saying I don't believe you, like I just said. I just want to clarify. Not saying I don't believe you. You said here, good day, Victor. You said here, I could send a print of my MT5. I would love it. Would love to prove it. Dude, I'm sure you would. Bro, I would also love to prove that I could, earn 52K in 2 weeks. Absolutely. Like I said, big congratulations to you. Not saying I don't believe you. I'm just saying if you want to be taken a little bit more seriously, talk R ratio and talk percentage value.
Off topic. Kanye West blocked to visit UK. Thanks, Unbiased Trader.
On that segue, what is good, Victor? How are you doing?
Useful information for our trading edge.
Yeah, I mean, if you were trading Kanye coin, then yeah.
Is there actually a
Does he
Kanye
have
coin?
one?
Are you pulling me?
No, the guys, I'm just.
I was going to say, oh my god.
Hi, everyone who is watching or listening in. How are you two guys? I came in silently like a ninja watching you guys talking about probabilities and not believing a 52K, or at least not very convincing of the 52K profit made by a viewer. Hello.
But that is because Will
guys.
is just a non-believer. What's up, Samir?
Why? I'm not saying I don't believe him. I'm just saying, to get a bit
Will,
more.
you straight up called him a liar, mate. Like straight up. Like,
call him a liar.
Carl, if you want to take legal action against Will, send an email to will.d.
Will, I think you meant it well. But somehow I think in between the lines, it sounded like you have some serious issues of credibility of that statement. I know you meant it well, so I think we should move on.
Yes, let's move on to Samir's trade because I feel like Samir is in a trade.
No, I'm not in the trade yet. I was analyzing the market as I cannot trade before the NYSE open. So I was drawing some levels here and there, and I was seeing what can be the plan for me today as we are in my screen. So let's do live analysis here. So daily time frame, yesterday's candle is quite bullish according to me, and of course we can see it, very big bullish candle on US 30, and we have some support and resistance levels here. Let's straight up go to the 15-minute time frame. I do like the idea of buying here because price is rejecting, but the fact is that VWAP is bearish and the EMA 200 EMA is bearish, so I am open for sells also. But I like the idea of buying here if I see some kind of pattern near NYSE. So we have couple of scenarios. NYSE open price can liquidate this area and then can find its feeds to the upside. I am open to take this. And if we straight up get bullish price action, I'm open to take this, looking at some kind of consolidation. Now, the third scenario can be if price impulse to the downside and I get some kind of consolidation, then of course VWAP and EMA will be my confluence along with the entry pattern, which I follow, some kind of trend lines here and there. And the fourth scenario can be if we impulse way too much to the downside, and then I am open to take a buy around here because this is the daily low, previous day low. So these four things I am looking at US 30, and let's see. I've started my futures journey also, so I don't want to make any mistake. I do want to take this thing. Basically, I do want to follow my plan more strictly now. So let's see if I get the perfect setup, then only I will take the trade, and of course, I will share with the lovely viewers. So yeah, let's see. I have logged the payout on the CFD account, so I'm not trading that. After 10th, I will be trading that also because payout date is very near. So I don't want to risk that money. Of course, there is a chance that trade can be a losing trade. So that's why whenever I make a decent amount of money, I just stop trading in my live account. But in evaluation, you are bound to make that certain percentage. So you have to take the perfect setup. So that is
Yeah,
it
nice.
from US 30. Let's see if we any of this four scenarios that I've explained. If I see it, I want the perfect pattern. Can be some kind of triangle pattern, falling wedge or rising wedge, some kind of head and shoulder. If I see some perfect setup, then only I will take the trade. Else I will skip the trading session because we have 21 trading days, if I'm not wrong. Yes, 21. So if I perform well in 10 trading days, taking the perfect setup, I think my chances of passing the account, this future account, and getting to a payout stage will increase. And of course, my win rate will also improve. So I'm just focusing on that kind of performance now.
Yeah, be selective is certainly
Yeah.
a good thing. Um, there's a lot to be said, right? If you can avoid a loss, is just as good as having a win. So if you know you have when you trade outside of your perfect setup,
Yeah, exactly.
you're more likely to have these losses than by not doing it. You're avoiding that as well, which is the same thing as missing a loss is the same thing as achieving a win. It all it the actually the way to answer that question, should I not take the trade, is to have your strategy. If you have different setups, variations of your strategy. Let's say one has three confluences, the other one has two confluences,
Yeah, exactly.
and what the thing to do is to separate them and analyze them, um, each one, meaning what is the edge, what is the expectancy on the three confluence, and what is on the two. It doesn't have to be confluence, it can be anything else. What is the expectancy on waiting for the close, for example? On your case, you sometimes that's a
Mhm.
thing, right? Samir, sometimes you enter before the close, you enter on the close on the lower time frame, right?
Yeah,
And
exactly.
so if you tag these setups for these characteristics, you can discern or make a difference. Okay, what happens if I wait for the close, and what happens if I don't wait for the close? Which one has? Do they both have positive expectancy to begin with? If they both have, you would be able to trade both of them. Um, but maybe one has a much higher expectancy, and then you have a choice to make. Will I still trade the one that has positive but not so high of an expectancy, and should I just wait for that bigger solid edge that is me waiting for everything to line up, which is I think what you call your perfect setup. And that depends on the metrics and the statistics of each variant of your strategy.
Yeah,
And
exactly.
so it depends on those stats. For some people, it means only trading the perfect one, and other people could say, well, I can still trade it, but I will risk more when I have my perfect setup because I know I have a higher expectancy. It deserves more of my capital, compared to something that I know is profitable, but it's so. It's the equity curve of that strategy isn't exactly beautiful. It's still profitable, but it has maybe deep drawdowns, or it's not as profitable as otherwise.
Yeah. I have added this VWAP thing in my strategy along with the 200 EMA, because sometimes like VWAP is close to the price behavior or price action, I still can take the trade in that same direction. In this case, let's take an example. It is going to the downside, so it can be sells here. Sometimes EMA is way too above, but VWAP is going close to the price action. In that case, I face some kind of drawdown. Of course, trade still can play out in my favor, but if I just sell it, I think that can be a little bit more beneficial in the example that I'm trying to explain here. So I have added this VWAP. Again, this is some kind of optimization, in my strategy that I like to do with time to time, so that I can have better win rate, or I can, yeah, just my strategy. I can just say better win rate, because my risk to reward always is around 1 to 1. Sometimes 1 to 1.2. I don't like to go beyond it.
Yeah, nice. Guys, I'm going to have to jump in real quick and say I'm going to have to love you and leave you. I'm going to shoot off now. So, guys, I will see you all tomorrow. If you haven't already, please make sure you smash that like button and subscribe to the channel. And make sure you look after these fantastic gentlemen here. So, guys, I'm going to have to love you and leave you. I do apologize. I would love to see what you guys have to say. And I'm really curious to see if Samir ends up taking that trade and hits TP. So, for now, peace out. I'll see you all tomorrow.
Take
Thank
care,
you,
Will.
Will. Thank you very much. We appreciate
Cheers,
it.
Will. I too am also going to hop out. My back is absolutely killing me right now. I'm sitting on one of those like bouncy balls.
Quiz.
Yeah. So my back isn't very happy from this morning's gym, so I would very much like to go and roll my back out a little bit. So I will see you guys tomorrow. Thank you very much to everybody that joined us today. Leave us a like, leave us a subscribe. We would really appreciate that. And then do be careful in the markets, as everybody saw today. The Tangerine tweet terrorist is on his ball game. Trump is looking for scorched earth at the moment. So do be careful with trading. Victor, Samir, guys, have a lovely day. I'll see you all tomorrow.
Take care, Rich. Thank you for everything. Take care. We'll
you
see you
very,
tomorrow.
very much, Rich. All right, so let's set the composition of the cams a little bit better.
I will
Something like
adjust
that, right?
my headphones.
No problem. Okay, so we have the deadline of Trump coming to an end. Everyone has been talking about it. You see it in the headlines. Trump has given Iran a deadline, which is, I believe, 8 o'clock Eastern time. That translates to about 2 or 3 o'clock in the morning, GMT. At which point he said he didn't want to do it, but at which point he would, bomb bridges and power plants. Whether or not that's going to happen, we don't know, right? We'll have to wait for, if is it a bluff? Is he really going to, is he going to chicken out on that? I don't think so, but is he going to pull the trigger or not? Nonetheless, it's a huge information, right? It means there's pressure in the market, there's uncertainty. What happens if he does? How will this change the conflict? And this is all can be felt. All of this can be felt in the market. So you got to be careful today if you're trading gold or equities indices, but actually EU as well, right? If anything happens, it will have an impact. For good or for bad, it will have an impact on just about anything in the market, but especially the indices and gold, I would say. Samir, are you worried about that deadline for your trading? Are you concerned at all? Do you think
Actually,
as the deadline?
if I was using a very tiny size stop losses, then of course I would have. As my stop losses have quite a room, for example, if I decide to take a trade here, I might can place my stop loss here. So I think I will not take huge slippages, and it can also play in my favor. So again, it is 50-50, as market is 50-50, and this sentiment also can be 50-50. So I am not concerned about this thing if I put it in perspective of me trading along with this kind of headlines which are currently affecting the markets. If it was red folder news, then of course I would have waited, or I wouldn't have traded. But I'm not really concerned about these headlines, because I think he tweets here and there. You see very big impulses, which can also be in your favor and against you. But as my stop loss is decent, so I do give a little bit of room to the trade. Like I think yesterday was the example I can show you. If I'm not wrong, I think let me go to the 5 minute time frame. It was, yes, it was around here. So there was a speech, it was a down momentum, and my stop loss was around this area below the EMA and that some kind of structure here. So after the speech, price find its feet, but I took a break even because I was like, we market is gonna close, so I took a break even. The point that I'm trying to say here is my stop losses is decent, and I don't mind holding the trade if there is any speech or any headline is there. So yeah.
Perfect. Yes. And yeah, and, are
Are,
you
are
just
you
waiting
concerned
for?
about it?
Um, I'm not concerned, as in I have it. I'm aware of it, and I think it's important for everyone to be aware of it. But I've been taking my scalps nonetheless, and holding them for over an hour.
Okay.
I know there's heightened. I've seen it in the past. Uh, Not many weeks ago, the
Okay,
market, actually, the market is moving. Yeah, the market is
there
moving
is
right
huge
now.
momentum. Yeah,
Yes, I see that as well. Is there something do we know something
let's see. Let's
as the
see.
news comes out? I don't see anything
There is no
here.
red folder news. Let me check
Oh,
if
there
there is any
isn't.
headline or anything.
I don't see any. So we'll have to wait for that. Um, let's
By the
take a
way,
look.
if this was NYSE Open, I would have bought it because this is inverted head and shoulder to me. But as NYSE brings huge volume, so we can
Mhm.
even liquidate this area, and then the real move can happen. Of course, we can also go to the upside, but that is the reason why I don't trade before the NYSE. I've tried it, didn't found success, so I've stopped doing that. I'm trying
Mhm.
to see Twitter if there is any tweet from Mr. Trump. So there is no tweet I can see. Yeah. So this was, I don't know, maybe some other thing.
Yeah, I'm checking as well. Nothing here. Nothing yet. Let me check some other websites. Uh, maybe Forex Factory. Sometimes on there's a news section as well that will nothing. No, I don't see anything. Everything is a couple of minutes ago, so probably we'll find out later what it was. Okay. Yeah, as I was saying, I have seen the market move very quickly. It was in EU about 2 weeks ago,
Mm-hmm.
and I adjusted my risk, but I keep trading. I mean, it also gives you a lot of opportunity. Um, you know, just to give you give you um, it's a two-side sword, right? Um, two-edged sword. There's that risk of market slipping if it moves too quickly when these news comes out. But the same thing, it also is, it could slip in your favor, and this happened to me on Thursday. I got, I think, about 17 or 18 pips extra above of what I'm supposed to get. And it's, if you're scalping and you're only going for a couple of pips and you get that plus 18 extra, I mean, that's significant. So it's, I think it's, you have to be, no one goes broke for getting too much profit, but they will about getting too big of a loss. So you have to still keep your risk low, but it's not necessarily a thing. It means that you shouldn't be trading at all just because there's volatility and the market is moving quickly and impulsively. I don't think so. I think you can still trade them as long as you see your pattern and you get your signals. Why not? Why should you not trade it? Because I mean, that's what you want, right? You want these big movements and quick ones. You can get in and out and have less exposure in time. So
Yeah. So I was on Euro USD because I know a lot of people trade these major pairs, and of course gold. Gold to me is looking very bad. So I will not say like you trade gold in upcoming days, probably like 1 or 2 days, unless we get a breakout either to the downside or to the upside. Then we can maybe analyze or give any outlook on gold. But Euro USD, going to the daily, I was looking at how price action is doing with the daily time frame. So I have couple of support and resistance levels here, and we have seen that this high is taken by Euro USD, which was previous day high. If we go to the 1 hour time frame, 200 EMA is bullish, going to the 15-minute bullish, going to the 5-minute also bullish, 3-minute, 1-minute. Okay, every time frame EMA is also bullish. So I would have definitely taken a trade here if I was looking at the Euro USD, and my stop loss would have been something like this, and I would be going for 1 to 1. Actually, target would have been done. I can even place my stop loss below this. So let's put it that way. So I think this is a decent buying area, in my opinion. If this was a liquidity move, price should have inversed this gap and then retested, and maybe we could have seen some momentum to the downside. But as we are respecting this fair value gap, this is the level. EMA is bullish. There is some pattern going on the smaller time frame, and I do believe we can push to the upside. So for me, for today's session, I can expect some bullish momentum at least till this area, and then maybe we can tap this area and then we can even go shorts. But if I was taking any trade, my trade would have been here. Stop loss would have been somewhere around this area. TP here. So right now it is in the middle. Don't get influenced by my words and you just try to enter right here and put a stop loss here and just go for negative risk to reward. I will not encourage you guys to do that. But this was a nice pattern. If I was trading Euro USD, if I was a Euro USD trader, I definitely would have taken a trade here. Looking clean, structure is clean. As you can see, impulse, I'm going to pull back, so you can expect another impulse. So looking decent to me.
actually,
Yes.
there was a trade on EU, not for me, but it was a very, very nice trade. I will talk about it. I'll show it in my screen.
Yes, definitely.
Let's put mine here. Let's see, with right here. Oh, I'm not sharing my screen, of course. Let's do that
Yes.
first. Otherwise, there is.
I think someone was
There we
asking, yes, we have the question here. Samir, what's your win rate with 1 to 1? Actually, if I follow my plan, it is around 70%, 70 to 75%. If I see a perfect setup, that beautiful consolidation which I wait for, so it is around 70-ish% with the 1 to 1 risk to reward. Some months, of course, it can be 90, some months it can be 60. So overall, seeing the data, it is around 70-ish%.
Remy, could you give us a little hand here? I'm unable to remove our colleagues. All right. So
Actually, there are some weather condition. So if some electricity, we see some breakouts, so my PC will shut down. So I'll try to get my laptop, but I'm just giving,
thank you.
prior notice. There is some
Thank you,
heavy
Remy.
rainfall.
Yeah, no problem. We'll That's the benefit. Actually, that's the reason why streaming together is best, because
Yes.
anything can happen on my
Yeah,
side as
exactly.
well. Um, and just imagine that, everyone watching and the chat, but no host. All right. So yes, I was saying the there was a very nice trade this morning, and I didn't take it because it didn't fit my strategy completely. But I was waiting, and I hoped that the price would, that the strategy would be triggered. But in my case, it didn't. I'll show you guys what it was, and you can see exactly what I mean. So it is EU, of course. We did create a fresh order block. We had a uh, on Monday. So yesterday we did have a reaction off of that fresh order block, which is this one right here, and that's where we went from this high all the way to that low. That in itself already is something you could have traded from the bearish structure. But on the other side, right, the market does this all the time, right? It fluctuates, it migrates from one level to the other, and it ping pongs between these levels multiple times, many times. A lot of the times it is not just once, but multiple times. And that's exactly what you could have. I was waiting for. So you have the daily right here. So expecting going on to lower time frame to catch something, you have a daily reason. That is, it's not very sophisticated, very simple, but still powerful sign that you can use the daily in this case. And this is the order block, that's the daily. So as the market opened today, I was looking and waiting for the market to touch this order block, right? Because if you zoom out, you would see that the market had a quasi right here, right from the top, right here. Actually, the top is there, but doesn't really matter. This is the established downtrend, breaks the neckline. That's the neckline. So that's the left shoulder head neckline, breaks it, and you would expect price to go and retest an entry order block on this local quasi. And the beautiful thing is that this was also the only structure we had on the 1 hour. On the 1 hour, we also had a quasi, a bigger quasi, where this is the head and the left shoulder is. I have to check on the 1 hour what it is, but in any case, this was also a entry order block on a quasi, on a bigger one. So the fact that we had the first reaction there, that's to me, that's music to my ears, right? Because the market is reacting to a structure that makes sense. It is a relevant area. It's not randomly there, spitting candlestick patterns, but it's doing it at that specific place. That's information I need to use. I need for my trading. So we had the entry order block on the hourly, wasn't enough for me to get in based on this order block. I'll take it away. Let's go to the 1 hour so you guys can see why I have it as a an entry order block. So let me take this off so we have less things on the chart, although it didn't really make that much of a difference. But this is the head, right? And the left shoulder is right here. It doesn't take rocket science to find the right shoulder, the neckline, I mean, right? So this is the left shoulder. That means that this is the quasi right here. That's the bigger quasi. That's the head, left shoulder, neckline. Head goes all the way up and then comes back to, you look for below the 50% retracement. You do have an order block here and another one which is even lower, and those two form one entry order block, but that's all the way down here. We didn't reach that. In between, before the 50% retracement and that order block, we have another one, which is this one right here. Why is that important? Because the market uses them a lot of the time for their reversal. If price is going to reverse, what is a quasi? A quasi is a reversal pattern, meaning the market does this, breaks the neckline, and sometimes it overshoots before it comes back. But a lot of the times, not always, it comes back and it uses either this entry order block or maybe the daily, maybe the hourly below for that continuation of the reversal, the opposite direction that it was heading before. That's the whole point of a reversal pattern, right? It reverses and then changes direction. So one of the entry order block is this one, and the other one was below, and it was at this order block that we had the first reaction. It wasn't enough for me to trade it. You can see that the market clearly hit something, right? It hit a structure, a relevant structure that market participant have been watching. So that's one thing. So you have a reason that, given this point and the high point that we reached before, that we could have a reversal pattern in here. That was the first indication. The second one is let me go deeper and you can see it. So in here, you have another quasi, and this is on the H4, right? This is the quasi right here. That's the established downtrend. It breaks the neckline and came back. And when you get these levels, same thing, fractal, right? That's the fractal nature of the market. Comes back, does the same pattern and has the same reaction. Doesn't always have the same reaction. And in this case, I was waiting for the H4 to be tested because this was actually an H4 entry order block. And it didn't reach it, as you can see here. And that's why I was not in the trade. Let me point it right there. That's the lower wick of that candle. And this is where the entry order block continues. Did not reach it. And that already it misses a checkbox on my trade plan. So I'm not allowed to trade it, and I didn't trade it. However, on the same thing, if you go to the H1, you will see that there's also, this is the smaller, right? Don't confuse it with the bigger quasi that I just indicated or drew. This is a smaller quasi. Let me mark it right here for you guys to see it. Right, so you have this. That's the smallest neckline, or the tightest neckline. You could use this neckline as well. You have the left shoulder, the head. You could use that as a left shoulder as well. It doesn't really matter in this case. And price went up. And before, this is the reversal pattern already. Before it continues, what does it do? It pushes back to where? You have, this is the 50% retracement, and you look from this point to that point, you look for entry order block. And you have a couple. You have 1, 2, and 3, right? And it was on the first one that the market, bounced beautifully. This is the kind of setup that I take all the time. This is my strategy. However, it didn't trigger the H4 as well, right? I need that just a decision I made based on the stats that I want only to be trading when it hits the H4. So that means that I have H4 confluence or backing as well. And in this case, it didn't. And that's why I didn't take the trade. But oh boy, was that of a beautiful entry. If it had taken the H4, my entry would be in this candle on the lower time frame. This is the hourly. I would put my stop below the wick, and I would target this high or something else depending on the day, the daily range, or the higher time frames. Let's say the H1, 2, or 3, and H1, 2, or 4. And if I go to the lower time frames, I didn't trade it because it didn't trigger me, but I can surely find a quasi. In this case, the quasi was not on the 5 minute. That's the 15 minute. On here, there isn't any quasi. Let me double check here. Nope, not on the 5. But on just starting from this level, you already see the quasi on the 3 minute, right? So you can, and that's exactly what I do. I check the 1, the 2, the 3, and the 5 to get my entry, and I may have multiple time frames triggering. This is the lowest that I said. That would be the left shoulder, the neckline, the head. It breaks it, and you do the same thing. And sometimes it triggers, sometimes it doesn't. Let me double check. In this case, it didn't trigger, didn't come as low as you would expect. maybe on the 5-minute. Let me double check here. We do not have anything here. It goes all the way up, but that's too high. Okay, so that's on the 3. Let's double check. Okay, so here it continued to go higher, and the entry would have been right here, which is right before my entry. Right, so that would be 1, 2. All right, so this is 1 as well. And there is an overlap. And actually there's an overlap here as well. So technically all of this is the entry order block. And these are the other ones did not get triggered. This is the 3. And there's nothing in here. All right, so it is actually all the way down here. All right, so that's the entry order block. So as you can see, price does, this is the quasi. Same thing. That's why I love quasis, right? You can use them on all time frames. That's the neckline. It breaks it. It comes all the way to one of these 2 entry order blocks. Sometimes it goes to the second one. Sometimes, as it is in this case, it goes to the first one. And off it goes, right? And you wait for the market to reach there, and you wait for your signal here. What that signal is, that depends on, what your stats have. You have to find that out. I mean, I know what I'm waiting for, but without giving you the fish every day, I want you to learn how to fish. You need to find out, what could be your entry model, what could be the signal, the thing that you're waiting for, and it should be something that indicates that the buyers are coming into the market and taking over, as after reaching this area, that order block. And you can do the same on the lower time frames as well. And let me see if there's anything on. I don't think there's anything on the bigger time frame, but perhaps. No, there wasn't anything here on the 1 either. It was only on the 3. And you could be looking for this one as on the 1 minute as well. All right, so that's very, very beautiful. A shame that it didn't trigger me because it didn't have the H4 as well. It happened a little bit earlier than my trading session, but I believe I was still able to catch that because, my trading session, that's when my trading session, just a couple of minutes afterwards, it would have started. We are 14 minutes to the open of the US indices.
Yes.
Actually, we have Hi Infinity. How are you doing? No problem, my friend. That is what we are here for. There's something this month we are celebrating. The theme of this month is community, right? Here at the Fivers, the whole year we're celebrating because this is the 10th anniversary of the Fivers. 10 years. So every month we have picked an aspect which we'll be focusing and celebrating. This month it is the community, and especially for this month we have something that you guys would love a lot. We have on every workshop on the Discord community, we have not only hub credits, which we always have 10 hub credits on each call, on each session, that is given away to a lucky person, but we have every day a 20K bootcamp account giveaway. So if you're interested, and I'm sure you are, to win a 20K bootcamp account, then come in to our work session on the Discord. I'm hosting, today's my turn to host a session. It will be about 45 minutes after the stream, and it's completely free. You only have to have an account with the Fiverr, so you have a dashboard, because it is in the dashboard that you will find the link to get into the Discord community. And this month, every session, every workshop session that we'll have on the Discord, we will be giving out a 120K bootcamp account. So very exciting for all those traders who, are working hard, sharpening their edge, and they want to start, applying what they know, or maybe they want to add another account to the one they already have. It's a beautiful way of us saying thank you to you for supporting us, for making us really the best prop firm out there. Just look at the awards,
That's amazing.
and you will see what I'm talking about. All right, let's. Unbiased Trader is giving us some extra information here. Yes, that's exactly what we have been talking about. That line is, I believe it is 8 o'clock Eastern time today. So that means, market will be a little bit nervous today, I suppose, and perhaps in the hours leading up to the deadline as well. The closer we get to the deadline, the more the market will be reacting. Yes, indeed. So that's a clear probability, or a clear possibility of things escalating on one side, maybe on both sides. So we'll see how it turns out. Let's take a look at crude oil. In this case, Brent on the higher time frames. Right, being very, very bullish. We have market pushing forward, pushing through this daily order block that we have been talking about. The weekly, so we're supposed to find some resistance here on the weekly entry order block, but there's plenty of time, right? It's quite wide, so that doesn't mean we should expect it here necessarily. It can happen above as well, and after the breakout. So we do have a daily order block there. On the H4, we have market does have reversal patterns, but the reversal patterns are being that already negated. As you can see, the market close on the hourly, on the 4-hourly, above the area. Is it a 4-hour as well? Yes, but the market is pushing through. This whole area is the H4. On the 1-hour, it is breaking out. So let's eliminate that. That's no longer valid. What else can we see here? I see this to be, the market being very, this was at the open, after the open, the London open, that big drop. What else do we see? Do we see a market that is breaking down? I don't see that. This is the presumed head, and this is the neckline to be broken. What does that mean? The market is strong and holding up quite nicely. I don't see a reason yet to assume that the market is going to go. You can clearly see it as well here, how it is failing to make a lower swing, right? That's an indication that the market, the buyers are coming in, and they're willing to buy the market up from a higher place, which is a bullish sign, meaning it's likely, if the market, nothing changes, that the market will eventually go up. What else? H4, H2, no reversal pattern. The one we already said, there is no reversal pattern. There is a little reversal, internal reversal here. I see it. You could trade that for a little sneaky move, sneaky short within this area. You can see that that's the reversal pattern, has already been retested. But I'll show you what the quasi is, where it is. This is the quasi right here. That's the head, left shoulder, head neckline. It breaks it, but before it continues to go lower, it goes up all the way, taking that entry order block, and then move down. I would, because the market is bullish, I wouldn't target that low. I would just target the very first order on the H1 time frame, meaning I would be targeting. I didn't take this, but if I were to take this, I would target just something inside, within the range and not expecting price to break completely and go the other side. Just the next area, or even go to a lower time frame. And in that case, I don't see anything else. So I would, you could just target the low there, that low, and put your stop a little bit higher, not to assume that the market will break that down. Something like that would make sense to me to do. And already had that move. Likely, it needs something like this order block here to respond to. All right, so that's crude oil. Let's take a
What
look
what
at
are your
commodities.
views on indices? Because session is about to open in 7 minutes. So I want to know what are your thoughts on indices? Can be US 30, can be NAS 100.
Yes,
You
I'm
can
doing
do
and
some
checking
intraday
entries
analysis.
here.
Yeah.
Yeah, so we have the monthly structure on nothing else. So we have plenty on the higher time frame. We have plenty of space to go deeper. There's a react. There isn't any structure to be taking into account on the weekly time frame. We do have a fresh order block that was created right here. That's bullish. That's good. We could be looking for, if you're trading for a higher, swinging this, you would be waiting for price to get into the bullish structure on the weekly, and then wait for your daily and your 4-hour reversals to catch that move up. If it reverses into the bullish order block on the daily, that's what I see on the weekly. We have 5 minutes to go on for the open. That is, we don't have a quasi. The reversal pattern starts here. That's the neckline. That's marked it as it should be. This is the daily neckline. That means that as long as the market doesn't break this line, it doesn't break this line, we should expect that eventually, even though it's bullish right now, creating bullish order block and reacting bullishly to it, as long as it doesn't break this, we should be wary that the market could change direction eventually, and then continue lower, because that's the structural line. That's the line on this time frame that tells us that the market has not only popped up, recovered somewhat, but is actually breaking structure and changing direction structurally, right? So we need to be a little bit aware of that. But all of this is on the higher time frame. We do have a fresh order block that has had that little reaction right there. All right, so we do have we have reasons. I believe this looks bullish because of this order block. Price has not only that, right? The market has done this, created a bullish order block, pushed quite high, and in the process created another order block here. And yes, it did have a little resistance here, but as you can see, it doesn't have follow through yet. Until that happens, we should just expect the market continues to go higher and higher until it shows us otherwise. So that's the daily. It looks for the daily, I would have a slight bullish bias for this market. On H4, this is not a neckline to me. Neckline is all the way down here, not on H4. So that's bullish as well, right? It means that the market, well, even if it's here, it didn't touch it, so it has an intact market structure, meaning no break of structure. There are a couple of structures here, though. You can see them. That's one, and the H4, but that's not very surprising because it did, interact with a daily structure. You would expect the H4 to create and to express that selling pressure that comes into play. So that doesn't really change my view completely as long as it doesn't break the structure. To me, we could indeed still have a reversal pattern, continuation of this move. So that's the line in the sand, that structure, and the market could be doing this, continue a little bit deeper, which still does not break the daily order block. From there, move higher. And I think what's important is in 32 minutes to watch where the market closes on this level. Right, it's going to be 30 minutes after the open, so that will tell us you'll have the open and the close of the H4. That's really good information, because if it closes below this order block, it kind of tells us that the market is going to continue somewhat deeper into this daily order block. And if it doesn't, it's the opposite, right? It means that the market is picking up speed and is likely to be retesting higher levels. So I think that's key to be looking for in 32 minutes, 31 to be exact, on NQ. So I see there is a fresh order block here, and yes, it was retested. That I like that. And let's count the amount of candles, 8, which is valid. 8 is valid as long as it's 10 or below. We can still, that's a fresh order block being retested, so we can go to lower time frame. We do have a quasi here. It's a tight. This is a H1 quasi, meaning this area becomes, no, there is no entry order block there. Actually, it is here. All right, so this is, I like this now. This is H1 and H2 having overlap, and it's actually an H1 entry order block. All right, so I like this for a reversal, for a continuation. I mean, reversal from the daily, the bearish move from the daily, a reversal thereof, but a continuation from the market from this point, right? They consolidate a little bit, but a continuation going forward. And I'll show you what I like about it. This is the area, the H1 marked, and this is the upper border of the H4. You can see the overlap, and that's the sweet spot. That's the area that I want to be looking, and the market is reacting so far beautifully to that area. So I would say I want to buy this. Yes, I would want to buy it. That's the area. So I would go on not on NQ, but on EU. I would be going to the lower time frames. The market just opened. You can see it here at my screen, and I will look for a quasi in here on, let's say, the 5-minute, but you could do it on the 15-minute as well, on the 30-minute, or in the 5. Let's take a look if we can find some. This will be the presumed head. We go back, and this is the neckline. Yes, so it already broke structure, right? So this looks good. Doesn't mean it's going to go up, but it has good chances of pushing higher right here, and that means that it leaves us with one entry here that goes, let's blow that up. All right, so this is there, and actually it goes all the way to here. That's the area. It's wide. It's very wide, I know, but it is what it is. The market is. So I would be waiting for price to come back into this area, and maybe you can wait. Well, you can take it before the 30-minute passes, but if you, meaning this is the quasi, for if you're wondering what I'm looking at, this is the quasi, there, breaks the neckline, and now you're waiting for price to come back to retest some structure that makes sense. And there's actually an overlap of all these structures. They're all overlapping to each other. I would want to be taking that trade and putting my stop below that structure, meaning getting wherever, put my stop below the structure. Since that's very close by, I'll put it below the head as well. And if you want to, you can even put it below the area to be retested. And then target, well, depends on your risk appetite and how long you want to be holding this, but target the high to begin with. Something like this makes sense to me. If I'm trading, I would go even to the 1-minute and try to find a reversal pattern here on the 1-minute as it comes in. See if it squeezes or not, because NQ likes to do that sometimes. Squeezes and then goes. So this will help you mitigate the risk of a squeeze, because you would be seeing it with granular resolution how it creates the structure. All right, so I do like this area as the 1-minute, and I would be interested in this one as well. Got to be quick though if you're trading like this on futures, because you have to put in your stop almost immediately if you're very, very tight.
Yeah, I'm also waiting. I didn't saw a breakout to the upside, and I think this can be the manipulation move on US 30. On
Mm-hmm.
NQ also we liquidated that small low, so I want the price. Okay, we are on my chart, so we have
Mm-hmm.
liquidated this. I want the price to find its feet and break this trend line. I will be entering buys here, but if we continued with the impulsive move to the downside, then I am open for shorts also if we retest this level. So that is my buys for today. If we close above this trend line that I have, I am gonna go for longs. And the narrative is very simple. This is the 4 hour area that I have, and 200 EMA is also kind of in the middle, but the VWAP is to the downside. So I think both the scenarios are making sense. If we continued below, that is also okay with me. Of course, I will look for some kind of a consolidation pattern. Then I will look for sells, putting my stop loss above here and TP somewhere like this. And if we go to the upside, that is also fine to me. So let's see what we get right now. I'm still waiting patiently. I'm not seeing anything which I've seen in past which will make me take the entry. So right now my entry pattern is not there yet. So I'll explain, or I'll just tell you whenever I'm in the trade. So yeah, seems decent. Both the scenarios are looking decent to me. So let's see what price does now. Let's take a look at NQ. Okay, I'll just do NAS 100. I'll just go to the 4 hour time frame and then we'll see what price can do. Okay, we have liquidated this low, and yes, that is it. We don't have much information on the 4 hour. Going to the 2 hour, okay, we have this small fair value gap which we just tapped. 5 minute. Okay, this was not the session area here, so I do think we can liquidate this area also before we go to the upside. So that is the plan. Do we have any fair value gap on the 15? Yes, we was having this small fair value gap. Do on the 1 minute time frame. Yeah, not too clean price action here. If you want to enter buys here, I will wait for this low to be gone and then some kind of consolidation and something like this. But I am focusing on US 30 more. Let's see now. This is a very crucial point for US 30. Either it will give a V-shaped recovery or it will continue to go lower. This is a very decent point. So let's see. If we get something like this, I'm gonna be buying. If we retest this, I'm gonna be selling. I think the retest scenario looks more promising. Why? Because EMA is bearish, VWAP is bearish. The only concern, I'm concerned about the daily candle, because daily candle is still making a lower wick. This is the last low of the daily candle. We haven't breached any higher low of the daily candle. So this can be a pullback area. I can even drag it something like this because this is a daily area. So yeah, again, this is a very crucial point for US 30. I am looking closely here. Let's see what price does here. And this is a daily low which we have. So I don't mind taking sells either, but for that I need some kind of confirmation. And right now I just see a free fall which I don't like, or I'm not comfortable trading this kind of behavior. So let's see. I'm noticing here. Okay, yeah, again I will repeat, can be a V-shaped recovery, I am okay to take it. Can be a small consolidation, I am okay to take that also to the downside. So now I'll be waiting for probably 5 to 10 minutes and see how price behaves around this area. We can even impulse to the downside. This is also good for buys, but I then want price to break this low. Then I can plan my trades, because this is the daily low. Let me make it clear here. Okay, this is the daily low. Let's see what we get today. All the scenarios are making sense to me. I just want my entry pattern, and when I get it, I am gonna take the trade.
Yes. Someone asked in the chat how to trade safely during these choppy markets. There are a couple of things you can do. You say the market following news rather than tactical patterns. Yes, but even what the news does is a catalyst, but it makes, of course, when there's one news coming out and it has a big candle one direction, there's not a lot of technicals within that candle. Hold on, the market is moving.
Okay. Are you in any trade, or you are planning to take any trade?
Yes, I'm trying to I'm seeing the market reacting on that quasi on NQ, so I'm trying to
Okay.
read here if the market is ready to move and whether or not I'm ready to take that trade. Okay, so I'm not out yet. Still 1 minute left. Yes, as I was saying, on that big candle, there isn't a lot of technicals within the candle. So that big candle could be completely in the opposite direction of the previous pattern and price action that has been shown so far. And in that way, yes, it gets tricky because you could be having, even a day, the whole day, maybe a couple of days, the market is been forming a base, and then comes this news and it breaks that completely. And it is true. So you do have to, you know, take that into account. However, what news does is it accelerates everything. So what you will see is that you will see the patterns being formed quicker, needing less time to base and to move in one direction. So you can take advantage of that. Just be ready to recognize the patterns in a shortened time period. So what I would do is I would lower my risk, meaning the risk that I take per trade, because of the fact that the market can move violently in one direction, unexpectedly, and I would be ready to go perhaps a time frame lower to see the technicals, the patterns coming into the market, but making sure that I'm still using a higher time frame for my backing, right? So in the end, the higher time frames will have, they will help you, even with these move. It might not be an H1 if you're a scalper. It might not be an H1 that will be the line of defense. It might be an H4, but by navigating the time frame and making use of higher time frames, you can still um, just have to be flexible and not stick to the same time frames perhaps that you're accustomed, because things are moving more quicker, much more quicker. They're moving quicker on during times like this. So I would say lower your risk and look for other time frames above you for safety, and lower time frame to understand the market or understand the market structure. Let's say if you're on the 15 minute, look for the 5 minutes, see if there's more granularity. The same thing happens when there's, let's say, NFP, and NFP comes out, the 15-minute time frame doesn't give you enough information because you want more data. You want the market to create these levels where it's reacting to, that, okay, this is this level. The market came in, created a double down, double bottom, and it's now creating bullish structure. I can go with that reversal, but you have to be on the 1 minute for that, or just avoid it altogether and just sit on the sidelines, which is perfectly valid as well. I mean, if you're not sure, if you don't feel confident, maybe it is time to paper trade, lower your risk very, very, a lot, so much so that it doesn't really, it's not really, taking as much risk anymore. There's something like 10 times less risk, right? You're still trading, you're getting information, but you're not paying the price if you're not too confident and you're not too competent in trading on a high volatility time period. Someone asking about the 5 minute, 5 hours ago sudden move. That would be what
I saw
asset?
it. There was nothing. He was asking about USD JPY, if I'm not wrong.
Okay.
Yes. I saw USD JPY 5 hours ago. Let's take this. Okay, this, you mean this. I'm not sure what it was. Probably some headlines here or there that can cause this kind of
What time
behavior.
was it? 5 hours ago, so that would
It
be
was 1 hour after the London Open.
okay. Yeah, I don't see anything on the news and on the
Okay, US 30.
headlines.
Yeah, yeah. There might be some as a lot of things are going on in the world. So there is war, which is the you know um, major news right now, which can cause this kind of behavior that you saw on USD JPY. So yeah, you will see this kind of behavior until the situation is calm or it is over. So that's why we are saying that always use your risk that you can afford to lose. So don't go full leverage or something like that. Like this kind of momentum that we saw on USD JPY, it can even cause the slippages. So make sure you are using the risk that your account can handle. So yeah, I'm seeing this US 30. I do like this behavior. One more push, something like this, I will short this. But right now we have just small pullback. That is not enough information for me. We can also do something like this, big consolidation and then price just go to the upside. That I don't wanna take. So yeah.
All right, so we have news 8 minutes ago. Iran says, according to Tehran Times, Iran closes all diplomatic and indirect channels of contact with the U.S. Seems like they're, escalating things and embracing for confrontation again. I'm gonna show it on my screen and come back to you in a few seconds. That's the news. It happened. Came over on Financial Juice. That is about 8 minutes ago or 9 minutes by now. That could be the reason why the market the equity is falling, right? Falling as we're speaking. The equity market it is.
I still like the idea of buying because of the daily candle and we are away from the VWAP. So if I take the trade here, my stop loss can be like 200 points and taking 1 to 1. Let's take a look at other time frame. Yes, liquidity is there. This low is also gone and this trendline liquidity also can be some kind of trigger point, but we are in the middle of the zone. Let's find more confluence.
Who wants a free bootcamp 20K account? Raise your hands
Let's go,
in the
guys.
chat.
Some interesting thing is
Who
happening
wants
now.
a 20K bootcamp account? Because if you're interested in, then I can tell you where you need to be. Later on after the stream, the Fivers is hosting a workshop on our Discord community. If you don't have the dashboard, you don't have access to the dashboard yet, now is the best moment for you to get access to the dashboard, because in the dashboard, that's the only place that you will find the icon, the access icon, to the invitation icon to the Discord community. Right? Very easy. I think the lowest cost account is $22, if I'm not mistaken. You get access. You buy an account there with us. 2.5, I think, a high stake account it is. You get access to the dashboard, and every day, every session we have today, this month, it's on weekdays, so not calendar days, not every calendar days, but every weekday, we have a session there, a workshop on the Discord community, and we will be giving away one 20K bootcamp account completely. It's a giveaway, so it's completely free. So if you're interested, that's some very important information for you guys.
I know, guys, you want it, but for that, you have to be in the community, which is Discord. So make sure you are there. I am looking at US 30 now, I kind of like the idea of selling. Let's take a look at other time frames. Okay, 15, 30. Okay, we are closing below the 200 EMA. 1 hour. Okay, 1 hour is still there is a EMA. 4 hour. Okay, we are impulsive on the 4 hour. I think we can take out the daily low. So I like the idea of selling here. So I am gonna place a sell if we break this trend line. So yes, I don't want to use my brain because EMA is bearish. We are under the level. We have retested it just little bit. So of course I like the idea of buying, but right now price is showing me some selling behavior. So I think I was a little bit biased there. So I just shorted. So
You did?
let's see now. Yes, I just shorted here.
Okay.
My stop loss will be 200 points above this EMA. Something like this. Let me place stop loss on my platform.
In the meantime, I will switch to my screen. Let you have you some seconds or some minutes to place your stop loss carefully. What I'm talking about is on and Q. If we where we're talking about it, we are within a bullish order block. We did get into this fresh order block overlap between the H4 and the H1, H4 being fresh, H1 being the entry order block on the quasi. So there you go, right? Just listening in, you can understand why I see this as an opportunity. The market has given us an area that is relevant, that is interesting for multiple reasons, and we go down. The market is pushing down, right? It's looking like it's going to break down, and I see that, and I understand that, and that's fine because that's how the market moves. What I mean by that is you have this fresh order block that is being retested as we speak. Right here, let me put the magnet on. As we speak here, this order block was created. Let me expand it, make it clear to you guys. So this is the order block that was created, right? That we have an initial immediate retest, and we moved out for the first move, and now we're actually retesting for the first time. Whether or not we bounce, right? How the quasis are, or reversal patterns, they're created on all the time frames, right? So this is on the 15-minute, and I'm interested in this whole area on the 15-minute. But if I want to, the reversal will not happen out of nowhere, out of thin air. If you go to the 1 hour or to the 1 minute, you will see that there is a reversal pattern, and yes, it's pushing hard. It looks like it's going to break down, right? So we're going to be patient and wait for it to whether or not actually break down. If it breaks down, hands off. I'm not going to touch it. And we're on the very last order block on the 1 minute. So it's a tiny time frame, and it can get squeezed and still not be invalidating the 15. You'll have to wait for the 15-minute to close in about 8 minutes. But if we get a reaction from here, you could be getting in, putting your stop below that level, and targeting. If it's going to reverse from here and push out of this 15-minute order block, what do you think will happen? Price buyers will see that like a successful retest of an order block, and they will keep on pushing at least to these levels. And if it even for a little bit breaks and hold, you can have the market then understand that we're going up and up much higher, and we could have 400 points from this level. We're talking about 500. It could continue to, well, maybe not as much because we have a daily bearish structure there, but it can easily push something into that direction. So that's something you want to be looking for that is on the 1 minute. It seems to be having a reaction. Let's take a look. Is this enough for me to take a trade as well? Want to switch to yours?
I have like 3-4 accounts. On one account, I just messed up my lot size. So I was copy trading. So I placed that copy trading lot size in that other account. but that is fine. It is on the one account. I'm glad it is not on all of the account. So yeah, right now I am in the in drawdown. So the idea was very simple. We was retesting this area. Now also we are retesting this 4 hour area. EMA is bearish, and I didn't sell here. Why? Because we was coming at this 4 hour area. We could have bounced from here. So I still like the idea. If I lost this trade, I think it's okay. I am not breaking any plan. Let me recheck it on the 15. Yes, we are below this. EMA is bearish. Yes, 1 minute. I saw a pattern. Yes, I'm not doing anything wrong here. So yes, okay, yes, I will. If this is a losing trade, I will take the loss, and it is okay for me. And if it is a winning trade, then whatever. Let's see.
Yes, actually, that's very useful for the traders who are watching us to know that we could have two traders having opposite direction, because although this is US 30, I'm doing NQ
Yes,
on the background. It could be we could have different direction and still be both right and wrong. It doesn't really matter. It doesn't
I
really
think
say anything, because
now NQ can go to the upside.
in the process, the market can invalidate one and continue to the other one, but the one that has been invalidated was a valid trade. Not every trade. That sounds like contradictory, but I mean, at the moment of the entry, the setup can be a valid signal to be taken, that one that you need to be taking. And after the entry, the market can invalidate your setup, meaning it breaks the structure that was not supposed to break, and it continues lower in the case of a long. And while Samir might be taking the same trade the opposite direction, and his strategy works, we both were right in the sense that we both traded our strategy, we had a valid signal, and that's fine, right? A valid signal doesn't mean it's going to always go in your direction all the time, and you're not going to be winning every one. So our job, even if I'm going long, he's going short, that doesn't really mean that one of us is necessarily wrong. We're only wrong when we trade outside of our trade plan, and as
Yeah,
long as
exactly.
he's doing his plan to the T, and his signal is short and mine is long, that's fine. We're doing what we're supposed to be doing. But it's actually quite I think quite helpful for viewers to think about that. It's not about being uh, knowing where the market is going to go or not. It's trading your plan, and whatever that means, you should be doing.
Yeah, my job is just to follow my trading plan, and I just want to make sure that I don't make mistake in that. Rest, I'm fine with the outcome. So I was testing a new thing. I'm not gonna lie, on futures platform, which didn't work out well. I blew that account. So I was like, why I am testing the new thing, which when I already have the thing which is working for me. And why I was testing a new thing, because some trades was I have to hold the trade overnight, and in some platforms, of course not in the Fivers, in the Fivers futures you can hold the trade overnight. So in some platforms you cannot, so that's why I was like, let me test something, which didn't work out, so I blew that account. So I was like, let me go back to my original thing which I was doing on CFD account. So this is the same thing that I do now. I shouldn't be worried about the outcome, and my stop loss was very much valid. Why? Because I placed it above this fair value gap. As you can see, I think even if price tested this area, I'm still in the trade, and my target is also just little bit below the daily low, which even if it takes out this liquidity, I think my target will be triggered. So yes, NQ side, okay,
Market is
of course I didn't
breaking.
took this trade,
Mhm.
but
Market is coming back to the structure that I was talking about and being retested as we speak. So we'll see. Maybe it will break that structure, meaning the 1 minute structure within the 15. And if it does that and it closes below, that means that it's invalidated. We'll have to see if the breakdown has follow through to it, that would be a range opening range breakout, and we could take that short from switch setup
Yes,
and
many
take
people
another
use
setup.
that opening range breakout thing.
Hmm.
I'm not sure even Dave was talking about it. I think it is the 15-minute open and close, and we take the trade where the market breaks, right?
There are many variations to that. You can take the
Okay.
15, the 30-minute, even the 5,
Okay,
and
okay.
you can take when it breaks, you can take when it comes back to retest that level. You can
This was
wait
the
for a
5 minute.
deeper retest into, let's say, half of the midpoint of the opening range. There's plenty of ways to go about it. But yes, that's basically the strategy.
Yes, I know many people use it. US 30
Very
wise,
popular.
I am in the trade. Yes, I am
See
actually
the market.
happy with whatever
Yes.
outcome I have for today because I'm following my plan. Of
Hmm.
course, we can reject from the small fair value gap also. But again, as I mentioned, my bias was short. I wanted to take long, but I have done mistake in past where I followed my heart and I didn't follow the technicals. Right now, technicals was showing me more confluence is to the downside. So I think I am not doing anything wrong here. So I will do this
Hmm.
thing every day. Same thing. So I know it is gonna play in my favor. Let's go. By the
Yes,
way, we are
market is
also at the
breaking
end of the
down
stream. We are
on
also at the
and
end of
yes,
the.
we go
Okay.
ahead.
I was saying we are also at the end of the stream. I wanted to show our viewers by while me being in the trade, but I'll share the update to you with you guys tomorrow. We can stay here for a couple of minutes more, of course, but let's see. NQ. Okay, we are seeing a huge momentum to the downside.
Mhm.
We are retesting that 2 hour fair value gap. Let me go to the futures platform. I think it is MNQ. Yes. Okay, we are testing this 2 hour fair value gap, which is a fresh test. Let's go to the 1 minute time frame. Okay, we have broken this area also. Now I do think if we break this structure, then maybe we can shift our bias. But if we are below this structure, I don't think so. You should be looking for buys. We have also broken this area, so I think if you are in cells, that can be good. We also had this small structure breakout, so that was a good trendline breakout here according to my strategy. So yes, US 30 wise, okay, we are retesting these lows. I am still in the trade, guys, by the way. So yeah, let's see. I cannot do anything else, I can just hold the trade and I can just accept the outcome, and my risk is also in check. I'm not full margining the account. I'm not blowing the account in one loss. Of course, I messed up the lot size in one account. I agree with that. I did a mistake there. I'm still new to the futures, so that's why I don't trade all the account at once. I thought I was copy trading. Anyways, so it's okay. I can handle a mistake on one account. It's okay. If I would have made mistake on all the accounts, I would have been a little bit emotional. Not gonna lie. So yes, one account or whatever. So yes, I think now yes. Actually, we have 15 minute is also closed and 30 minute is also closed, and we had a huge wick to the upside. Actually, we rejected. I don't want the price to tap this fair value gap now, because if it did, I don't know if it is gonna go to the upside or not. But let's see, what the price is gonna do. I'm just gonna give my closing words on NQ, then we can wrap up the stream. 2 hours still, there is a fair value gap. Let me delete everything. Actually, I'm gonna delete VWAP and EMA so that I can focus more on price action here. Okay, 4 hour. Okay, we have just opened. We have broken this low also. Daily, okay, daily low is still pending, which is this. 15 minute. I think now if we close below this, we can plan for something like this. But we need to close below this. If we rejects, I think then definitely we can take these highs out. Just wait for the 15-minute close in about to 11 minutes. This will tell you where there is more strength, and then you can plan your trades accordingly. US 30, I don't know what it's gonna do. I'll just be in the trade. So yes.
Going back to my screen before we go, we talked about this a little bit. The 1 minute structure that we talked about, that obviously has been invalidated. The market broke that on the 50-minute. It closed below the order block, which was the structure that we were looking for a possible reaction. We did get a reaction, but eventually it did not seem to be did not turn out to be. We did get a reaction, and I took a loss here of around $200, 257. But it's a valid entry for me. We had the H4 H1 order overlap. We had the quasi. We had an area where we had market reacting to it. So that was it was a good trade to me, even though it resulted in a loss. I mean, however, if we zoom out, we talked about this. The level that needs to be for the end of the H4. If you've been listening for some time, you remember we talked about if the market closes below this level, and we mentioned that 30 minutes ago, that means that we're going to be looking for much lower prices, and that happened already. So we reacted. So that means that the market is getting ready for a deeper, although it's very obvious now, for a deeper move down on that daily bullish structure. And if you go to the 15-minute, you can see that this is the opening range. Maybe I should put it with yellow lines for you to see it. That's the opening range on the 15-minute. The market closed way below that. And what you could do, one of the things you could do is, of course, you could sell the breakout, which actually I did. So I switched a setup from my bullish quasis. Once it broke out, I sold this breakdown. However, what you can also do is wait for the market to come back and retest either this swing low that we had before, or the 15-minute reverse, the first 15-minute opening range. So it may not even come back, and that's fine. You could be getting in with a limit order, or just wait for them until the market gets in, get in with in the market, and wait for that reaction. The market reacts, you go with it to the level, and you could be seeing market going all the way down to the expected target to be right below 24,000. That is, the market is not looking back as it does sometimes. I suppose has to do with Trump's stat line. Looks like it might hit the target without coming back and retesting anything in its path. Well, it's too early to say anything, so we'll see what it does. And but that will be tomorrow, because today we're already out of time. Before we go, we have a Discord, right? Giveaway, 20K bootcamp account given away today in about 40 minutes in our Discord community. Be there if you want to win account and be part of our session. You're going to enjoy it. I'm pretty sure you will. And that's it for us today. Samir?
Yeah, that is it. And with the closing stream, I'm seeing prices moving in my favor. Now, as we are ending the stream, guys, I'll share the update of this trade with you guys tomorrow. Seems like we are seeing some impulsive moves to the downside. So now let's see what we are going to get. Of course, it has happened with me when price has completely reversed by, from my TP. That day, I remember it was Monday, price reversed like this. I took a loss. That was a learning lesson for me. And I'll share more lessons with you tomorrow. So, and again, guys, don't forget to participate in that beautiful opportunity, which is you can win bootcamp account, which if you just do some research about it, it can be life-changing for you guys, because you can scale that account up to $4 million. That is amazing, guys. So make sure you take advantage of this opportunity. And with that being said, I'll see you tomorrow, and thank you guys for everything. And if you haven't liked this stream yet, make sure you like it and you subscribe to our channel so that you can get notified tomorrow. We will be here same time with the same energy, and I'll see you tomorrow, guys. Take care. Bye bye.
Take care, everyone, and be safe. See you tomorrow. Bye bye.